Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Hola.
I'm done
Hola,
with you
Thomas.
already.
I'm sick of her already.
See what happens. You guys got to learn how to play nice. Vanessa and I play nice all day long.
Oh, yeah.
I just am showing Tom things about his own social media accounts, and then he doesn't believe me when I show him. So that's fine.
Well, and it's on his own account. That's
right?
the,
Yeah.
that's
No,
the-
from your own account.
I'm telling you, it's not my account. I don't
It's
care.
your verified account.
I don't care.
You fat finger the repost button. You've done it twice now. And I get the notifications. Because I don't follow the fake Toms, I follow the real, so I get the notifications.
I don't know how that happened. I'm denying with pictures.
Okay.
But were you looking at that naked woman on Instagram?
She wasn't naked. She had a bikini top on.
I'm just kidding.
And it was Jennifer Aniston, which is age appropriate. So I stand.
Yeah, she's my age, right?
Yeah. She's in her 50s.
Yeah. There you
Yeah,
go.
that's not exactly his age, but sure.
But it's more appropriate than him liking Sydney Sweeney photos.
Yes. Who's younger
Do
than
you
my
think
daughter?
I
Yeah, sure.
clicked on liking Sydney Sweeney photos?
I can see what you've been doing, and it's all over the place.
I thought the other one that I clicked on by accident was a guy.
It was a guy eating pizza. Oh, so now you do acknowledge that
No,
you
I
click
don't.
Okay.
I'm just saying you guys accused me of it.
Okay. I don't accuse you of anything. I show you the repost
I mean, I'm
from
not
your
gonna- I'm not
verified
gonna-
account.
I'm not going to deny that I've watched many pizza eating videos, especially from Pequods.
Okay, and maybe just one of Jennifer Aniston shaking her tatas.
You know, it's funny. It never gets old watching
What, tatas?
Pequods.
Oh, pequods, not tatas.
Watching out-of-towners try Pequods for the first time.
I haven't had pequods in a minute. Now I want pequods.
Yeah.
I don't want to get pequods here.
No, because it doesn't travel well.
Oh.
We got it once in the office. It didn't travel well, but
There's no such thing as bad pizza.
they're only if you have like Domino's or like Papa John's.
I'm telling you, if you've been in the
Pizza Hut.
woods, like camping and hiking in a pinch, Domino's works.
In a pinch.
Yeah.
Yes. But
Domino's does not work anytime.
I'm sorry, when's the last time you were in the woods? Last time you were in the woods, you lasted an hour and then you came home
oh, I don't
with your RV hose tucked between your legs.
Last time I was in the woods, I got lost on a hike last year in Door County, and it took me like 3 hours to get back. I didn't get lost, but it was just like a 3-hour hike.
You're doing it again this year, though, right?
That hike,
Oh, at Peninsula State Park?
doing the easy one.
At Newport? Where are you
I don't
going?
know.
The Newport hike is easier.
They're all easy. I mean, they all have easy choices.
Yes. But you are you.
I want the easy choice.
Okay.
Yeah.
Are you excited about Door County?
Yeah. You know, there's I do like that. I love that area.
Yeah.
Yeah.
It's the Hamptons of the Midwest.
No. It's not the Hamptons.
That's what Wall Street Journal said.
No, it said, do you know there's a movie coming out on Door County?
I did not know that. I don't get invited to your rich people meetings.
There's one of our viewers who lives up there in Wisconsin. He's a chef in Wisconsin. He sent me a trailer. There's a like a cherry Christmas movie, and it's all filmed in Door County.
Wait. A cherry Christmas?
Yeah, it's like a cherry Christmas. Yeah.
Like a Hallmark or like a Lifetime holiday
know.
romantic where the big girl from the city meets the boy from the small town and he teaches her how to love.
You live your whole life like this?
I love Christmas movies, like Hallmark movies, Lifetime Christmas movies, if it stars the iconic Lacey Chabert.
Oh my God.
I am in. Wait, do you have the trailer or you deleted it?
I'm sure you can Google it and find it.
Oh man, now I gotta look.
I'm sure you can Google it.
Okay,
Yeah,
talk amongst yourselves.
Yeah, I don't know what the name was, but it was like it's coming out this Christmas or something. Find it?
What? No, not yet. Because on the scant amount of information I was provided by you, no, I have not found it.
I will get it for you. I have it.
Okay, I found it. It's called A Cherry Pie Christmas.
Oh, okay.
And it's as charming as you would expect. The independent movie was filmed entirely in Door County earlier this year. It's
Cherry Pie Christmas. There you go. That was pretty
yes. Ryan Carnes and Katie Leclerc. I knew it was going to be a romance.
Oh, God.
He's so predictable.
An ambitious pastry chef returns to her small town and rekindles an old romance and must decide between her career dreams and saving her family's struggling cherry orchard business. Eat it up. Iconic Door County landmarks: the White Gull Inn,
That's where I stay.
Lautenbach's Orchard Country Winery and Market, Eagle Tower at Peninsula State
That's where I
Park,
climbed.
all in Fish Creek. Get some camera time in the trailer.
Yeah, so that's the inn I stay at. White Gull. It's really pretty.
Give it to me now.
I'm gonna have to see that movie just for that.
You couldn't even remember the name of it.
Whatever.
What's the name of it?
It's a cherry pie Christmas.
There you go. Yes. Give it to me.
I'm ready. All right, there you go. So I'm all in on that movie whenever it comes out.
Fantastic. Okay. So what'd you do last night? What'd you get up to?
Yeah, what'd you do, Saz?
So when I was out pretty late, like almost 6. And when
The break of 6 p.m. Yeah.
Actually, I spoke to Saznoff. He called me. He missed me.
It was I called Tony because I got a dinner reservation someplace we're going Sunday night, and so I called Tony.
And then I said, go to
before the
sleep.
Bears game.
Yeah, and so no, this is the night before, and so Tony goes. He goes, what time is that? I go, it's like 5:52 because I was just heading home.
Yeah.
And he goes, oh, it's your bedtime.
I mean, he's not wrong.
And I was right.
I mean, I had meetings from 3 till 6. I was tired.
Well, not in the office because you left.
I know. I had meetings. I was doing webinars all the freaking time.
Oh, boo-hoo. Oh, boo-hoo. So sad.
Boo-hoo.
Boo-hoo. So wait, what'd you have for dinner then?
Didn't have dinner.
You didn't have dinner? You were wasting away.
Well, I was able to squeeze in a little lox and bagel. Other than that.
Wait, for how old? Where'd you get lox and bagels from?
I don't know. It might have been a couple weeks old. No.
Oh my God, frozen?
No.
Oh, just out on your counter covered in ants? What?
You wash the ants off. It's fine.
Okay.
Yeah.
That's no good. Well, Bat, how about you? How was your evening last night?
A down round yesterday. Just relaxed. Took Vinny to hockey. Actually, Vinny took me to hockey, so I have to drive with him now. He's getting better, but he's going to make my hair even grayer than it already is. So
did he? Has he had any close calls yet?
They're all close calls.
One merging incident when he said the person behind him should slow down, and I said, well, yeah, you're right, he should, but there's a good chance he has somewhere to go too, and he doesn't want to slow down, so you have to make sure there's enough room. So we had that conversation. So.
Somebody in the office yesterday, I'm not going to name names, Kai, that Tony almost hit him at the gas station. He didn't realize it was Tony until. No,
it wasn't Kai. It was McGrath, Todd.
Oh, Todd McCarthy. So I'm sorry.
How do you mix up Kai and Todd McCarthy?
And he was wrong. So the gas station.
Todd said he was standing there, like not moving, and Tony almost sideswiped him. And
you're lying.
And then he didn't. He was about to like give him the finger, and then he realized it was Tony.
No,
Todd, Wait, Tony, say what happened.
Okay, so the gas station has a very nice car wash attached to it, where they wipe your car down for you after you get the car wash. It's the suburbs. We're very civilized.
Oh, very
So-
bougie.
Oh, that's
very
nice.
Bougie. Very bougie.
No, you don't
So
want the
after
water
you-
spots.
Yeah, so after he got out of the car wash, I didn't know it was him. The people usually stop, line up, and then they let the guys rub down their cars for them. So I'm going straight, and he's coming this way, and he's supposed to stop to let them rub his car, dry it. So he doesn't stop. It goes right through. So I stop, and I give him a little wave like this, and I say, let him go. But I had the right of way. Why didn't he stop, you might ask? Because the last time he said he was at the car wash, they scratched his car a little bit because the rag they used had like some dust or dirt.
Oh, it had like dirt or debris on it. Yeah, that will scratch your paint though.
Right. So every car stops except Todd's, and then I let him go. And then he realized it was me after I left, but he didn't say anything. But I was nice.
That was an anticlimactic story. That
I
was
like
not
my
the
version.
payoff.
Like most of my nighttime stories, they're anticlimactic.
I like my version better, that he got out of the car and then you got out, then you realized it was who it was.
No, your version of the story, it's Kai and the Yakuza, and they're on souped up ninja motorcycles.
That's how you can get stories messed up.
Right, yeah.
Yeah.
Okay, well.
Oh, what about you, Vanetta? What did you do last night?
I went to the gym back, and it was glorious because it is September, and the long national nightmare that is teens work out for free at my local Planet Fitness is now over. It was a brutal summer. But yesterday it was great. Gym was back to like not being very full. I didn't have to wait for a single machine. It was very nice. I was very happy.
I hate waiting.
Name one machine at the gym.
You can't do that.
That stare thing.
The stair thing. You would be a cardio girly with your Stanley Cup just on the Stairmaster watching TikToks.
That would be his jam for sure.
Oh, but your little chicken legs couldn't handle the Stairmaster. I hate
Have
the
you ever
Stairmaster.
been to a gym, Sosnoff? You've never been to a gym, have you?
I mean, depends what you call a gym.
Define a gym, right? I get it.
I'm not talking about a spot where you just get a fancy smoothie and like a kale salad, and then someone like gives you a
What
massage.
makes you think I like a kale salad, a smoothie, or a massage?
I mean, yeah, that's true. You've never had a massage.
No, I don't like massages. But what I do like to do is
You like a schwitz.
no, I can't stand steam. What I do like to do is walk through the spas and just get like the snacks.
Some almonds. Some cucumber water.
I love cucumber water.
It's not like they have an Italian beef dipped in wet at the spa. Like, what snacks?
I like the snacks, like
Okay.
the waters with the fruit in it.
Yeah, I do like a lemon water,
Like a-
citrus water.
Like a cookie.
What spa are you at that they have cookies?
Every spa has a cookie.
No spa has a cookie.
Oh.
Okay. It's antithetical to the spas that you would patronize.
Spas that I go to have a cookie.
They do not have
Antithetical?
cookies. Like warm?
What?
Like warm?
Warm cookies.
No spa has warm cookies.
Oh,
All right. I don't know where this is going, but hey, we got a great show for you today. However you like to be pampered on this wonderful Wednesday. Programming note, Tom and Bat are headed out of town. They're going to San Francisco because they are the real San Francisco treat. They will be on the road on Friday, so I will be joined by the very talented Liz and Jenny. I am so excited because that is a massive upgrade.
I have never been called a San Francisco treat. I can guarantee that.
Well, there you go. You guys are. When's the last time you were both in San Francisco together?
Sas, don't mention that one time.
I mean, we've been to San Francisco together a lot over the years.
I know, but it's been like, that's what I mean. Like
don't know.
together. It's
I
been
don't
a long time.
I don't know. My entire last 10, 15 years on the road, Tony, is a blur.
Yeah.
I can't tell you. I can't tell you when the last time we were in San Francisco together.
Wow.
But I've probably been in San Francisco in the last 25 years for work. I think I've been to San Francisco twice.
You go like twice a year.
I think I've been twice for pleasure and 30
Once
times
for pain.
30 times for work.
Wow. That's a lot.
Yeah. I like San Francisco. When I'm not working, it's fun. When I'm working, it can be fun, but it's just different.
I mean, you got to go to Chinatown.
They're going.
Yeah, who's they? The government? Tony, you're
Sadnov,
going to Chinatown?
Sadnov double booked.
Yeah, so Tony and the gang are going to Chinatown for Peking duck.
Ooh.
And they're going to have an amazing.
That's going to be epic.
They pre-ordered. It's going to be epic.
Oh, you got to pre-order the duck. Oh, that's legit.
It's going to be great.
Yeah.
I have to go, and I'm giving a seminar tomorrow.
Womp womp.
Double booked.
And they're not going to save any Peking duck for you?
They're not going to save it.
Man,
I didn't get any Peking duck.
It's hard being the big boss.
I know.
Heavy is the head that wears the crown, I guess. I don't know. Well, anyway, it is wait list only for San Francisco, but you could get your name on the wait list. Some things could free up, but we would love to see you in San Francisco. But if you can't make it out to the West Coast, we have a couple more events. October is going to be very busy, but you're going back to the East Coast. You're going to go to New York. You're going to go to some other places.
Crazy schedule we have because we're going to be September 5th. We're going to be in San Francisco tomorrow, or on Friday. And then 2 Fridays from now on Triple Witching. We are going to be in New York City. Tony and I are flying out on Thursday, and we will be there for Friday morning Triple Witching.
Yes.
For the opening.
It's going to be some good trading.
And then the crazy part is 2 weeks after that.
Yes.
We'll be in LA.
Wow. You just love the coasts.
We're going.
Coast, baby.
We're going West Coast, East Coast, back to the West Coast.
You coastal elites.
Yeah. So we will be at the Fonda Theater, which we've been to before. It's a really cool place.
Yes.
In Hollywood, and we will be out there on Friday, October 3rd.
Which is the day that Taylor's new album comes out, The Life of a Showgirl.
We'll be breaking all that news out in LA.
Yes. Oh my God.
But so we'll be out there, and plenty of seats available in LA. But it will be filled up by the time we get out there. So it's gonna be great.
Yeah.
So back to back to back, West Coast, East Coast, West Coast, every 2 weeks.
Back to back to back.
I mean, better your body than mine, I guess. I don't know.
My body does not like West Coast, East Coast, West Coast.
Yeah, well.
But we do get I pre-ordered the pasta.
On American?
No, I think we're flying United this time to San Francisco, then American.
Okay, that makes sense.
I went with the bag of Cheetos when they come around and ask you like what you want from the
No, you got to get the pasta. It's the only thing edible.
Well, I'm back in Coach Sadnov. Pasta's not on the menu. All I get is like a bag of Doritos or peanuts or something like that. I think I went with the peanuts.
Well, we got a great show for you today on this wonderful Wednesday at the top of the 8 o'clock hour. We have an options drive for you.
Don't listen to him, by the way. If he says he's back in Coach, he's not.
Okay. I know. I don't believe that. 5 ways to generate income with options. That's going to be really
Our research team has hung up with 5 ways.
Yeah, five ways to go short. Great segment yesterday.
5-way chili. They want to go to Cincinnati.
Yeah.
7-way chili, isn't it?
Oh, I don't know.
There's 3, 5, 7 way. There's however many ways you want. That's going to be options drive at 8 o'clock.
None of them are edible.
Can I get through the show schedule, please? Help me, please. Okay. Then 8:40, we got What's Your Assumption? This is where viewers write in with an underlying and a directional bias, and then Tom and Bat do viewer-submitted trades. That's going to be at 8:40. Then 9 o'clock, the Skinny on Options math spreads the bounds of models. What? Jacob. What are the bounds of models?
Oh, it's actually pretty good. It's a good segment he put together on it gets a little bit heavy, but he's basically doing a whole segment on the mechanics, the modeling behind the mechanics of spreads.
Okay. And And then we can ask him about the murder at Burning Man. Maybe he has already solved the case.
I don't know. That I didn't ask.
And then we got Nikki Bat in the house. If you have a smaller account, Nikki Bat has trade recommendations for you. He's going to be in at around 9:20 for his Johnny Trade segment. We always look forward to that. Scott is still on vacation, so Nikki's going to be holding it down. Very glad no one's stepping on his time. And then the very lovely Liz and Jenny back at it again, live from the floor of the SIBO. Always electric when the ladies are live from the floor. You definitely don't want to miss that. And of course, as I mentioned earlier, Liz and Jenny will be hosting the morning show with me on Friday for an all-lady takeover, so stay tuned for that. But hey, in the meantime and in between time, you guys want your daily dose? You don't have a choice. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Jump in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's September the 3rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
CRM. For tomorrow. That's about it.
Okay. The AI revolution could lift the S&P 500 to 7750 next year, according to one strategist at Evercore ISI. They boosted their 2025 year-end price target to 6250 from 5600, but they now see the S&P climbing 20% to 7750 by the end of 2026. What say you?
Well, they had to do something because the SPX is 6,400, so they had to up their 62 because they have to stay relevant.
Okay, but could this AI get more bubblicious into next year?
Yeah, I mean, I see no reason why it can't go
inside the range.
I see no reason. I don't know what the range is for the end of next year. I mean, I could look.
Well, December, 190 days away is 2,200, Saz. So we're 64 now. So
no, December of next year.
I understand. I'm just saying December of this year. They're saying 77, and we're 64, right? So
yeah,
less than 200 days, we got a 2,200 point expected move. It was all to the upside. We'd be over 77.50.
No. I think you're off by a decimal.
Oh, now you're making him do work. Now he's upset.
No. Yeah, we're going
I'm looking at 2030. That's why. I'm so sorry.
Okay. I was like, I don't think it's that much. Let's see. December of 2026, the expected move is 1,000.
1,000 points.
Yeah, so actually that's outside of the expected move.
Just outside, yes.
Okay.
It's outside of the expected move by about 300 points.
Okay.
Yeah.
Who is going to win the contest for Q3?
Not me.
Okay.
But it's not over yet.
It's not over yet. Hey, the U.S. IPO floodgates have opened, and a slew of companies across sectors launched their U.S. IPO roadshows yesterday, kicking off the post-Labor Day window as investor anxiety over tariffs has started to recede. Like to hear about it? Here it goes. Klarna. They want a $14 billion valuation, and they could damn well get it. They're gonna sell 34.3 million shares, priced between $35 to $37. They want to raise $1.27 billion. Are you following along?
I am.
Okay, so that's Klarna. That did affect shares of Affirm yesterday. I don't know if you trade Affirm.
I do not.
Okay.
I mean, I don't have a position on right now.
Okay. Blockchain lender Figure is seeking a $4.1 billion valuation.
Of course they are.
I've never heard of this company. They're worth have you heard of Figure?
No.
Okay. They are called Figure Technologies, and they are a blockchain-based lender, and they're going to sell 26.3 million shares between $18 to $20. They're going to raise $526 million. Also in the crypto space, the Winklevi are doing their Gemini IPO. They are targeting a $2.2 billion valuation. Breaking down the numbers there, They are going to trade under the ticker GEMI. You ain't got no alibi. That's Gemini.
How much can I take Tony Batista public for right now? Because I want to see.
Well, Circle and Bullish went public, and Chime and Fly.
Half those companies are scams, but I'm gonna.
Okay.
I want to take Batista public.
Okay.
See what we can get from.
Which one, the old Fakakta or the younger one? You might be better with the younger one. He's got more upside.
Nah, but I want the old Fakakta to get what we can get out of him. Like it's like you're getting to the end of your contract. I want to see if I can get a first round draft pick for you.
If you had to put your money on one of these horses, who would it be?
These horses?
Yes.
I know nothing about Figure or Gemini.
You know about Gemini.
I mean, what I know about Gemini, I wouldn't buy it.
Okay.
For money. What I know about Klarna, I wouldn't buy that. So I'll go with the unknown Figure. I don't even know what it is. I don't even know what it is.
It's a blockchain lender. I told you that 10 times.
The term blockchain lender.
I don't know, but they're worth $4 billion. How much are you worth?
Blockchain lender. I don't exactly know what that means.
Okay, well, are you doing anything in Circle or Bullish or Chime or any of the other new kids on the block?
I want to get short every one of them.
Okay, that's the spirit.
Circle markets are a little wide too.
Yeah, I've traded Circle. I've never traded Bullish.
Okay.
And I can't stand that company.
Okay.
And because I can't stand the CEO.
All right.
For anything that they do.
Okay.
But whatever.
Okay, petty Patty.
Maddie likes them.
I'm not petty. I'm just. You've had a lot over the years. This is a small industry, and over the years, we've had experience with lots of different people.
Sure.
And you remember the people that are good, and you remember the people that are bad.
Well, you're a peach.
I'm just saying. Like, people don't realize what goes. You cross paths many times with people.
Right. Yeah.
You got to be careful.
Be nice to the people that you step on the way up, because it's the same on the way down there. So
never bite the hand that may one day feed you.
I use it all the time.
Yeah. Hey, getting to commodities. U.S. recorded the highest ever liquid natural gas exports in August. U.S. exports of liquefied natural gas reached an all-time high as plants exited planned maintenance programs or something. I don't know. But August exports totaled 9.3 million metric tons. That's enough to power all of your saunas and hot tubs, Bat. What are you doing in natty gas?
We were a little long it. We need to roll up some putties.
We need to roll up some putties.
We came in a little long it, but now it has.
You came in like a wrecking ball.
Came a little long it, but now it's rallied this morning. And I'm
gas back over $3 for the second time in 2 days. I don't know if we'll see if it holds right now. 3.097. That's a significant move to the upside. About 2.5%.
Yeah, we've been trading natural gas pretty much for the long side. But,
yeah.
There hasn't been much there.
Okay. Well, big news after the close. Google, by the skin of their teeth, avoided the worst antitrust fate that could have befelled it. They will not have to sell their Chrome browser after all, but they will have to share data with competitors after a ruling that it is an illegal monopoly. A federal judge ruled in a high-profile antitrust case with some good news for the tech giant. The good news is that Google will not have to sell off their Chrome browser, which was a very real possibility, but they will have to share data with rivals, and they can't sign a lot of the exclusive contracts that help them become the dominant player in the industry. But the ruling did send shares of Google and Apple higher after the close.
Sure did.
Sure did.
I think
Google is up as much as 8% at one point.
Apple's trading $238. That's up about $7-8. And Google was up around $11 last time. Now it's up $14.
I think Google's going to be an amazing short coming up.
Yeah.
Maybe not at 220.
Do you know who made a trade in Google to the bullish side yesterday on option trades today?
I do know, yes, because I published that tweet.
This guy right here with 2 thumbs up.
It's a good call. It's a good job out of you.
I think Google, not today, maybe tomorrow.
Yes.
Do we whack them and how?
What do you mean?
Sell it tomorrow.
Okay. All right, we will see what happens then. But good job, Google. In other news, Anthropic, the AI company, announced they had closed a $13 billion funding round that now values the AI startup at $183 billion post-money valuation. Hachi-machi. The startup's valuation has been on a steep climb since they announced the AI assistant Claude in March of 2023.
I don't know how.
We use Claude here. We use Claude Enterprise.
I don't care where we use it. I don't know how you get an $883 billion valuation.
They raised $13 billion.
How much revenue could they possibly have?
They make $1. I don't know.
I don't know either.
Yeah. Well, that's pretty good.
If you're Anthropic.
Yeah. Well, I mean, there were talks that, you know, Apple would maybe be trying to buy one of these AI startups. I mean, Apple is worth trillions of dollars, so they could swing it, but the price just got more expensive.
Yeah.
But I think all of these valuations are crazy. But again, that's why the guy says S&P's going to 7750. If every company is worth $250 billion.
Here's what that guy says.
I know.
Doesn't mean a damn thing.
All right.
The market, which just means a lot more, doesn't say what he says.
Okay. Well, OpenAI has acquired a company called StatSig for $1.1 billion. StatSig is a software experimentation company that helps organizations test features and leverage real-time data in their operations. What? 1.1 billion. That's how much we were worth.
No.
Yeah. Good job, OpenAI, I guess. I don't know.
Yeah.
The U.S. has revoked Taiwan Semiconductor's fast-track China export status as controls tighten. The change removes a fast-track export privilege known as validated end-user status, effective December 31st. Future shipments of American chip-making tools to TSMC's Nanjing site will require U.S. export licenses.
Well, they must have been really crappy at it at TSM because the stock is up about $1.50, $2 on that news.
Well, get out while you can, I guess. I don't know. Do with that what you will. Hey, in other news, Nvidia and Marvell shares fell after earnings. Will Broadcom's stock fare better? Broadcom set to report earnings this week, but they may have a hard time topping their existing prediction for 60% growth in AI revenue next year. What say you in Broadcom?
No position in there.
Okay.
Probably not going to trade it.
You're not going to trade it?
Nope.
Why?
Because this is my worst performing stock this year. I haven't had a single winning trade in there all year.
Oh, okay. Well,
AVGO has earnings on the 4th after the market closes. It's up about $1.50, trading over 300 this morning.
Are you doing anything in Nvidia or Marvell?
Marvell, we're long.
Okay.
Got stuck on earnings.
Mm-hmm.
Nvidia, we have position on Nvidia, but I wouldn't say that we're a hair long Nvidia.
Okay.
We need Nvidia to rally to like 172.
What is it right now?
171.
Oh, you're right there. You're on the dance floor.
Yeah, I know.
Okay. Microsoft announced that they had agreed to give U.S. agencies a discount on its cloud services as part of the administration's push to sign deals with tech companies for departments across the executive branch. The deal would save the U.S. government up to $3 billion in the first year. As part of the agreement, the company will also offer free access to Microsoft Copilot, the generative AI chatbot, whose window I have to keep aggressively closing, being like, no, I don't want to use this.
Oh my God, how do you get rid of that stupid
How do you do it?
I can't. I don't know how. I hate it.
I have instructions, but it's the most annoying thing. Even when you turn it off, it comes back on.
Yeah. And I was like, get out of here.
It does.
Yeah, it
Somebody
is.
asked for you.
That Copilot is the most annoying thing in the world.
Well, now it's going to
is.
run our U.S. government, so.
I mean, I don't understand. That's not a benefit to get that. That's for sure.
They're like, hey, we'll throw it in on top.
I don't even know what it does.
I don't either. I hate
Oh my God, it just takes
hate
up space.
Microsoft so
It's
much.
So annoying.
just all of your products. What are you doing in Microsoft, though? Our feelings aside.
We have no position.
Okay.
Microsoft is down around $3, a little bit of a bucker this morning with the market a little bit higher. Microsoft's been going sideways to lower the last month or so.
Well, of course, the Google ruling doesn't benefit Microsoft because a breakup of Google would be good. But who uses Bing?
I do.
You use Bing?
Not as a default, but
Oh.
occasionally I use
Okay, that is a choice.
I use Microsoft News.
I wouldn't tell anybody that.
It's not very good.
Okay, well, it is what it is. Hey, Salesforce. I think Salesforce has earnings, yes,
They
today?
do, yeah.
Well, they're
They do,
having
they do.
a bad year. I was surprised by this. Salesforce trails their tech large cap peers. Did you know they're the second worst performer in the Dow this year? Only ahead of only United Health. So yikes. The company's growth rate has been below 10% since mid-2024, and analysts don't expect revenue growth to reach double digits for the latest quarter. Salesforce's stock price has dropped 25% this year. What to do in Salesforce?
Well, the problem in Salesforce for earnings is we looked at it yesterday, and the expected move was only like $10 or $12. I don't
Okay.
remember exactly, but it was so small, and that stock can move $20 or $30 on earnings.
Right.
Yeah, IB ranks creeped up there, Sad. No, but 2 days to go. Expected move is closer to $18 now. Still relatively low, less than 5%.
18 is a lot better than I thought. It was like 12.
Yeah.
We'll look at it later.
Stock's up
I have a
$1.
very small short strangle on in Salesforce now, but I'm not going to keep the strikes I have on. We'll see.
Well, kind of a very interesting reversal of fortune of how Salesforce has been on the decline, but Oracle has just been like a rocket ship to the moon.
Yeah, but they're not the same type of companies.
Yeah. Okay. How are they different?
Well, Oracle is a database company.
Sure. They have cloud stuff too.
Yeah, but it's not the same as Salesforce.
Okay.
Most companies use Salesforce and Oracle. They
Sure.
do
That is
different
true.
things.
That is true.
No, Oracle's pure database.
Okay. Do with that what you will. Hey, sad news. If you are getting free Amazon Prime shipping because someone has a Prime membership, Amazon taking a page from the Netflix model, and they're cracking down on Prime free shipping sharing. They're eliminating the Prime program that lets members share free shipping benefits with people outside of their household. The program is set to end October 1st, according to a notice sent to users. It's phasing out the program in favor of Amazon Family, which lets users share Prime benefits with one other adult, but they have to share the same address. Be so for real.
Thanks, Jeff Bezos.
Yeah. So, what are you doing in Amazon?
Unchanged at 225. Ivy rank is only 7.
Yeah.
Yeah.
That's
Yeah.
not good. Kraft Heinz is splitting, unwinding a disappointing merger, much to the dismay of Warren Buffett. He's big mad. Kraft Heinz is going to split into two companies, one focused on groceries. That's an old-fashioned word. People don't use a lot, groceries. But the other is going to be on sauces and spreads. That's your wheelhouse. Dismantling a packaged goods giant that never achieved the growth expected when it was formed a decade ago. We're seeing a lot of this unwinding in companies
Oh, it's going to
that
be
have come
called
together.
Kraft, and then it's going to be called Heinz.
Kraft Heinz. I don't know what the.
I mean, they're going to have a Kraft and a Heinz.
Yeah, probably, yes. Shares dropped 7.2%. The 2015 merger that Berkshire Hathaway helped engineer alongside a Brazilian private equity firm created a $45 billion company. So no more Kraft Heinz.
Kraft Heinz.
I'm a little shaken up on this, but I'll be okay.
Yeah. KHC, what are you doing?
I honestly don't think we've traded this stock in 2 or 3 years.
Yeah, no, me either.
No.
At least 2 or 3 years, maybe 5
At
years.
least.
Well, Pepsi shares popped yesterday after Elliott Investment Management took a significant stake. The activist investor sees a rare and historic opportunity to turn around the iconic soft drink giant. Shares of Pepsi climbed as much as 5% in morning trading before cutting gains to 2.5%. The stock was down around 2% this year before Tuesday's pop. Get it? Pop?
I got to tell you one thing. If I'm Elliot and I put $4 billion into Pepsi, and you can only move the stock by what? By like about $1.
Sure.
I was gonna say 8 cents.
Yeah, I mean, I don't know what. I don't even know where Pepsi's trading, but
$150, South Love. It has earnings coming
okay.
October 9th.
So if you move the stock, you can barely move the stock on a $4 billion stake. There's sellers in Pepsi.
Okay. Well.
Yeah, Pepsi did jump to 153 or so, but it's back down to 149 and change, just a skosh over where it was before this news came out.
Yeah, I mean, when you don't move the stock and you buy $4 billion worth of it, that's not a good sign.
And it's gone.
Yeah.
Hey, Mr. Beast, aka the 27-year-old known as Jimmy Donaldson, the popular YouTuber known for his elaborate challenges and giveaways, is venturing into a new realm. He's reportedly launching his own phone company. According to Business Insider, Mr. Beast is planning to launch a mobile phone service next year. What are your thoughts?
I'm in.
Beast phone?
Beast mode.
Beast phone.
Are you really in, Sazno?
No.
Oh, okay.
I mean, are you?
He's got the worst chocolate. Don't eat his chocolate. His chocolate's horrible.
Or his burgers or his drinks or pretty much anything he does.
Yeah.
I don't do anything that Mr. Beast suggests.
Well, you're not his core demo.
Okay, I'm
to
just
be
saying.
fair.
I'm just saying.
Okay.
I'm not.
That is true. That is true.
I've never had his chocolate or his drinks.
In other news, Paramount and Activision are partnering on a Call of Duty live action film. Call of Duty is one of the most successful video game franchises, having sold more than 500 million copies globally. The collaboration is part of Paramount CEO's David Ellison's strategy of investing in high-quality storytelling. Microsoft owns Activision Blizzard.
What do you say about that?
And Paramount is now P-Sky. It used to be Para, now it's P-Sky. Okay.
Okay.
Could be good. I don't know.
Didn't your son play Call of Duty? Wasn't he a Call of Duty? No, he was a World of Warcrafter.
He was a World of Warcraft.
Yeah, okay. I didn't know. Starbucks is launching protein-packed cold foam and protein-packed lattes later this month. Starting September 29th, the coffee chain is trying to appeal to customers who want to add gains to their diets. Since Starbucks launched cold foam nationwide in 2018, it has become one of the most popular modifications that customers can make to their drinks. Starbucks says the added protein benefits would range from 15 to 36 grams of protein. What is Bad Coffee's counter to this?
What do you have to say for yourselves?
We have cold foam.
Okay.
I don't think we sell that much of it.
Okay.
But I need somebody to show me how to make money selling a cup of coffee.
Okay.
I have not figured it out.
You've not cracked that code.
I have not cracked that code. I think I have learned from one coffee shop that it is, in my opinion, mathematically impossible to make money selling coffee.
Wow.
I mean, you do it for the love of the game.
Sure.
But that's about
Not for the love of money.
You do not. I don't know how you can make any money.
You make it up in volume.
You can say that all you want, but even volume doesn't matter.
What are you doing in Starbucks, if anything? I know they're post-earnings, so
we don't have a position in Starbucks right now.
I figured as much.
IB rank of 18. It's been going sideways, going nowhere really. $89 and change.
McDonald's is bringing back their extra value meals as they try to appeal to price-sensitive customers. Customers will save 15% on combo meals compared to buying the entree, fries, and drink separately. McDonald's is trying to revamp their menu to turn sales around. What are you doing in McDonald's?
We haven't traded McDonald's in a while. It was up big, I think, yesterday, but...
Well, probably on this news.
I don't know.
Okay.
Nothing.
Why won't you just give me credit?
Unchanged, maybe slightly down.
I mean, I just, McDonald's just wants to be in the news, so they say we're going to expand our value menu. Like, who cares?
Customers care. People trying to feed their families care.
Oh, those people?
Oh. Hey, in other fast fast food news. I'm so excited for this. Taco Bell is launching nostalgia, bringing back their Y2K menu. Yes, 5 iconic items are making a comeback, all under $3, but only available for a limited time. The Y2K menu is available nationwide starting September 9th. What's on it? So glad you asked. Cool Ranch Doritos Locos Tacos. Get in my belly. That's back $2.49. The Double Decker Taco, also back $2.49. 7-layer burrito, back for $2.49. The Chili Cheese Burrito, $2.99. And the Caramel Apple Empanada, back for $2.99. Anyone using the Taco Bell app can snag a Caramel Apple Empanada early, starting now.
What are you doing? Taco Bell ads?
Well, they're a publicly traded company. What do you want me to talk about more? Oil? Like, I can't win with you.
Taco Bell is not publicly traded. The company that owns Taco Bell is publicly traded.
Oh, okay. You're right. I am an idiot, and I should not have this job. So I'm going to just see myself out because apparently I can't perform to the weird standard that you keep moving the bar to. Yeah, I don't even know why I try, you guys. Like, I try so hard, and I work really hard. It's just not good enough, so I don't know what else to do.
Set very high standards.
Okay, great. Who hates Taco Bell?
I don't hate Taco Bell. I really don't care about the fact that they're doing a press release to say that they're bringing back 5 gross items from the year 2000.
Okay. What do you want me to talk about?
Chili cheese burrito.
What do you want me to talk about?
Pick me up some chili cheese burritos.
No, the Doritos, the Cool Ranch Doritos Locos Taco.
Pick me up some chili cheese burritos
slaps.
on the way to get our lottery tickets, please.
Okay.
Yeah, I don't think I had Taco Bell until the year 2000, to be quite honest with you. Actually, probably 2000.
That could be. Hey, in sports news, it's pretty funny. The Eagles have announced that Dude Wipes has become the team's official sponsor of the Tush Push. I love it when a brand campaign all comes together. The Tush Push tried to get banned by other NFL owners. They were just jelly that it works 92% of the time. But Dude Wipe says, we love a good wipe after a clean tush push. Brilliant marketing. Love it all around.
And rightfully so, right?
Go Birds. Go Birds.
Dude Wipes, friends of the show.
Are they?
They are.
They were on Tasty.
They were on the show. We had them on the show.
Oh, okay. I didn't know what you meant by friends of the show. Again.
Friends of the show means they did their first interview ever on Tasty.
Okay. Yeah. Again, I'm sorry for my mental defect.
I could be wrong, but they might be in this building.
I've seen a Dude Wipes car. I don't think they're in, because there are only 6 floors in this building. There's not that many offices, but I have seen.
You've seen the Dude Wipes car
with the Mini Cooper with poop on the top. Yes, I've seen that.
Yep. I believe they're in the building. You're right, Seth.
Finally today, for my viral video, when your wives were pregnant, did they want anything special? Like, did they crave any, like, special foods or anything? Like, how above and beyond?
My wife was craving me. She wanted me real bad.
Okay.
My wife was craving me going away.
Yeah, that goes away regardless of gestation. Well, this is a funny video. Again, I've never been pregnant, but love that for my friends who have. But I guess it gets really hard and daunting to carry all of that weight in front of you. So there's a viral trend going around of ways that your partner can help relieve some of that burden. Check this out. Went viral.
It feels better.
Oh my God, that feels amazing.
Oh my God, now.
No, don't. Hold it just a little bit longer.
It goes both ways. So it was funny because he is okay.
Yeah, I got it.
Hey, this has been my time questioning my life choices. But Bat, what's coming up next?
Well, you got a good choice coming up next because we got Confirm and Send, so stay tuned. We'll be back in 90 seconds. Let's Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, Sadnov, let's take a look at the market. Even the S&Ps are up 20 handles, Sadnov. They've been about 15 handles higher than that. They've been about 15, 20 handles lower than that. NASDAQ up 152. On the other side of the coin, you got the Russell down 7 and the Dow down 122. A lot of this movement to the upside is Google, which is trading up $15, and the mighty Apple, which is trading up about $8.50 or so. Volatility up, interesting, by 13 cents, 1763. Volatility staying up with two of the indices higher, two of the indices lower. Bonds completely unchanged. There they are, down one tick, 113.13. Bitcoin up small, about $400 to 111 and change. Tight range in Bitcoin last night of only 1,000. We've been seeing $3,000-$4,000 ranges. Ethereum up $85. Oil down $1.17 to 64.42 after flirting with 66 and coming down to 64. It's settling in at 64.40 and change. Gold up $19. That's about $6 off of its highs. Silver up 14 cents. Big mover in nat gas is a 2.5% move back over $3. It's had a nice 4 or 5 day rally. Sudden up, that's all I've got. Dollar Tree down 6 if you played that game.
Did not play that game. And, you know, it's funny, last night I was watching the futures after the close, and obviously the S&Ps rallied about, 20 handles or so. Right
on the close, they rallied pretty big.
Yeah, and then they up again another 20 points now. But last night at about 2 a.m, they were only up 4. And I was thinking to myself, wow, these things look really heavy. Woke up this morning, then they were up 30. So somehow when the European markets opened, the S&Ps jumped about 25 handles. I have to tell you, Bat, I wouldn't short the NASDAQ today because
Google, Apple. With Apple higher, Southern, it's going to be hard to...
I know. I said I wouldn't short the NASDAQ. The NASDAQ was only up 50 last night, and now it's up 150. Still wouldn't short it, but everything else I think is on the table today. I don't think they're going anywhere. That's all I'm going to say.
I think Apple's a better short than the NASDAQ itself. I don't know.
Very possible. I said I wouldn't short the NASDAQ. Apple, Google, I'd short. I think you'd short them all. It might be good plays.
I did a bullish trade in Google yesterday for option trades today, so I hope you caught
that. I know
you
said that 35 times already. I mean, it's getting old already. Congratulations on your one winning trade. But we'll keep those ideas open for Friday on our live show.
But he's short Apple or Google.
I don't have any. I'm not short Apple or Google. But I am short the NASDAQ. That's not going to be good for the good kids.
That'll hurt.
Anyway, Let's see what we got here this morning. Confirm and send. Wednesday, September 3rd. Can't believe September.
We still got like 20 days of summer, don't we?
Yeah, usually summer goes to about October 10th or something. October 13th. 10th? Yeah. Then it's winter. Let's see what we got here, John. Do you consider your
day summer is September 22nd, Sadnov? That's why I said we have about 20 days. It has nothing to do with October 10th.
I gave you my number, October 10th.
The world according to Sosnov.
Yeah.
I digress. I apologize.
Yeah. The summer ends when Tony, my sprinkler guy, comes over to my house and turns off my sprinklers.
Oh my God, you don't have a self-draining system? What kind of schmagegi system do you got?
I don't know. I got a guy that schmagegi's it. I don't know what he did.
Boy, did he rake you over the coals. You probably have a self-leveling system. He just comes out there and makes believe he's banging on a couple of pipes, charge you $500.
Oh my God, you're so public.
Oh my God, when he sees a girl like you, he takes advantage of him. It's unfair. That's why I got to get in the business. Go ahead, what do you got? Do you consider yourself to be a tape reader, Sosnov?
I do consider myself to be a tape reader.
I'm sorry. Do you consider yourself to be a good tape reader? This really should have read.
I consider myself to be one of the best tape readers in the history of this industry.
Tape reading sucks because I watched you yesterday. Go ahead.
I do consider myself to be a tape reader. And that's a really kind of a weird thing. That just means, are you a market watcher? I mean, do you form your opinions from just watching the market all day? And I do. That's kind of what I am. I mean, I don't want to sugarcoat it. I'm kind of a tape reader. I'm a junkie. All right. What about you?
Yeah, I would say the same way. I watch the market. Yes, I guess I'm a tape reader. I don't know if it's in the classic term of the AI term of tape reading, but yeah, I watch the markets all day long. So sure, I'm a tape reader.
Let's go next slide. I created a checklist for an estimated bullish or bearish sentiment on a couple of underlying stocks I want to trade. Whenever I see you and the Tasty crew place trades, it seems like you're not methodical at all, but on a whim or gut instinct. Am I over-engineering this with a step-by-step checklist process before I place my trades?
Not methodical at all. I don't know. I think we're pretty good sticklers for high IV rank to look for something to sell premium in. And then I think we get pretty directional if the stock is near its bottom or near its top, where we get the reverse as contrarians. And if somewhere in the middle, I think we sell both sides. I don't know. I think it might seem like we're not taking a lot of thought in establishing a bullish or bearish position, but I think we go through a checklist pretty quickly. I think we stay pretty methodical. At least that's my gut instinct.
What
else do you have, by the way? Like there's no red bar or green bar next to the stock that lets you know which direction it goes. And if you have a system that does that, you're behind the eight ball.
If you've created your own checklist for an estimated bullish or bearish sentiment, that's great. And if it's working for you, keep doing it. And that's probably really helpful for you. And it gives you confidence to make a decision and engages you, all that kind of stuff. You're right. We don't do that. I mean, we've been doing this for so long, making so many trades on a daily basis that we really, what seems like it's a whim or gut instinct. I mean, I guess part of that's very true. But when you're making, 50 or 100 trades a day, you really can't over-engineer it with a step-by-step checklist process. So now in our heads, like I go through, here, I'm going to give you an example because I'm always about brain processing speed. That's what I talk about kind of all the time when I do live seminars and things like that. I love talking about quick decision-making and brain processing speed and all that kind of stuff. And one of the examples that I give, and I hear this a lot when you listen to, sportscasters and stuff like that. In football, a really good quarterback, like a Tom Brady or something. The reason they stayed around and win a Super Bowl when they're 45 years old is because they're able to process all the progressions, all the different receivers, 1 through 5, in less than 3 seconds.
Right.
And I've seen like discussions on this. Sometimes you get these quarterbacks they're incredibly talented, but it takes them 5 seconds or 3 to 5 seconds to do 1 to 3 progressions, meaning to look for your primary receiver and then 2 of the backups, 2 of the secondary receivers. For great quarterbacks, they can process 5 receivers in 3 seconds. And one of the things that's happened with us with trading for so long and making so many trades is I think we process probably 3 to 5 or 6 different things in a matter of what feels like microseconds, but maybe it's 3 to 5 seconds. Like everything from IVR to volume to bid-ask differential to price, everything we do in a matter of, it's a second or 2. So I just think it's just doing it so many times. So we do have a checklist just in our head. Let's go next slide. If I want to trade volatility, which underlying product do you prefer between UVXY and VXX?
I mean, for me, I don't like either one of these. So if you're going to make me choose one of the two, I would probably go with VXX. I like VIX or /VX in conjunction with VIX as a covered call type candidate. The only problem with the /VX and VIX is you don't get any margin relief, which makes it a very capital intensive trade. And the reason why you don't see us do a lot of them. But I guess VXX, I haven't looked at the two of them in quite some time. So personally, it's not my first go-to, but VXX.
Well, is there something else you would prefer?
I said /VX versus VIX. Volatility products are not the best standalone trading products.
Volatility has a perfect inverse relationship with the S&P 500. If you want to trade volatility, you're probably better off trading the S&P 500, meaning that if you want to buy volatility, you're better off getting short the S&P 500. And if you want to sell volatility, you're better off buying the S&P 500. That's a way cleaner trade.
Yep.
But between UVXY, which is, I believe, 1.5 times the VIX, I would rather trade VXX, I think. They're both, VXX used to be pretty liquid, but it's not really anymore. UVXY is okay, but not great. I would rather trade VIX, the VIX index. I think you can definitely do more size in VIX. Markets are a little wider. I don't think any of them are great. Like Tony said, I probably like the future VXM, the micro VIX future, the best of all those. Agreeing with Tony.
Yep.
Let's go next slide. Do you ever look at theta per buying power usage as a metric to determine how capital efficient a trade is? For example, I have a short strangle which nets 1.3 theta. My buying power usage is about $1,000. So my ratio of theta to buying power is like 0.001. Is this something you consider when opening a new short options position? Is there a threshold which you like to be above?
I mean, I love how deep they've gotten into this, and I really would like to still clap for it. So it's good. It's a good job, but it's not something that I look at. The buying power usage is set by the price of the stock, which is set by the exchanges. So for me, it is what it is, and there's not too much I can do about it. So, you can get a great theta decay versus buying power ratio by just doing a vertical spread. Doesn't necessarily mean it's a great trade. So it's not something I look at, but I look nice to know. I don't know how it makes you money.
We don't look at theta per buying power usage, although you certainly could. Our preference is to look at theta per net lick because it's consistent. If you try to look at theta per buying power usage on each trade, you are going to drive yourself absolutely batty, because it's just why do that to yourself? You're better at looking your overall theta number on the top of the page versus your net lick, and your number should be somewhere between 0.1 and 0.2, 0.1 and 0.3, depending on account size, or 0.05 to 0.2, something like that. But we usually say right now we're on the very low end, so we're like probably under 0.1. We're really under our position size is very small right now. So I would say we're probably somewhere around 0.07, which is like the lowest we've been in years. But the highest we get to is about 0.3. So I would look at theta versus net lick. That's your best bet. Let's go next slide. Do you track day-to-day changes in implied volatility rank, IVR? Is there any value in tracking what IVR does from one day to the next?
I mean, I like to look at the IVX 5-day change, which is easily put in any one of the lists that you have there. And I go to it constantly, especially when I'm doing a lot of my videos. I'll mention that. And what that does is it'll show you we know what the IVR is at the top of the page. And then it shows you what it's done over the last 5 days. And if the last 5 days is up and IVR is up, I look at it as like, hey, that's a great way of looking at putting on a trade with high IV rank, something that's been trending higher for the last 5 days, hoping for a reversion back in the other direction. So yeah, you can look at the IVX 5-day change to see what IVR has done over the last 5 days.
You can certainly track it. There's no issue to track it on the platform. Super simple. But we don't. I don't know what the advantage is of tracking unless you want to see if it's moving in a certain direction. Sure, you could. Maybe for some people, there's a little value in seeing what it does from one day to the next. I don't track it. I don't think Tony does, but he might look at it more than I do. So you can track day-to-day changes. We don't.
Yep.
Let's go to the last slide. John. Have you ever looked at how zero DTE trades work based on what the VIX does pre-market?
Ever looked at how the 0-day trades work based on the VIX? We've looked at volatility. I don't know. Was it VIX? I think we actually used VIX. We have looked at this, and they all work to their probability of success. You just get paid more when IV or VIX is higher than lower.
We did at least one, maybe two studies on looking at how the VIX pre-market and how the VIX overnight and pre-market impacts zero DTE trades. The results, I don't have the link right in front of me, but I found the link yesterday for the person that wrote this email to us. Mm-hmm. So it's you could just search for it. There's no question that the results were very definitive. When the VIX is up overnight and the VIX is up in pre-market, their results are better on the zero DT trades.
For sure.
Yeah, we have studied this. I don't remember the date of it.
We did it a few times actually.
Yeah, I think we've done it like twice.
The further you get in the day, the less you should be in it, at least from our research, right? After that 12.
Yeah, it just means that there's a richer opening print. That's all, really.
Yep. All right, listen, let's take a quick 90-second break. So I don't know if we can get to this little option jive so we can get to the opening bell. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
It's option jive.
My friend, you know what that means? Time for a little more Tasty Live, but an option jive. Even the S&P's up 24.
Yeah, pretty much been trading down, up 20, 24, 28 in that range all morning.
Down, up 24, 28. What are you, new to the business?
Maybe. Maybe.
That's fair. That's fair.
It's 8:13 in the morning. We're gonna have a full day today, and I got this show this morning. Then we got a little truth or skepticism coming up the 1 o'clock this afternoon. Dylan and myself, we're still thinking about topics for today.
Okay.
And then tomorrow, the Bat and I are doing the show in the morning, not in the afternoon. In the afternoon, we're heading out to San Francisco for our Friday morning live show. And then Friday morning, we will not be on air. It'll be Liz and Jenny doing the morning show. And the Bat and I will be in San Francisco for the first of two West Coast events. The second one will be a month from now. And in LA on October 2nd. So it's going to be great. And hope you guys can get out to San Francisco or to LA if you're on the West Coast. Mm-hmm. Our biggest customer base for Tasty is in California.
That's
big
awesome.
state. I mean,
Be there.
it's a big state. The biggest states for tasty traders, we have a lot of engineers, are California, Texas, New York, Illinois, and Florida in the U.S. Kind of crazy little mix up, but some of the biggest states, some of the biggest cities, or I'm sorry, some of the biggest states. I don't mean cities. When you talk about other countries, Tasty is largest viewership outside the U.S. is in Canada, Great Britain, and India.
I can understand. I can see that.
And the crazy thing about that is we can't monetize Canada or India. I mean, we literally can't take accounts. Canada and India is very hard to take accounts.
It's a give back for sure.
But the UK for sure, it's a give back. Yeah.
Mm-hmm.
We have a big presence in Singapore and Malaysia as well. Some of the other European countries, we do pretty well. In South America, we're scattered all over the place. And in Mexico, we have a very strong, growing tasty trade kind of network. So excited about that. All right, let's do it. Ready?
I'm ready.
Team has been on a roll with 5 ways to do different things. 5 ways to get long, 5 ways to get short, 5 ways to generate income with options. Oh, choking.
Do not resuscitate. Remember that, ladies and gentlemen. Do not resuscitate.
Let's see what we got. So, options provide multiple paths to income. Well-structured trades can generate cash flow without relying solely on stock appreciation. Income through premium collection, that's kind of the name of our game, and capital efficiency and flexibility options let you design positions that require less capital and have defined risk compared to owning shares outright. Let's see what the boys put together here.
Okie dokie.
So the first one is covered calls. Now, this is a little different because this is, how do you take a 50-50 shot and turn it into 2/3, 1/3? Essentially, that's the way I've always looked at covered calls. How do you take a 50-50 shot buying stock and turn it into win twice and lose once? And the answer is by selling some reasonably juicy call against your long stock position and hoping the stock goes up. It lowers your basis.
Which is what you wanted from the very beginning anyway, right?
So the nice thing about Tasty, and you cannot do this for futures because the CME does not accept this trade, but you can do it for options, but you can't do it on a ratio, is you can buy stock, sell call, or you can buy or you can do it synthetically, which is buy call, sell put, sell call. I mean, you can do any one of those choices. And it's just an interesting way to look at it, both buying stock, selling call, do it as a single trade, or you can buy call, sell put, sell out of the money call, and do it as a synthetic trade. Either one you can do on Tasty with a single click. And you can adjust the strikes and all the above. Let's go next slide.
Like it.
So this is a poor man's covered call. We came up with this name at Tasty. We've made up most of the names in the industry at Tasty. Every name you see on every other platform, we made it up. Just about. I just want to be clear about that because some people are like, well,
it's true.
I promise you this is true.
It like that.
But the poor man's covered call is a name we made up about 15 years ago. When you buy a longer dated option, you sell a near-term option against it. So in this case, they're giving you an example of buying a call 136 days out and selling a call above that 45 days out. You're still paying a debit, but you're obviously improving your POP. That's your probability of profit.
Mm-hmm.
Okay, there's a lot more ways to win here. Let's go to the next slide. So the next one is, as Tony likes to say, an omnidirectional put ratio spread. This is when, in this case, they're omnidirectional because the delta is kind of small, but and because you can kind of make money in both directions. But this is buying an out of the money put, usually at or around the expected move, and then selling 2 more out of the money puts at a lower strike for a net credit. Okay. The key to this trade, in my opinion, is setting up your long put at the expected move or your long call. You can do it either side. And then the further out of the money options are wherever you have to go to receive a credit. And you can adjust it accordingly to how much of a credit you want to receive. Let's go to the next slide. A zebra strategy. So this is another tasty strategy. With the IWM at 233, you buy 2 of the 225 calls and sell 1 of the 233 calls, same expiration, paying a $15 debit. What this does is it's a synthetic long. And if IWM rises above 233, the trade gains almost share for share with the unlimited upside. If IW falls, the most you can lose is the $15 debit. The break evens at 240. It's a delta long play. Just another fun little tasty strategy. Let's go next slide. A risk reversal. So the setup here is to sell a put below the stock price to use the premium to buy a call above the stock price. This creates a bullish position with less upfront costs. Now you can adjust these strikes however you want to. You can go to the same strike, you can move up or down or sideways, and you'll see whatever your net delta is. In the example they showed here, the delta is 67, but you can tweak that delta to whatever you want. You can make it 88, you can make it 52.
The price of the product and the max profit being unlimited just because there's no upside. But I would consider them at the very least equal, right? I mean,
at the very least, yes.
Right. All of make it something that it can go down to 0. It has to be able to double too.
All of these are strategic in the sense that they're using options to improve your probability of profit. Always to get the pop up over that 50-50 shot. Let's go to the next slide. Oh, and then on this takeaway slide, we did the same thing that we did yesterday, which was to summarize everything. So the strategy, the 5 different strategies, whether they're net debits or credits, you can see in this case, 2 credits, 3 debits, how to profit, the risk level, the pros, and the cons. These are really good reference pieces, really good. And I just, really happy the research team put these together the last couple of days because they tie a lot of things together and they do very well for people that miss the show and that can pick up and watch it later. They get a lot of traction.
Very good. A nice evergreen piece. Even the S&P's evergreen going higher, up 25 and change. We'll take a quick 90-second break and come back. We got more Tasty Live sound enough with the opening bell next. Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do that.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell imminent in about 2.5 minutes. Off E-mini S&Ps holding steady up 24 and change. Where they've been for most of the morning. NASDAQ up 160, maybe catching a little bit of a small bid. Russell down 5, and the Dow, which was down over 100, is down 66 or 64 right now. Volatility still up by 7 cents. Surprised that volatility is hanging in here, Sadnoff, with 2 indices up and 2 indices down?
I am. It's a little weird to me. I mean,
I agree with you. I think volatility would be contracting a little bit more, but it's not. Bonds, maybe that's leaving a little bit of hope to the bears. Bonds up 9, catching a little bit of a bid, trading near their highs, honey, of 113.24.
Did you just call me honey?
I believe I did. I believe I did call you honey. I don't know why. I don't know, honey, but you should check that out. Bitcoin up 640, oil down $1.64.
I think there's something wrong with you. I think you're losing. I mean, I'm a little concerned. Let's put it that way.
Gold up 32. Maybe that's what I'm looking at because I have a horrible.
I mean, usually women when they really are mad at their husbands, they'll call me their husband's name because they're like, the anger just comes out. I mean, Christy used to do it all the time. She would call me Craig, and I'm like, "Oh, you're really mad at him." She's like, "I know. I'm mad at you too." So that would happen a lot. But when you call me honey, it's kind of disturbing.
Not the first time, I don't think either. I think I've done it before.
Like when your wife calls me Tony, I'm okay with that. But when you call me honey, I'm not okay with that.
You'd rather she be with you calling me my name. I get it. I understand. I'd be the same way.
Would you rather I sleep with her and call your name, or sleep with you and call his name? Whatever. One of the great lines ever from Bull Durham.
It sure is. Silver is having
Omaha.
Great day.
Omaha. No. That's not an Omaha. That is literally one of the great scenes in Bull Durham.
It certainly is. You know what? I've lost my train of thought.
Which is, by the way, a great, probably could be the best baseball movie.
Oh yeah, but nowhere near a top 5 movie.
No, not top 5, but could be the best baseball movie.
Okay, I mean it's a baseball, it's a comedy, but sure, whatever.
That's great. It's a great baseball movie.
It is. I will give you that. I will definitely give you that.
All right, here we go. Spinning out of the turn.
Here they come, spinning out of the turn. Sadnoff, what say you?
Not a great opening for the good kids.
Mm-hmm. You've seen better?
I've had better. I had a better opening yesterday morning than today. No,
Google up 14 or 15 right now.
I don't have a position on in Google. Praise the Lord.
What's Apple doing? Apple is also up by $7 and change.
Yeah, I wouldn't. I mean, I want to get short Google. I think I'm gonna wait a little bit.
Oh, I think I'm gonna wait a little bit.
I think I'm gonna wait. I mean, I think I should wait. Let's see here. I got a few problem children. You know, Reddit's kind of a problem child for me.
What's Reddit doing these days?
I don't know. It's like I can't even tell. The markets are you can't even trade that stock for the first hour of the day because the markets are so damn wide. I can't tell what's a good price or not.
Yeah, Reddit up $6 or so. Taking a look at some of these October markets, yeah, they are too wide. They'll tighten up in a little bit. So
Yeah. They're
give it a break.
They're crapola. But I do like the move in the bonds. I do like the move in the notes. That is working out for us. And the NASDAQ and the S&Ps are the big losers. Everything else is pretty good. We do have a position on in CRM.
That's got earnings.
I know. It's funny. I don't even know what I have. I didn't even know what I want to happen in there.
What does that mean?
I have like diagonals and calendar spreads in there. I never trade that stuff. It's very very rare for me.
It's okay.
Let's see what else we got going on here this morning.
What do you have going on here?
I need something to do is my point. I have nothing going on. My buying power usage is minimal. My extrinsic premium that I'm short is too low. My theta is too low. My deltas are short. That's the only thing I got going for me. Not today, but
well, not on an up day, but sure, okay.
I need something to do. Oog L.
Well, you know what, Sadnoff, I don't want to cut you short right now, but just something to look forward to. We've got What's Your Assumption coming up next, where our viewers are going to find trades for you. So you'll find 10 trades real quick if you want to.
Do you think Google is tradable right now?
I closed my put ratio spread, Sadnoff, that you don't want me to talk about for the 15th time for a quick, I don't know.
Well, you're a little annoying. Yeah. Stock's 225. There is definitely some call skew in here.
It's definitely at play too. So
definitely some call skew.
I mean, you haven't made an equity trade yet today.
There you go. I just put on. I'm just going to do a couple of Google trades.
You did a strangle. Does it have any kind of delta to it?
No.
You're right. It's completely neutral.
Yeah, that's what we call delta neutral. I'm trying to do more. Yeah. So I'm just putting on some short premium in Google. I think this opening.
Only 18 in there.
I'm not ready to get short Google yet. I'm just ready to sell a little premium in there, which we did. Yeah. All right. What else you got for me? I know I need to do trades. I know.
Well, let's take a look at what's moving this market, Sadnoff. The Buckers, our Dollar Tree, which had earnings last night, was down 6 earlier. It's down 12 right now. ZS down 11. Lilly down 3 or 4. Crowd down 5. Netflix down $1.50. PDD and some of the other Chinese stocks are lower by around $1 or so. On the upside, Sadnov, a little bit more broad-based. Google up 15, APP up 6, Apple up just about 6. CRM, which has earnings after the market closes today, up 280. Macy's, Sadnov, here's a stock that had earnings this morning. We didn't do anything in there, up $2.60. That's a big 20% move in Macy's. That could be the biggest move in Macy's entire history. And hymns on the fact that Sadnov uses it up $1.90. That's all I got.
I will tell you that Macy's that's way outside the range. I think the range was $1.80 something.
I think it would even have been less than that, but sure, it doesn't matter. Yeah, 20% move is not something that was baked into Macy's.
I had the right idea to adjust Reddit this morning, but the wrong speed with which to do it.
So does that make you more right or more on?
That makes me more
It
wrong.
makes you more on.
That makes
You're
me a
more
lot more wrong. Stupid stock. Hate Reddit.
That's why you want to pick liquid stocks, Sadnov.
It's not liquid.
Or if you're going to have something like that, do defined risk. You should watch my option trades today. We go over this.
Oh,
look at you taking a little Bondolini scalpy.
Yeah, got him off at 13.24. I'll take
Sounds
it.
like you got them right where you want them. All 4 indices are now higher.
Yeah. I mean, except the Nasdaq's only up 127. I mean, it's kind of weird. I thought the Nasdaq would be stronger, and I thought the other ones would be weaker. But all right,
Volatility's still up 10 cents. All right, let's take a quick 90
got everything
break.
right where I want them.
That's right. We'll take a quick 90-second break and come back. We got more Tasty Live, Sadnov. What comes up next? That's right. What's your assumption? Like I told you 5 minutes ago. We'll be back in 90 seconds. This is Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm...
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to
I
you.
do.
That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds
winner,
and
winner.
claps
Chicken
sits on his desk, you get the free square of the bat in the middle, accordion hand gesture, take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's one macro risk that people aren't talking about enough right now?
I think we kind of saw it with the tariff sell-off. There's just huge concentration in Mag 7 stocks, all the big tech names. If something happens with those products, you're going to see a massive move to the downside. So I think if you're in products that are, if you're in ETFs that are highly concentrated around a handful of names, and that could be a number of different ETFs, it's always important to check the actual makeup of the ETF you're trading. If you're looking for that kind of concentration, that's fine. But if you're looking for more balance, I would just double check that you're not in one that's super concentrated.
You know, that's a hard question. My answer to something like that is always the unknown. I don't necessarily think that most of the stuff that we pay attention to is stuff that's going to explode the way that we think it is half the time. A lot of it I feel like is kind of unfounded worries. So I don't know, it's a cop-out answer, but I'm just going to say whatever it is, we're not talking about it right now.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. Well, with what's your assumption, Sadnov? What is your assumption? Pain? Down 50.
Down.
Volatility completely unchanged. That's
it's awfully weird. Stock that's killing me today. Stock that's killing me today is Reddit.
I know you're very preoccupied in there.
I know. I can't believe that stock's up $16 this morning. It was down 6 yesterday morning, and then it closed like up a little bit, and now it's up 16 today. It's had like a $20 reversal. Big move.
It is a big move. It is a big move. But I can see you. I can see you preoccupied there.
No, not really.
Like a moth to a flame.
Maybe. All right. What do we got?
What's your assumption?
Down.
What's your assumption?
Let's see what we got here. We need to put some trades on today.
All right, let's do it.
Roberto, south side of Chicago or the Netherlands, whichever is easier. TLT, bullish, October, free money glitch. Selling the 84 puts expiring in October would also consider an at-the-money put with expiration either October or November. Well, we're going to stick in October, and we have a bunch of TLT positions on already.
We do.
We are short the 85 puts and short the 88 calls. It's a position that we are, we're long, obviously, and we have stayed long this underlying. What does he want to do? He wants to sell the 84 puts in October.
Yeah, he wants to sell a put. Pretty straightforward.
Yeah, I'm completely fine with that. And I think you got to hit the bid, though. I don't think there's much you can do here. 84 puts, 80 cents, just like you said. Roberto, done.
Put it on the board.
80 cents. Mm-hmm. Kevin from Charlottesville, Virginia. a routine iron condor. IV spike today, October. Did it spike enough in the QQQ?
Hey, I don't know what happened to ZS. It was up around $10 a moment ago. Now, I mean, up around unchanged. Now it's down $10.
It's weird. QQQ. IV ranks 18.7. It's kind of marginal, Kevin. What does he want to do here? He wants to, I think I'll do one. I just want to make sure it's not overlapping. 595.
An existing position, you mean?
Yeah. 595, 615. 520. 540, 520.
What do you think about that?
540, 520. So $20 wide. Let's sell a 540, which is $28 below, and a 595, which is $27 above. Man, there's a lot of put skew in here.
Well, there you go.
There you go. Mid price. Mid price is 525. Let's see if we can get filled, Kevin. Nothing done yet. We're working it. Working it, boss. Working it at 524. That's kind of mid price. Let's try 523. Nothing done. Let me leave it in for a sec, because if we down tick here, I'll be filled.
Sure.
Let's go to the next slide. I'm leaving it in, Kevin. Austin from Boise. He's looking at AMD. AMD's up 51 cents today. AMD has been sideways to down a little bit. He wants to do an
AMD has an IV rank of 13 also, Tom.
Yeah. Well, he wants to do an at the money call spread. It's a shot, as he says, a 50-50 shot. At the money call spread with a 50-50 shot. I mean, I normally don't do this, but because I don't have much of it, I don't have anything going on in AMD here.
You don't have anything going on in your life?
Yeah, sure. We'll do it. Bought the 60-65 spread for 258. Probably paid a penny over. Probably paid a penny over, but
what's a penny amongst friends?
What is a penny? Filled.
The Qs.
In the Qs, 523.
Very nice.
All right. So filled in the Qs on Iron Condor and filled in AMD on the call spread. Thanks, guys. Let's go next slide. Mike from DC. ETHA is absolutely crushing the competition. It's pulling 42% of all the ETH money right now. Analysts think Ethereum could hit 5,000 next year. So momentum's looking pretty solid. Mike, THA. You just gave me every reason in the world to want to sell this stock. Literally every reason. Stock's up 125 today. I have on the 36 strangle. I don't know, dude. I'll roll up my put side. I'm reluctantly rolling up my put side in here. So I sold a put spread because I kind of liked my strangle, but I rolled up a put side, so I sold a put spread. Didn't exactly do something super bullish, but I sold a put spread, moved my puts closer to my calls. Let's go next slide.
Okie dokie.
Tyler from Dallas, Texas, earnings play.
Hey,
Good.
Tyler.
Bullish on CRM for earnings. I have not looked at CRM for earnings.
Well, we could take a look right now, Sadnov.
Yeah, we can take a look.
CRM's up $1.25, going sideways-ish. IV rank of 57 is pretty good. You looking at September with 2 days, 16 days? We're gonna go all the way out to October.
Stock's 253.
$253. Yes.
Yeah.
65 is.
What would you do in here?
Doesn't look like there's much skew one way or the other, Thomas.
If you go to the expected move, let's just say it's $20, that takes you to the 235 puts. If you buy the 235 puts, you can sell the 230 puts.
There's really no skew here.
No, and there's really not a lot of juice. If you want to do a put ratio spread, you can only go $5 wide, which is kind of weird. I was thinking of doing a put ratio spread for a credit in here, just because I don't really have a really strong opinion. I just don't have. What do you think?
I don't hate it. I mean, the stock is up $1 and change today, but I don't think that really has a big bearing on a ratio spread.
I don't love it either. I can do the 30-35 for a 62-cent credit. Hope the stock goes up.
What's the gas up?
I mean, 64-cent credit.
Clearinghouse, 2 days to go.
64-cent credit. I don't love it.
Got it.
I got to look later, Tyler. I did the put ratio spread for a small credit. 64 cents. It's a little bit of a bullish play, but I think we'll go later on in the stock today. It's too early in the day. There's not enough juice in there right now. Let's go next slide. Ryan from Boston. Some volatility today, but nothing happened. Back to normal. 20 Delta Iron Condor in the 0 DTs with what does he want to do? 0 DTEs. Let's see. The expected move is $20. Let's go 20 Delta. He wants to do 20 Delta Iron Condor. Let's go. Fine. We'll go 23 Deltas. 360. Go 20. Where are we? 23.
Looking at here.
One. Trying to get to $20 wide. 15.95. It's about $4.35. I think I put it in too cheap.
That was easy.
Yeah. All right. We're in, Ryan. We're filled. $4.35. I did the 64.15, $63.95, $20 wide, $64.60, $64.80 on the call side, $20 wide. Collected $4.35. Target on this about between 50 and 80 cents. We'll see what happens. Let's go to the next slide. Derek from Seattle, Washington. Bearish on precious metals, especially gold. Pairs trade with silver. Pairs trade with silver work better. It's asking a question. Thanks, boss. What is the gold silver ratio here, Tony? Do you know? I'll tell you.
I haven't looked.
I haven't looked in a while either, Derek. I'm going to do it really quick. Gold is trading for 36.16 divided by the price of silver, which is 41.87. It's only 86. I don't like the gold silver ratio here. 86 is kind of low for me. I'd rather just get short gold. What's gold doing?
Up gold
25.
Is up. Yeah, you can definitely get short that.
Yeah. Let's just get short some gold /GC. I like GC better than GLD. Let's go to October. I think gold is let's go to October 28th. It's 55 days. I think it's where some of the volume is, at least. Let's go to the expected move, which is $200. So we're currently at 36.18. So we'll go to 38.20, right? 38.25.
Yeah. Yep.
38.25, 38.50, $25 wide. We're collecting just about $4.50.
You're gonna try.
I'm gonna try. Keep your wings up, boys. All right, 440. 440, just for the good kids.
440 it is. You are correct.
440 it is.
Mhm.
All right, let's go. That's the short gold position. We sold it at the expected move, 55 days out. We sold a call spread, $25 wide, just to get our feet wet in there. Let's go to the next slide. Jeff from Miami, long futures or short puts? I agree with you, Jeff. I'm already short a crap load of puts. Stocks down. Japanese yen, October, 30 days to go. Let's open up yen, 30 days to go. Yeah, you still got to do ox. Let's go. I'm already short the 68 puts. Let's sell the 67 puts. Bill, 360. Only because I agree with you, Jeff. Let's just see one thing. Let's go to the next slide.
You sold puts in the yen. EMEA and S&P is up 18.
Yes. Okay, let's go to the next slide. Jack from Philly. AI is around 15, 16. Isn't bad for a long entry. Pretty much the lowest in 2 years. I don't trade this stock. Do you, Tony? What is this?
No, I don't. I'm looking it up right now.
C3 AI, ordinary shares.
We've mentioned it from time to time.
Yeah, it's on its butt. No question about it.
It has earnings after the close too, Saad. Though not something I normally mention.
Oh, it has earnings after the close today.
Yeah, $16 stock, almost 17.
Oh, got it.
Expected move is $1.60.
So you want to do an earnings play?
Sure. I mean, what are you going to lean a little bit bullish on a stock that's been on its butt?
Yeah.
Well, if you go to the 2-day options, you're really looking, outside the expected move, you're looking at 20-cent puts. I mean, there's not too much to do there. So maybe just a debit, like a call debit spread.
Not much to do is correct. What is the expected?
It is 16.18. You can buy it for synthetic stock. You can pay like 90 cents for it, 88 cents for it. The stock's trading 16.86 or so. And it's like owning 100 shares with, risking one to make one on a $1.50 expected move.
I don't usually trade this stock, Jack.
You can buy stock and sell calls. I mean, it's a $16 stock, $17 stock.
I don't usually trade this stock, Jack, but I think today I'm going to sell 2 of the 16 puts and 1 of the 18 calls. I don't know. It's just a crappy little earnings trade. Collect $1.50. Maybe we take 50 to 70 cents out of it. I don't know. That's what I'm hoping for. Let's go to the next slide. Brad from Phoenix, Nike. Nike was the death of me yesterday. Nike up 9 cents today, was down about 2.5 yesterday. We're long Nike right now, and so far it's been no bueno. What do you want to do? Brad from Phoenix. He wants to sell some Nike premium. I mean, it does have the highest IV rank. I guess you go 70-80.
Nike does have a high IV rank. Earnings are at the end of the month, September 30th, 48.
I guess you go 70. I guess you go 70-80.
70-80 it is.
70-80 for 428. I pushed it a little bit.
Push.
70-80 for 428 filled. We're also short the 75 straddle and the 75-77 strangle. So I got a lot of stuff on in there. Bonds, 113.30. Nice.
Yeah, bonds going higher. Market getting a little softer, up 16 on the E-mini S&Ps.
Yeah, they don't look so great. Apple up $6. It stayed here. Reddit's still up 13. That's ridiculous.
Google's up 18. It continues to rally.
Yeah, and my Google trade from this morning. So far, Mr. Batista, no bueno.
Bueno?
No.
Mm-hmm.
Yep. Nothing. All right. I think that's all 10, right, John?
Yeah, man, you were 10 for 10. Sadov, I told you could be 10 for 10, and you did it. I knew you had it in you.
Well, I wanted to put some positions on today. So we got a head start. Let's take a look and see, is anything
So you were
moving?
aggressive with your pricing, is what you're saying.
Yeah, the only trade that's moving a little bit against us is the SPX trade because the market's kind of sold off a little bit, which is not bad for us overall. But what I'll do, because I like to adjust stuff, is I'll roll my calls down a little bit into an up move.
Oh, tricky.
I'm very tricky that way.
You are.
I got a good fill, so now I just have a little bit of a little cleaner position. All right, so we made all trades. We made a single adjustment. What do you think here?
You know what? I mean, I think they're going to be hard pressed to go down today with Google and Apple so strong, but they don't look like they're rip roaring. I mean, obviously the Dow's down 160. It tried to lift its head up, but Russell is up 6, catching a bid. I mean, the Nasdaq. I don't think we go anywhere, Sadov. Could we have just an inside day here? That's what I think we have.
Well, we finally got a nice move in the bonds, so. Not going to cover any of those. Maybe we'll cover our short puts in the notes. Other than that, you got something else for me to do?
No, but I've got the skinny on options math waiting for you if you want to do that with Jacob coming up next. You want to take a look at that? Those are your notes.
Oh, we sold those yesterday at 16. Bought them back at 9 today. It's a good one.
Darn, you're so good, Sosnoff. Honestly.
Yeah. All right, that's it. I'm good.
All right, let's take a quick 90-second break and come back. We got more Tasty Live. Immediately found these messages from the Skinny and Options Math with Jacob. We'll be back in 90 seconds. Let's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, They're 1 or 2% around the globe right now.
The U.S. government has found. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo. Sazlon bingo. I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yeah!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's one macro risk that people aren't talking about enough right now?
I think we kind of saw it with the tariff sell-off. There's just huge concentration in Mag 7 stocks, all the big tech names. If something happens with those products, you're going to see a massive move to the downside. So I think if you're in products that are, if you're in ETFs that are highly concentrated around a handful of names, and that could be a number of different ETFs, it's always important to check the actual makeup of the ETF you're trading. If you're looking for that kind of concentration, that's fine. But if you're looking for more balance, I would just double check that you're not in one that's super concentrated.
You know, that's a hard question. My answers to something like that is always the unknown. I don't necessarily think that most of the stuff that we pay attention to is stuff that's going to explode the way that we think it is half the time. A lot of it I feel like is kind of unfounded worries. So I don't know, it's a cop-out answer, but I'm just going to say whatever it is, we're not talking about it right now.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. But you know what that means? Enough out of you. We've got this man, Jacob, in the house, the skinny on options.
Good morning, Tony. I've blessed you in your ability to be excited every day.
I tried my best.
It's a great power you have.
It's a rare thing to possess, but I do the best with it. I use it for good only, not for evil.
With the gifts you have, yeah. You're welcome. How are you doing today? Not as cheery, I imagine.
I mean, with the gifts, I'm just happy to be here. With the gifts Tony has, this is
yes. To share the room with the gifts of Tony.
Tony, I just closed the for information and training purposes only. We just closed the SPX trade. We made our 15% in 20 minutes.
It's a beautiful thing. Money goes to money.
Well, it worked.
It's good to be you.
On that note, I've had a number of astute viewers notice that on the 10% management 0DT pieces, often the results are better than 10% of the credit, which is because in the back testing methodology, only checks every 10 minutes. Especially early in the day, sometimes it really shoots straight past 10%. So they wind up taking in 20 or 25 just because they had nothing checked to take them off in time.
Yeah, it's kind of the 0 days are really interesting. I mean, because there's we get so many emails, Jacob, on all your 0 day studies because everybody also wants to check our research.
Mm-hmm.
I mean, we have so many different, people saying, well, I did this and I got a different result, and it's crazy, which is great, because I'm glad people are messing with all that stuff. But it's been it's kind of been pretty eye-opening. But I got to tell you, when you stick with the most basic, like just what we did this morning, you go to the expected move at 20 delta or expected move, and you do about $20 wide, and you shoot for between 10, 15, 20, or 25%. It's been very, very effective. I mean, the win rates are low 90s, something like that.
Right.
But you can't be greedy. You just can't be greedy.
Yeah, somehow everyone comes back from lunch and gets, the SPX always moves too much. But you get out in the morning, it's good.
Yeah. Anyway,
I for all the math that I do, to some extent, some part of market dynamics is like human social features, like when people have had breakfast and lunch and coffee, and that never shows up in any of the models. We'll talk about a bunch of models today. None of the models include, the blood sugar of floor traders, even though it is probably relevant.
It probably is, but we never looked at that. You're right.
I mean, I don't know how you would, but I mean, I would guess that's has an effect which mathematicians just don't want to admit, because we'd have to learn biology, and we don't understand biology or psychology. We only understand math.
One trick pony.
It's a good trick, though. It's a good trick. Yeah. So today I want to talk about how there are all of these various different models, about how different institutional investors keep a lot of stuff in their back room and don't release their their secret parameters that they put into the models, and how that really doesn't matter for a retail trader, because we're blessed with bid-ask spreads, and if you have a narrow bid-ask spread, you don't need to know all of the fancy stuff going on. You can sort of trust in that. You can trust that not only is it consensus, it's universally agreed upon that the real prices lie within the bid-ask spread. And so you don't really need to have anything fancier than looking at the option sheet to figure out what a fair price is. And then you can, then you want to do your trading based off of, things you actually can control, your risk levels, your probabilities of profit, things like that, as opposed to trying to, identify the right price and the wrong price. And this is cheap and this is expensive, because you don't know, everyone agrees. But yeah, we can be more specific. Let's open it up, John. So this is a point I've made in the past, that sort of the Holy Grail, or Philosopher's Stone. Philosopher's Stone, for people who don't know, is what the alchemists, the people who claimed that they were going to turn lead into gold in the Middle Ages and conned all of the royals into supporting their dubious experiments. They claimed they would make a Philosopher's Stone that would make you infinite money and make you live forever. It's a lie. But would it be a model that describes fair prices for everything liquid using only observable data, right? Then you'd immediately see arbitrages. You could turn everything into free money. It'd be great. In practice, there's all sorts of proprietary methods and backroom things that go on to compute the true values of various assets. And as retail investors, we really only have the observability of the current bid and ask, right? And this is sort of a plea that people should try to relax their search for, or their thoughts about prices, right? That SPX doesn't have a price; it has a bid and an ask, and it's the price is that range is probably the best way to think about it, rather than trying to imagine that any specific number is the price, right? Or the last price is another reasonable thing to use. But I think that they try to keep it in terms of an interval, a bid-ask spread range, is a better way to try to conceive of where prices are, right? Don't think of them as fixed numbers. Think of them as like ranges. You go to the store and a candy bar is $1.50, but if you went to the store and a candy bar said $1.45 to $1.51, you probably wouldn't notice whether you walked out with 3 more pennies or not.
No, probably not.
So let's go forward. So the reality of spreads is that almost everything has a standing order to buy and sell it. Then the bid is necessarily lower than the ask, or else the transaction would instantaneously occur. And this difference is the spread. And we made this point before, and it resonated with you, Tony, that you really should probably think of it rather than just as like a dollar amount, the distance of the spread. You want to think of it as a percentage of the current price, or the mid price, or the right. It doesn't matter what you use as the denominator there by very much. The point is that it should be thought of in relation to how big the instrument is. That, a 5-cent spread on a $100 product is a great, incredibly tight market. A 5-cent spread on a dollar product is actually pretty bad. In most financial theories, we just assume that everything's frictionless, so the bid asks are equal, and this means that there are no spreads. But we sadly don't get to live in this perfect theoretical world of instantaneous pricing of whatever we want, at least not yet. And so we instead need to consider where these spreads are, where they come from, and sort of how we can learn from them. So we can go forward a slide and think about that.
Okie dokie.
So there are incredibly many pricing models. There's the capital asset pricing model. There's the stochastic volatility models. There's the jet diffusion models. There's the oldest one is the Black-Scholes model. This is the oldest rigorous model. But we know that in fact nobody actually prices anything according to the Black-Scholes model, because if you did, you'd have one implied volatility for an underlying, and so then you'd look at the option sheet, which has this volatility smile, and at least one of them would be overpriced and one of them would be underpriced, and you'd be really interested in trading off of this. And if you really believe that with all of your money in your bank account, you would personally try to flatten out the volatility smile by buying the cheap volatility and selling the expensive volatility. And nobody does this because since 1987, it's been realized that this is a good way to go broke. So the Black-Scholes model isn't really a pricing model anymore. Instead, what it actually is sort of an implied volatility model. It's a way to take the option price and turn it into a statistic that then can be used to compute probabilities or model future price trends, things like that. But it's not really a pricing model anymore because nobody prices anything according to it. Then you've got all stochastic volatility models and jump diffusion models that sort of generalize Black-Scholes. They either release the constant volatility assumption or they release the continuous pricing assumption. Either of those could be true, but no matter what you do when you release that, you wind up introducing a bunch of other unobservable parameters, which can be tuned, right? This then introduces the risk of over-tuning or just not knowing what other people have for their beta kappa in their Heston model that determines the rate of volatility mean reversion. Nobody knows. Nobody knows. They make up numbers that sort of fit with historical data, and then they hope that works out. And probably in the end, they wind up with a sort of a certainty level on it, and then they use that to set their bid and asks just slightly past where they think the true prices might lie. And then there's my favorite kinds of models are actually called nowcasting models, but they are also not pricing models because they take all current prices as inputs, so they're not going to disagree with any of them. And then they take from them all, and then they output future distributions, right? They forecast what might happen to prices in the future that would fit with the current prices being all fair prices. But again, those aren't pricing models because they take pricing as input. They don't give pricing as output. So the pricing models that actually are used are primarily proprietary and somewhat secretive backroom things that we don't have access to. So what do we have? What we have is the current bid and ask. So let's see how that helps us out. John. Thank you. Right, these pricing methods are not visible to retail traders. We know a lot about their results. Because if any of them gave a result outside of the current bid-ask spread, they would trade on it, right? If they thought that a SPY 110 call was just worth more or less than the current bid-ask spread, they would trade it. They would buy it and sell it until it moved the bid-ask spread to where they said it was. And if someone else's model disagreed, right? If you had two very stubborn banks that both thought that something was worth just different amounts, they would rapidly exchange it. And so as a result, despite the wide variety and sort of opacity, like the fact that we don't get to look at the models, we know that their outputs are very tightly packed. We know that every single model that's employed by anyone, that anyone takes seriously, outputs all current prices to fall within the current bid-ask spreads. So in really illiquid assets, in bad markets, that doesn't tell you very much. But if you stick to trading like really liquid underlyings, this means that you don't need to know anything about any of the models because you know that all of the models pretty much agree. They can't differ by very much because if any of them did, someone would trade on it. Right? This is the efficient market hypothesis sort of viewed the other way around. Where would the information go if anyone had it? It would go straight into the pricing. So as a result, despite the fact that there's such a wide variety of different pricing models, and we as retail investors don't really get to look at them or know about what's going on inside them, we don't have to worry about that. because we do get to see the bid-ask spread, we do get to see the liquidity states, and I mean, the one thing we sort of need to pick up with experience are those underlyings for which the markets are more liquid than the bid-ask spread looks like. There, especially for large products, your Amazons and your Teslas, sometimes you have instruments that have a relatively wide bid-ask spread, but which from experience, you can get filled near mid-price, a penny off mid, either way, whenever you want. And so that's different, right? That's the matter of the market maker trying to hedge their bets, but everybody in practice actually having a much tighter idea about what the correct prices are. But that's fine. As retail, right? So that's like the one place where the bid-ask spread itself doesn't tell a retail investor everything they can want to know. The one part you want to add to it is sort of your own personal experience with liquidity, or this is a question I've had for a while. I don't know in the platform it's got those liquidity ratings in stars next to underlyings.
Yeah, those are stars by Sosnoff.
Yeah, those are just Sosnoff vibes.
Yeah, Sosnoff stars.
Sosnoff stars.
Yes, and he doesn't give out stars to people very, very, easily.
It's
not
a
quite.
Process.
just to be fair, not quite, but yeah. I mean, those are self. We went through all those stocks and assigned them liquidity based on, what our kind of how our trading has gone in there.
Yeah.
Don't look now. Bonds are up a full point.
I know.
Which is what I was saying, right? That is the thing where the only thing to have is experience trading in the product. And so honestly, the Sosnoff star system seems about as good as anything's going to be for figuring out, and especially because it's only 1 to 4, right? You give yourself a lot of room to be imprecise if you're only rating things on a 1, 2, 3, 4 system. But that's really the other piece you want to add into your understanding of a bid-ask spread. And once you have those, you don't need to worry about what pricing models say at all, because thankfully everyone has already run all the pricing models and given you the outputs, right? You might not see the inside of the black box, but we see all of the outputs have to fall in this very narrow range, at least in good products, which I think is a nice bit of relaxation for people at home who can get stressed about not feeling like they don't understand. They finally understood the Black-Scholes model, but they don't understand stochastic volatility. That's fine. The stochastic volatility is not outputting anything outside the bid-ask spreads. That nobody takes any model seriously that outputs anything outside of the current prices. And so you don't need to worry about them particularly. That said, on this show, we certainly in the future will dive deeper into them and hopefully get you to understand them. But this piece is more of if you don't have to worry about it too much.
Okie dokie.
We can go takeaways, yeah.
Are you worried about it, Tom? I'm fine.
I'm okay.
I mean, what you worry? I'm not worried about you guys worrying. I'm worried about the customers. Large financial institutions have back rooms with a wide variety of complex methods for determining fair asset prices. As retail traders, we are, in this regard, severely outgunned. But the standing bid-ask spread reveals that the narrow range of results to anyone who wants to look, and the tighter the bid-ask spread and the more liquid the underlying, the less it matters how little theory you have on your side.
And I would say I would say that number 2 is a little misleading because as retail traders, your advantage is that you don't have to be on that market. So you get to do whatever you want to do on somebody else's market. So it's like they're showing you what they've got. Like you don't
That's
have
our edge over the market makers. That doesn't help us against Citadel and just large institute, right?
Well, you're never. What I'm saying is that you're never going to have an advantage over them. The difference is that forget about the liquidity piece for now. The advantage is that you get to decide what you want to do. Right. They have to be on both sides. You do not.
The market makers do, yes.
Yeah. So you get to decide
also get to make these choices.
Yeah, you get to decide your strategy. That's a little, that means you're not outgunned. That's my only point.
I see. I think I think you're outgunned. You're not necessarily, outfought, right? In the way that, a scrappy force working out of the jungle can beat a stronger force that has better weapons. just because they have the ability to decide when they're going to engage.
Exactly.
Right. You have an advantage, but it is, right, you still are outgunned, right? You don't have tanks. What you have is the ability to choose when and where to make your trades.
Yeah, that's right.
Yeah. Right. You outmaneuver, they outgun.
All right, that's fair.
I guess if it's fair, then it's fair.
It's fair, it's fair.
Maybe we can come to an amicable agreement there and not have any problems.
Never a disagreement on this show.
Very good. Even the S&Ps of 25 sounded, they looked like they were going to fall for a quick second there, but they got Dikembe then brought back by about 10 handles or so. You ready to take a quick 90-second break, Sosnoff? If we can. We've got, Johnny Trades coming up next.
Sure.
Okay, let's do it. Johnny Trades next. Goodbye for now, Jacob.
Goodbye for now. Is Dikembe new slang for bounce?
Dikembe used to be a basketball player.
Yeah, I know. I recognize the name as a basketball player, but did you just use it as a
he
bouncer?
gave the finger and said, no.
Yeah. Oh, that's right.
Yeah.
That's right.
Dikembe just means swatted away.
Yeah.
Mm-hmm.
There you go.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents.
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I
well-
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right. With
the clock's ticking on that.
I know.
Oh, sorry, I didn't know you were there.
Johnny Trades.
What's up, boys? How we doing?
Play some music? No music today.
No music. It's okay. Well, we're not into the Johnny Trades yet. There it is. Thank you. I'm back.
Hey, that applause, I don't know if that applause was for you, Nick, or because we opened up the phone lines, 855-238-2789 or 855-BE-TASTY. As we're doing most of this week, we've got phone calls to come to. That's right, but I need you to call first, 855-238-2789 or 855-BE-TASTY.
Yeah, our boy Scott is at the he's at the U.S. Open.
Really?
He's going to try to be a ball boy for a day.
Oh, that would be fun. Is there an age limit on that?
What?
I think he's past the age limit on that.
He's a little past the age.
A little bit.
Yeah.
Why didn't you go? That's not your thing, tennis?
Tom was going to play, but he didn't want to show
I love tennis.
So why didn't you go?
Because I just don't want to go.
He works for a living.
I work.
All right.
Somebody's got to work.
Is that
somebody's got to lead by example.
It's like 2.5 weeks, right? Total.
Oh, I don't know.
Yeah, I think it's like 2. It's over 2 weeks. Yeah. What do you think did you see the drink of the U.S. Open?
I did not.
I couldn't even tell you what it is. It's like pink and
the new
what's it called?
Alani or Aloni?
Something like that. Something like that.
I think that's what it is. They just got Celsius just bought them, I think.
Oh, is it?
That company. We have it in our little machine there.
They have a specialty.
Try it.
It's called Honeydeuce.
Honeydeuce, that's it.
Oh, that's not what I'm thinking.
What is it, John? What is it?
lemonade,
and
raspberry liqueur, and Grey Goose, the alcohol.
And Grey Goose.
It's kind of like a foo-foo Arnold Palmer.
It's a little foo-foo-ish.
It's a foo-foo Arnold Palmer.
Sounds pretty good, actually. Better than...
I should say John Daly. Arnold Palmer.
What's a John Daly?
John Daly's when
That's
you add
what
the
alcohol
vodka
meant.
to the Arnold Palmer.
Oh.
Arnold Palmer is no vodka.
Right. Arnold Palmer's just iced tea and lemonade.
Yeah. John Daly
Yeah,
is
it's
when you
called
put
honey.
the vodka.
It's Honey Deuce. It's called
Honey Deuce, yeah. Honey Deuce. That's what
Honey
John
Deuce.
said.
Right.
And yeah, I'd like it better than.
Oh, it's a cocktail. I thought it was. I thought you were talking about a sponsor.
No. The cocktail.
And sounds off. Grey Goose is the official brand that they use.
I like better than the mint julep.
I like a mint julep. You don't
Do you
like
really?
it? Yeah.
I'm not a mint julep. Not a mint julep. There you go. That is the official drink.
Looks nice. The frozen grapes.
Yeah, that's what's.
Or is that like melon?
I'm going to say that those are frozen honeydew balls.
Ah, honeydew. I like a good honeydew.
That's what Scott is dining on right now.
You know where you can get the best honeydew? I get it every time.
Honeydew.
Honeydew. I like honeydew.
I love honeydew.
I'm a big melon guy.
I'm a big melon
I like
guy,
big
too.
melons.
I like.
I love big melons too.
I gave that.
Nothing better than big melons.
I teed you up for that one. I do like a melon though. Pete's. Okay. Pete's Fresh Market. You have a Pete's by you?
No.
We have a Pete's like in, not exactly West Loop, but it's West.
Pete's. I've never been to a Pete's.
Pete's Fresh Market.
Never been there.
Really, really good produce.
I have a Fresh Market. It's the same place?
Not the same.
Oh.
This is Pete's Fresh Market.
Never been to Pete's.
It's really good.
Pete's.
Or honeydew.
Yeah, honeydew. Honeydew, cantaloupe, pineapples.
Honey, can you do this? Honey,
I'm a
can you do that?
honeydew watermelon guy.
Okay, you put them like together.
No, I just like both those.
Both those.
Yeah.
No cantaloupe.
Not a big cantaloupe fan.
That's all right.
Sorry.
That's okay.
All right, what do
Should we
got?
get to it? I got a couple trade ideas for you.
Yeah.
It's been a while, and we had Johnny Trades last week, but before that, it was a couple weeks off. So, trying to get back in the swing of things here for the Johnnies here.
Okay.
All right, a couple trades.
Sure.
First one, Palantir. You got position? I'm sure you do.
I don't.
Really?
I had positions on, but I don't right now, and I'm because the IV rank got really low.
Yeah, volatility here, as the kids would say, is a little mid.
Yeah, it's,
mid.
it's 17.
Yeah. I'm doing an iron condor here.
Yeah.
135, 125, 180, 190, 290.
We don't do iron condors when the IV rank is under 20.
There's only so many things with IV
I understand
rank.
that,
I mean, where I got to do a show. You want me to come with 2 trade ideas next time?
No.
1 trade idea? How about no trade ideas? How about I just come on and I say, volatility is too low. I'm not going to trade today. I'm a trader, but I'm not going to trade today. That's what I'm going to do.
Wow, you sound a little bit
Volatility's
like
too
Vanetta.
low, guys. Can't do anything today. Turn off the streams.
Maybe it's not Vanetta. Maybe it's just you, Sadnov. Maybe you have this effect on people.
Maybe
and
it's
I just
people that
gotta
sit
fix
in
it.
your seat.
Ooh.
Or maybe it's just a Batista thing. But no, here's the rules, okay? One of the reasons we get to hang around as long as we have is because we don't do certain
No, because you're lucky I didn't take you out back and put you down years ago. But yeah, go ahead. Go ahead.
Still here.
Yeah, that you still here. I haven't taken you out back.
PLTR.
Come on, Grandpa. Come on.
The IV rank in PLTR is 17
Yeah.
and change.
Yeah, so you buy the wings and it's
No
you know,
thanks.
minimal short.
No thanks. We'll wait. We just don't have a lot of success doing
Well,
iron.
you don't have a lot of success because you stink.
We don't have a lot of success doing iron condors when the IV rank's under 20. It's over 30, maybe. Under 20, forget it. What's next?
All right.
Don't break the mechanics.
Oh, it's okay.
Go ahead.
Next one.
Yeah, what's the next one?
Adobe. Ivy rank 100. That okay for you?
Yeah.
That one work? All right.
ADBE.
Adobe. They got earnings in the middle of next week. I'm doing a cheapy little shot on the downside here. Broken wing butterfly. I'm staggering the strikes, though, into next week's expiration. I mean, the stock's been absolutely myrtleized. But it's certainly in the AI crossfire here. So I'm doing the 335.
Stock is what,
Hold
345?
on, go slow.
This one's going to be really tough for you.
What month are you doing?
Do this. I'm doing next week.
Next week, September.
The weeklies into earnings.
Okay, hold on.
It's a little shot. Shot trade.
September 12th. Got it. 9 days to go.
Yes.
Go ahead. What are you doing?
So I'm buying the 335, 330 put spread, $5 wide.
335, 330
put spread, and then I'm selling the 315, 305 put spread. So it's a broken wing butterfly, but I move the short spread further out of the money. I give up the credit because I did this at a 3-cent credit. I give up the credit to give yourself more room to the downside to hit that little $5 window. It's really just a cheap shot to an inside/down move here with no risk to the upside in a stock that's been.
So you're buying 335, selling the 330, $5 wide, and then you're selling the 315, buying the 305.
Yes.
And
I did it at 3-cent credit. I think I did it at a better price, but it's probably wrapped around a nickel debit credit.
I don't know. I think it's going to be lower than that.
What do you think? What do you think? Is something you're gonna do?
I'm trying.
I mean, you can move you could go to 320, 310 put spread and probably do that at 25 cents, 30 cents.
I like the one you have.
Cool.
I did it at 2-cent credit.
There you go.
Okay, I don't think the penny's going to matter.
Oh, it matters to me. Matters to me.
Well, I mean, I didn't want to sit here and wait and try to fill it for an hour.
Yeah.
So filled.
Yeah.
Okay. I see now. I like this spread. IV rank is 100. I think the stock. I don't think the stock's grossly oversold, but it hasn't done as well as the other stocks.
Thank you.
I like your play, Nick. You did good. And since this is we're getting into the third one, we've got one more to go. 855-238-2789 or 855 BTASY. Be an opportune time to call right now. I've got 4 or 5 lines open. Let's hear from you.
Yes. Last one. Roblox.
I hate that stock.
I know this stock it's a tough one.
Somebody can tell me how to make money in RBLX. I would appreciate it.
I'm going to try and help you. Selling a call spread, the 145, 155 in October. I did it at $2. It's an out of the money call spread, looking for some short delta and something that's near highs.
What do you want to do in Roblox?
I did the 145, 150 call spread in October. I did it at $2.
145, 150 in October.
155. 10 points wide.
10 points wide.
Yeah.
145, 155 for $2.
Yeah. It's probably Roblox, I imagine, is rallying with the rest of the market here.
A little tiny bit.
Yeah.
Spreads 205.
There you go.
Maybe it's not. Trying. Thought we'd get filled, but market did rally up.
Yeah.
It did. Even the S&Ps are up 30 now.
Yeah. They've been trading in a pretty decent range. Where'd you do it? $2?
$2, yes.
204.
There you go. So 2 for 3.
Yeah.
That's a Batista pass.
I don't mind those trades. See, Roblox, top end of its range. Stock I want to be short anyway. Don't mind that. Volatility's decent.
Yeah.
Second one, volatility 100. I like that.
Yeah.
First one was a reach.
Wow.
That's
look how
2 of 3 is
2 of 3.
That's as good as it gets for a Batista. It doesn't get much better than that.
No.
You know?
You're a
D plus, C minus, like that's what it is.
You're a 2 out of 3 family. You're like a 67.
Well, we would be something like
you guys are like you're on the curve. You're around to like a 67, 68. It's like a D plus.
Yeah, exactly.
C minus, D
plus, C minus. That's perfect for us.
Yeah.
He considers a D plus. You consider us a C minus.
There you go.
855-238-2789 or 855 BTASY. Phone lines are open. Give us a call now. I'm going to go to Chicago. I got a Jeet. What's up, my brother?
Tony, how are you doing?
I'm doing good, my friend. How you doing?
Good, man. That was great meeting all of you. Nikki, are you still there as well?
He is gone out the back door.
Gone out the back. There was great meeting him.
He's the backdoor man.
Great meeting everybody actually in office. It was too short-lived, but nonetheless, it was a great event in office and in the show as well the next day. So
thank you.
Cool.
So I got a kind of a serious question here. I was speaking with a few young people, in their 20s, and we were talking a lot about trading, and the futures markets are really, really hot with the youngsters with all these prop firms, these digital prop firms, like Apex, Top Step, or whatever. But nonetheless, one of the things that kept coming up, and this is actually a really interesting thing, is in terms of futures brokers out there, if you divide them up into two different categories, one, if you can say like discount futures brokers like a Ninja Trader, Tradeovate, AMP, Iron Beam, and then there's like full service, if you want to call it that, traditional futures brokers like an Interactive Brokers, like a TOS, Tasty Trade, obviously, and so on and so forth. One of the things I see a lot of young people like really gravitating towards, especially like Ninja Trader and Tradeovate, is their intraday margins are significantly reduced. Like, for example, it's like if you're trying to get into like micro futures, MES or M2K or MYM, it's like $50 intraday margin requirements just for day trading. Versus, if you go to like, and correct me if I'm wrong here, Tasty Trade, your intraday margin requirements are the same as the maintenance requirements, correct?
No. Our intraday margin requirements are 25% of the overnight. So on MES, let me see what the overnight is. MES, the overnight requirement on MES, I think, is about 2,000. So intraday is a 550.
Intraday for MES. Okay, so that's still a little higher than it is, for other brokers. But what I'm saying here is
we're the lowest. We're the lowest intraday requirement for all the brokers, other than some of these futures only that let you trade for nothing intraday and then do whatever you want to do at night.
Correct.
Just because that's not really our business model. We don't feel like managing that risk. Like, I don't want some guy I don't want some, I shouldn't say guy. I don't want some trader with $2,000, doing a 40 lot of micro futures because we only charge them $50 per future, and then having a huge move intraday and sticking us with, a $200,000 loss at the end of the day. So I mean, we are at 25%. Interactive Brokers is at, I believe they're 50% of overnight, and I believe TOS ranges from 25 to 50% depending on the type of account. But I think we're the lowest at a straight 25% intraday, and everybody's the same overnight. Let's be clear about that. No matter what kind of firm you are, every single firm is the same overnight.
Correct. That's exchange requirements, right? Yep. Okay. So that's it. But one thing I want to make very clear is that, and I looked at the website as well, is that clear on the site as well? Because I will tell you it is?
No, it is. We've been that from day one. Intraday futures requirements at Tasty have been 25% since the day we launched the brokerage firm. We've never changed them.
Okay.
So we've never had anything different. We decided on that a long time ago for risk purposes. It gives us, we're not interested in like some scammer or something like that, but it's a very fair, the intraday rates are fair. Plus we don't want people getting stuck with a futures position where they can't meet the requirement once it goes to the full, to the full number. So it's really just, it's a number that we think is kind of fair industry wise. When you look at everybody else out there, I mean, granted, we don't compete with, Ninja Trader or Tradeovate or any of those things, but with all the firms we compete with, it's the lowest on the street.
Right. And see, this is one of the biggest, I think, hurdles, for younger traders. Because the thing is, when I was bringing up Tasty Trade, this was the biggest hurdle with people. Either they go to these, these digital prop firms, which I know very little about, by the way, or they go to like these Ninja Traders or Tradeovate, which again I know very little. I've always traded with like the bigger ones, the more well-known ones.
The digital prop firms, the prop firms are different because those have a whole different fee structure, and they also have a different capital structure. But for individuals, there's that's why some people trade. They really like Spot Forex because that's 50-to-1 leverage. I mean, there's lots of different things. That's why in different places around the world, not in the U.S., but CFDs are very popular because they have, up to 200% leverage in some cases. It really just depends. We just, for risk purposes, we feel good where we are, and that's it.
No, it's totally fair. Because the thing is that one of the biggest appeals to you guys is you're like a one-stop, everything type broker. So that's one of the biggest appeals I had with Toss. Still with them, actually. Quite frankly, you built an awesome platform there. So I still have those accounts, but I mean, it's one of the best platforms out there. It really is.
Thanks.
Execution is fantastic.
All right, Ajit, we got many people on. We got to go, man.
Thank you, brother.
All right. Thank you.
Thanks.
We're going to go to Carlos in Nevada. Carlos, what's up?
Hi, Tom and Tony.
Hey, Carlos. What's up, man?
Hey, I have a question. In the regular options, when it's submitted, you said that the customer accounts go first and then market makers.
Yes.
Right? They fill those first, right?
Customers have preference. So individual investors, individual retail customers like you, me, Tony, whatever, we step in front of the what they call prop or professional traders. Our orders go in front of those in the electronic book. Yes.
Does that apply for the SPX too?
Yes. It does not apply.
Okay.
It does not apply to ES or the futures market. The futures market, everybody's the same, and it's an electronic book. But in the SPX, that is any one of the listed products, and SPX is a listed product. Customer orders have preference.
Okay, great. Because I do a lot of zero-day SPX. So
yes, your orders go in front of any kind of proper professional order.
Great. Thank you very much. That's all my...
Sure. That's great. Good to know.
You got it. Sadnov, even the S&Ps staging a little bit more of a rally than I thought they were going to have today. I thought it was going to be more of an inside day. Even the S&Ps are up 37. It is a 0.5% move here at 64.62. NASDAQ up 245. That's gained about 100. The Russell's up 4, and the Dow is still down by 80. Volatility, those come in by 25 cents to 17.25.
Yeah, that NASDAQ move, Tony, after we opened, the NASDAQ was only up like 100, 110, and then it's gotten progressively stronger for the last hour. Right from the start today, I was like, I'm not touching the NASDAQ. I don't see that as the play today. I thought the S&Ps would maybe be a little weaker. On the good news front, we've got bonds up a full point. That's the way we've been playing them. On the bad news front, the S&P is up 37, wipes out yesterday's down move completely. The NASDAQ up 250 wipes out yesterday's down move completely. Some of the stocks that were up big that have turned around a little bit. Reddit was up 17 earlier. It's only up 6 right now. But Apple has stayed
what a beast that stock is. I mean, if you can get in a rhythm there, but it's hard.
Apple has stayed super strong. It's still up, 7.5, and Google has stayed.
Google's up 17.5. Yeah.
Yeah. I mean, I'm not sure if there's any other. I'm not sure if there's any other like crazy stocks.
Palantir was down. Now it's up.
Yeah. I mean, I still don't know if there's any other crazy stocks out there. Tesla's up $10. I mean, I don't know.
Well, don't worry about it because we got Liz and Jenny to take care of this for us. If they're on the floor of the CBOE, you're going to stay tuned. You're going to watch them and immediately find these quick little messages. See all the ladies and gentlemen in the SPX pit. You want to do that, Saz?
Sure.
We'll be back in 90 seconds. Liz and Jenny next from the floor of the CBOE. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air, and not stale takes, visit the News and Insights tab at tastylive.com.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven. What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews, and this was almost a show about one.
Liz almost missed the train today. Almost.
Sliding doors. Have you ever seen that movie Sliding Doors? Where
yes.
the doors were sliding closed, and Jenny had to be like, wait, she's right here.
And whoever my guest host would have been today, they might have taken your spot, and you would have gone a different path in life, and what would have happened?
I don't know.
What would have become of you? Well, I was just about to share something on Twitter, and I want to get this out there. Oh man, now I lost it. Now it's lost. I'll do it later. I'll do it later. I told a viewer that I'd get this picture out there, this new picture that we have.
How about you just post it with the hashtag LAZ, and then we'll put the comments with all the...
I'll get it. Maybe tomorrow. Maybe it'll come tomorrow. Okay. If it's not going to come today, it'll come tomorrow. But I'm glad you made it.
On bated breath.
So honestly, I was waiting for the train, and I'm looking around. Liz isn't here. Liz isn't here. I'm calling her. Where are you? She comes running around.
I was running as fast as I could. Jenny's going, stop the train. She's holding the doors open, using her mighty muscles.
The doors were closing, and I was holding the doors.
She put her body in between the doors so I could get out.
And I wasn't sure what was going to happen to me. If the train was going to start driving away.
I'm not going to lie to you. In my heart of hearts, I was like, I think I'm getting on the wrong train. Because it was so early.
It was so early.
I thought for sure I was getting on the wrong train, but Jenny saved my life. She saved my career path.
You know what? It was so early, and it was a different train. It was different seats. There was something weird going on. And the regular conductor was not there.
No one else seemed to be running for the train except for us. It was like an out-of-body experience.
Now, I don't know. So I was holding the door.
But not the door we usually get in. Totally different door.
No.
That we both managed to make it to.
But would it have closed? Usually the conductors are outside.
That's what I'm saying. The conductors are outside. No one was outside.
Saying all clear, everyone's in.
Yeah. No.
I
would have dove in.
Dove in, you lost a shoe. What if you lost a shoe on the way in?
They are flip-flops. I could have lost a shoe.
I was trying to run. I'm going to show you. I got to say, I was running too. I'm not going to lie.
I know.
So I have my little furry Birkenstocks. I was trying to run in those. You can't run in these. You can't.
No. Well, I gotta tell you,
the fur is no grip. There's no grip on the fur.
It was a real exciting way to start your morning.
Anyway, we made it. What do we have going on?
Unlike the markets.
SPOO's up 37, so that's exciting too.
So we needed a little excitement in our life because Cancel Crash, they've been up. We're just staying right here. It gave back it took back, not gave back, right? It took back everything it gave away yesterday.
Yeah, recouped the down move. Why don't we jump in the platform and look at the SPY chart just to see what happened yesterday?
SPY or SPX?
Whatever. It doesn't matter.
Since you saved my life, you get to tell me.
I don't know if I saved your life. All I know is that, I
We've
held
all
the door.
seen the movie Sliding Doors. If the door closes, then the train moves. Your life is completely changed forever.
Yeah. Right. No, I know. I don't know what would.
So you know
who would have been my guest today
So
if
you
you
know
didn't
one
make
of the
it?
tours. I forget which tour it was. Jenny and I have done a lot of speeches on a lot of
a lot
things.
of tours.
I did a sliding glass door speech.
Did you?
I did.
I was wondering why it was so fresh in your mind.
Yes. I did a sliding glass door speech. Big. If one thing changes in your life, the trajectory.
Yeah. Yeah. I don't know. What would you do if you weren't doing? Well, let's get back on topic. Let's look at SPY. Let's look at we can talk about where we'd be if something changed in your life. But for now, let's look at
that's a story for another day.
Let's look at SPY, how it rallied back.
Because we are live from the SIBO. Okay, taking a look at this. It doesn't look like it rallied back. Hold on, let me zoom in.
Okay, so here's what I will say. Yesterday, we were down on the day. We ended down on the day, but like down 20.
But I rubbed my eyes, Jenny, when I logged in at the end of the day, being like, did we just rally back to down 20?
But this is going to be a little lesson on reading charts, because we know we were down on the day. We know we were down on the day, and it's a green bar. Green bar, remember? And the day before, someone had said, like, oh, the last 5 days have been down days. And we looked and we were like, they're all green. They're all green. I don't know how that's possible. So, down on the day, green bar must mean closed on an uptick? Closed on an uptick or closed? We are not chartists, clearly. We don't even know. We thought you had to be a red bar if you were down on the day.
Yeah, now I don't know what's happening. But I know we were down on the day. We were only down 20. They did rally back like a phoenix from the ashes, because we were down over 100 during our show yesterday.
So maybe if it's closed on an uptick, it's green. I don't know. It doesn't make any sense. You would think if we were down on the day, it'd be a red bar. What chart is this? What is this called?
We closed above our open.
We closed above our open.
We closed above our open.
Are you getting that from the chat?
No, it says it right here. We opened at 6:37. You can't read it. It's very, very small over there. We opened at 6:37. We closed at 6:40.
Okay.
We closed above our open.
Maybe that's it. If you know when you're out there on...
If you know, you know. We clearly, so honestly, Jenny and I, we talk about this all the time. I'm a quantitative trader. I very rarely look at charts. Charts are just a guide for me. They're nothing. My bread and butter, where I like to spend my time, is in this page.
I like to look at charts. But just to look at them and say, where's this been? High? Low? Where am I getting in? Am I getting in at a high point? I never like getting in at the high.
No, I agree. But that being said, we're not chart readers, so just want to clear that up. We are quantitative traders.
So there's a rally today. SPYs are almost up 40. So really...
So we have a jam-packed show today, too, right?
We do. We're taking live tweets. Send us the tweet. Include the hashtag LAZJNY.
So we're taking live tweets. There's a little bit of activity back there. We also have Jacob. We love him. Jacob, chef's kiss to this, is starting fresh with Back to Basics on a series on 0DTE SPX trades.
Every time you say chef's kiss, I think of Annetta.
I know. She always says chef's kiss. And this is what I know my buddy Chris Vecchio had told me this yesterday, or not yesterday. He didn't call me and tell me this. But I wanted to say the 0DTE option volume. Look at this. I pulled it up. I Googled it, so it's not even from
This is from AI.
The 0DTE SPX is over 50% of options volumes now. It's taken it over. I heard 60% yesterday, but...
It's taken over. Those 0DTEs, they're hot. And Jacob has a new study, and we asked Jacob to go back to basics, put together an SPX 0DT study for us, a series of them for people who are newer, just getting into these 0DTs.
Because they build on each other. Now, I think that these 0DTEs are only 2 years old anyway.
Right.
So it is new, but it got real complicated. And in the beginning, we were only looking at, and to Jacob's defense, in the beginning, we were looking at what we do in the 45-day as tasty traders and trying to retrofit that into that. And I think we realized throughout those 2 years that sometimes the rules for the 0DTEs are a little bit different.
Well, also in the beginning, he was mostly testing strangles, which honestly, most people trading these 0DTEs, most retail traders trading 0DTs are not trading naked strangles. So we said, Jacob, let's take it back to basics. Let's teach some newer people how to use these 0DTs, and let's do defined risk, because how much is a naked strangle? 118,000.
Jump in the platform. I'll tell you how much
yeah,
strangle is.
let's look.
So let's jump in the platform. I'm going to go to 0DTE naked strangle. So, and I'm just going to go just out of the monies. I'm going to go straddle just because.
I wasn't too far off.
It's $128,000.
Yeah, $128,000.
I
was off by 10,000.
You got that laying around? Now, if you're going to go strangles, I'm just going to go to the standard deviation mode right there. You're still looking at $127,000.
Yeah.
Takes.
It gave you $1,000.
It gave you $1,000 back.
So, so we're going to look at defined risk. So I'm excited about these new SPX studies that Jacob's coming up with,
Yeah, we're very excited.
Hopefully we'll get some new people on board.
Yeah.
I have not been doing my 0DT trade, not today, not yesterday, with the market moving. Sometimes I take a step back.
I tried to, but I was in our platform. I tried to do them every day.
I don't do them every day.
Yesterday.
Like yesterday.
In my infinite wisdom.
Yesterday would have come back. Jack Tucker, Eric, they would have all come back.
No, I did mine. I did what they would talk about with the E-mini S&Ps. I did it the night before.
On last night?
No, the night, whatever night it was. I did it Monday for Tuesday.
Oh.
And that did not come all the way back. It came back today with this 30-point.
Yeah.
But we were still at the night before, so.
Right.
So I'm sticking with my SPX. All right, do you want to jump into the study?
Sure, we can jump into the study.
Okay.
All right, let's jump in. This is a new SPX study, Fundamentals of Selling 0DT Premium in SPX. Again, if you're new to the 0DTEs, hopefully this will help you get started. Matthew's mom, if you're out there watching, this one's for you.
This one's for you. And we will build. So this is going to be the beginning, the base of actually building on more 0DTE. Although he packs a lot in here.
Jacob loves information. These are always full of information.
And for those of you who are new, Jacob is our resident, what would you call him? Genius?
He received his PhD from University of Chicago, one of the top universities. He is very smart. Yes, genius.
Yeah, he's our resident genius.
Our resident genius.
That's what we call him, our resident genius. Okay, so moving forward on slide 1, 0DTE options are options contracts that expire on the same day that they are traded. These options are characterized by rapid time decay, giving them the potential for very fast profits.
Rapid time decay, they expire that day. So whatever you do, by the end of the day, they're cash settled. Cash settled. So that's the great thing about these SPX 0DTs. Any of the SPX, they cash settle. So you don't have to worry about taking a future, ending up with a long future, short future. It just cash settles.
And I want to be crystal clear on this because we are in the middle of the SPX bit. That's why we're doing this. These are SPX traders behind us. There are 0DTEs in lots of other products that are not cash settled. Like you can go into, but we're just talking about these right now. So for all intensive purposes, we're talking about the trades that are happening behind us.
Okay. In recent years, 0DT markets in major underlyings have seen a surge in popularity, leading to the kind of tight liquid markets that Tasty strategies and mechanics thrive in. If you don't have people trading, you don't have liquid markets. The fact that we have so many people, and you just talked about this earlier, how many people are trading these now, that makes for a very liquid market.
50% of the SPX volume is done in, over 50% is done in the 0DTs. That's a lot considering it's probably one of the most heavily traded. So just keep that in mind. While the potential for profit is significant, the risks are equally high as positions can quickly move against traders in with little time for recovery.
Your risk can be managed at order entry, and we're looking at defined risk trades today. So when you define your risk, you know your risk going into these 0DTEs.
Yes, you do.
Today, let's look into the steps involved in opening and managing an SPX 0DTE short premium position.
Okay. Now we're going to jump into the study. The buying power, the BPR, the need to define the risk. According to FINRA regulation, the buying power that a broker must reserve from your account for more short options positions is, and then he gives the formula. So we're looking at selling premium 0DTs. I just want to say that because that's the tasty mechanics. I know a lot of people, when they're looking at 0DTs, are quick. Do you want to do the quick scalp with buying? Today we're looking at high probability selling positions.
And when he puts this equation in there, loss from a 20% move in the underlying, loss from a break 10% past the strike, when he's putting that in there, that's for naked options. That's not for spreads. When you have a spread, if you sell a $10 wide spread and you collect $2, your risk is $8. If you sell a $10 wide spread for $5, your risk is $5. The total credit versus the credit you take in versus the risk adds up to the spread width. So with defined risk, we don't have to worry about that.
We don't. Okay, and then because this does not account for how unlikely a 20% move in the underlying is over the course of a single day, selling 0 DTE options almost always requires buying wings, which is what Jenny was just referring to. Long options, the same type and expiration, but further out of the money.
The wing width is the distance between your short and long strikes and is the primary determinant of the downside potential. So you know when you set your, and we'll walk through some examples, and you can see exactly what your risk is when you're putting these trades on, depending on how wide you make your wings.
And you can see he's got the bar right here, the chart to the right. He's looking at iron butterfly wing widths. So the iron butterfly, we all know, or most of us know, is selling the at-the-money straddle and then buying wings. So here, if it's an iron butterfly, he's doing $10 wide, $20 wide, $30 wide, and $60 wide.
And that C-VAR is the conditional value at risk. So the C-VAR number is the risk in most of these trades on that conditional value at risk. Yeah. So if you can see $10 wide, less risk versus a $60 wide, more risk.
So I'm going to go into the platform and we're going to go to SPX 0 DT just to show exactly what we're talking about.
Yeah.
If you're starting with the at the money iron fly means selling the straddle. So it's trading 64.50.
Okay.
A $10 wide is right here. What is the C-bar in that? 228.
228. And you're collecting. It's a $10 wide. You're collecting $7.75. So $10 minus $7.75 gives you your max loss up there, $225.
So you should see your conditional. Now this is average. That's why it's a little bit more. Here it's 215, 230. It's moving. That's your conditional value at risk. Versus, and then if I'm going to go $20 wide.
$20 wide. Here it says max loss on this example, $850, where the C-VAR is $769, close.
They're all
this is just, over time on average.
Yes, and then here's $30 wide, and then I'm going to show you the synthetic strangle too. So
$30 wide, $16.95 in risk, taking in $13 credit. C-VAR on this example, $1,500. So they're close.
They're all close. Now, I do like doing live examples of this because take a look at this. Now, I know these are done at 9 a.m., but if you were going to go $60 wide, which is another $30 from here, I think the common sense slide sticks in because there's $60 wide, which you'll notice all these are around the same price. I would not go $60 wide on the top.
No, if you can buy an option closer for your risk definition for the same price, then move it closer.
Yes.
Yeah.
So here's your $60 wide. This is basically a synthetic straddle. Now, watch this. But see, we're using only $4,000 in this example. I'm going to delete these legs and show you why we define our risk. Because if you were just selling that, it's $133,000.
And that's the naked option. That's the risk of like a huge market move throughout the day, and you've got those naked shorts on.
Yes.
Okay. So, and now I didn't get to the bottom. I don't know if I got to the bottom of 2. Looking at average from the worst 5% of losses over the past 30 months in a variety of iron butterflies.
Okay, that's the condition.
Oh, that's the condition, the C-VAR.
Okay. Then the third slide, a short option position will be profitable at expiration if the spot price is at most the credit received past the short strike.
That might sound confusing. Basically what you want is if you sell... If you're separating your options and you're selling a call and selling a put, if the underlying or if SPX ends up in the middle of those short strikes at the end of the day, you'll keep your full credit.
Here's the visualness of it. No, I'm just keeping it on the strangle, not those. But look at this. You're going to keep the full credit if SPX stays within this green bar because it's wherever the credit you received plus and minus.
Oh, not the full credit. You would keep the full credit if it closed right at 64.50.
You'll make money if it stays within.
Yeah,
you get the full credit if it stays right there, but you do not start to lose money until outside those parameters.
So basically, you could take the credit you're taking in. So here you've got 1460 credit, and your short strike is 64.50. So 64.50 plus or minus 1475 up or down. That will get you to your break evens. In between that area, you'll make something. That's at the end of the day. Most of the time, we get out of these trades before the end of the day.
And it's the same concept no matter what you do here. Your credit goes down a little bit by buying the wings, but now you have 1280 to work with instead of the 14. We just wanted to visually show that.
Okay. At Tasty, we choose short strikes based on their delta, how the option value changes with a $1 move in the underlying. Balancing call and put deltas creates delta neutral positions.
And then 0 DTE deltas can shift rapidly with the underlying. Staying attentive always allows you to leverage the extreme 0 DTE liquidity and keep your directional exposure comfortable.
So, and delta
is switching from iron flies to iron condors.
Right. Okay. And I just want to maybe try to clear up delta. It might be tricky for newer viewers. If something's in the money at expiration, it's 100 deltas. It's equivalent to 100 shares. If something's out of the money at expiration, it's 0 deltas. So when we're trading something further out in time, deltas don't come into play as much as the 0 DTE, because at the end of the day,
It's gonna be
it's
one or
either
the other.
100 or 0. Where if you're trading something out in time and it's 50 delta, well, it can bounce around 50 delta, 60 delta, 40 delta, but it's not going to get too crazy. Where when you're at the 0 DTE, at the end of the day, you're trading something that at the end it's going to be 100 deltas or 0 deltas.
Correct.
So that's why the 0 DTEs, I don't think you have to get wrapped up in deltas, but it's...
Well, he's giving us options here. That's what I'm saying. I just want to clarify this. They're giving us options because that first one is the iron fly, okay?
Okay.
And all these examples now, just to keep it clear, all of these examples are $20 wings. So if
Okay.
you've got the 50 delta $20 wings, oh, they're heating up back there. 30 delta $20 wings, 20 delta $20 wings, and I'll show an example of those, okay?
Looks like a little bit of a, oh, I think Spoos went from like up 40 to up 30.
Yeah. Okay, so here's a, what was the first one? The 30 delta?
50 delta iron butterfly.
We already did
or
that
the
one.
30 delta.
So the 30 delta.
30 delta
with
with $20 wings.
And the deltas are right here with $20 wings. So here's your 20 delta with $20 wings. There you go.
Now, this is the example. It's 10:19 Central Time. This study looks at putting these on at 9 a.m. So at 9 a.m., you're going to collect more.
You will collect a little bit more, yeah.
And why not 8:30 when the market opens?
It says it in the thing. It says it later on in the study. You want these because the 0 DTs are so different. You want the market to shake out a little bit.
Right. There could be some movement on the open. So we usually wait till 9 a.m. to put these on.
We just wanted to show an example of these.
Yeah.
Okay.
Okay. Let's see. 0 DT deltas can shift rapidly with the underlying. Did you?
I think we did.
Cover that one already. Higher initial deltas earn larger credits, while further out of the money positions are more likely to be profitable.
Meaning your 50 delta is going to give you more, your 30 delta is going to give you more than your 20, and your 20 delta is going to give you the less.
More than, yes. Okay. Consider the win rates and average credits of various short iron condors with all $20 wide wings and manage at 25% of max profit. Manage 25% of max profit means if you sell something for $10, you're going to take $250 profit out. If you sell something for $10, which is $1,000, you're going to close that trade for $250.
There is, I know we said back to basics, a ridiculous amount of information in these slides.
I know. When we said back to basics, he's covering everything.
He's
Jacob's covering everything.
He is. Okay, so then we'll go to the next one. So entering and exiting the trade. 0 DTE markets offer liquid entry and exit, allowing flexible timing.
The largest credits are typically available at market open, but many traders wait about 30 minutes for market stabilization before setting on strikes. And our studies have kind of shown getting into this at 9 a.m. seems to outperform getting in at 8:30.
It does. And the market does shake out. And sometimes the volatility doesn't know what's happening in the first 30 minutes, and things are moving around until they kind of get their footing. The cornerstone of Tasty Mechanics is capturing profits by closing winners. We have found success with lower profit targets than we use for longer dated trades. Agreed. So then here he's changing his profit target.
Because 0 DT trades are perforce defined risk, managing losers is less important but still valid. So there's a difference between managing a loser and managing a winner. Managing a winner is taking profits at a set profit target, a certain percent of your credit received, where managing losers might be trying to adjust the trade. We don't really do that too often, especially if we're starting with the iron fly, you know, short 50 deltas, short 40 deltas. I know we'll see some of our viewers adjust them if you're starting with 30 delta short strikes or 20 delta short strikes.
I agree. So I typically don't. With these are very like set it and forget it for me, the 0 DTs. But I want to show you this. Consider the win rates and average P&Ls of iron condors. So now this box is all iron condors with a 30 short delta. So he kind of split the difference in $20 wide wings. So here he's taking your profit target and changing it. You've got 10% of max target, 25% of max target, and no management. And look at how things change.
And I think here...
Negative 159 with no management.
That's with no management. So when we trade these 0 DTs, we always close them for a winner if we can. If we don't close them for a winner, we usually let them go. If they don't hit our profit target of 25% or 10%, we usually let them go. We don't close losers.
We
typically don't.
And my rule of thumb, whether this is right or wrong, but the higher the delta, the lower the percentage of target I'm looking for.
Yes. So if I have...
So here we've got the 30 deltas, which is why 25% of max profit makes sense. If it's the 50 delta, I'm looking at 10%.
10%. Because if it's the 50 delta, you're collecting more. If you're selling that 50 delta $10 wide iron fly or $20 wide iron fly, you're collecting more. So you're going to look for a smaller... The more you collect, I think the smaller your percent.
Yeah. And they've had, like I said, this is back to basics. There's been study after study about these, lots of different things, and I almost think this could be looked at as a menu. We have lots of people trading lots of different ways. You know, this 30 delta with $20 wide is very Jack Tucker-esque or Blue Wackadoo-esque.
30 delta, $20 wide. Now, I know this study had a lot of information in it, and Liz and I say this all the time. You know, our research team gives us studies, and we'll say, we don't really care how the sausage is made. We just want to know the trade. And so to keep things simple, if you were to just pop in the platform now and put on a trade, I think let's just show that. And we could show this 30 delta, $20 wide.
Well, I had those up. It's odd right now. If I'm going to go 30 delta, $20 wide, so...
Just to show putting it in again, you know, selling that put spread, selling that call spread, starting with our shorts at the 30 delta, making those $20 wide, just to see, okay, this is how I'd actually put this trade in that they're talking about here.
It's a different time right now because I had to make some choices. I'm going to go $25. The deltas are dwindling as we speak because right now
it's changing as the time changes.
Yes,
yeah.
I've got 36 delta or 25 delta. Those are my only choices. So I actually went with the 25 on both sides. 25 delta, $20 wide.
And so in that chart that we just saw, I think the best case scenario was taking profits at 25%. So if you're selling this for $465, setting a 25% profit target, you're looking for about $100. About $100 out of this trade.
Yes.
And the average P&L for this trade over time, testing this over the last 2 years, doing this every day, is $39 a trade on average.
On average.
On average. So if your 25% is $100, you know you've got losers in there.
There are losers built in there, but this is, I actually don't think, we talk about this all the time for a smaller account. Now, I don't do this in my son's account. I do something a little bit less aggressive, but I'm glad he tested this.
This is one of the last things he tested. So I thought it was worth looking at. And again, earlier in the day, you're going to get more credit for it.
You will. 9 o'clock, you're going to need a lot more than 10:25. So I'm going to go to the last slide. Here are the takeaways.
Okay.
In the most popular underlyings, zero DTE option selling is in some ways even more straightforward than longer dated trades.
Firstly, decide how much risk you want to take and use that to determine the appropriate wing width.
That's what I'm saying. It's a menu.
Yeah.
You take a look at these, and she might be trading something different than I am with a different risk parameter, you want to get farther away. It's a menu.
And if you're following us on Twitter, you'll see so many viewers are posting their zero DTE trades, and they're different, right?
They're all different.
They're different.
They're all different. Then select short strikes by balancing upside potential against the likelihood of winning.
Typically, we do this in a delta neutral way, but you can sell unbalanced premium if you want to start with directional exposure. Keep the wing width symmetric for BPR efficiency. So, if you want to skew these, you can have a wider put spread and a narrower call spread, or sell a 40 delta on the put and a 30 delta on the call. You can adjust these if you have an opinion on the market for the day.
You have an opinion.
Yeah.
And I find myself getting in trouble when I have an opinion.
I know.
Like
I try to not have an opinion. Well,
okay.
Those are only up 25.
I know. They're coming down. The liquidity of zero DTE markets means you can typically get in and out whenever you like. We have so far had the most success by closing winners rapidly, yes, and being patient with losers. But the real key is to stay attentive and active.
Okay. Thank you to Jacob, who put this study together for us, and this is just part one of a series he's making for the newer people coming to these zero DTs.
Yeah, for sure. For sure. So thank you very much, Jacob.
Okay.
Now that's the end segment, and that's going to go out to probably YouTube. But here's my question, Jenny. What's your go-to move? And this can be clipped, but what's your go-to move in zero DTE SPX?
Oh, me?
You jump around a lot.
I know. I change mine because sometimes I like just selling one side, and I know one of our Twitter peeps, Jackie, does too. Sometimes just selling one side. So if you just get a little bit of movement, you can get out of it quickly.
Correct.
And I know for a while you were doing that, like just selling put spreads, looking for a quick bounce, and getting out of it very quickly.
Yeah.
And so I'll bounce around between that and going to about the 30 deltas and making them just $15 wide.
So you'll do the 30 delta,
$15 wide.
Yeah, so that's
because it's not that much risk. And again, earlier in the day you'll get more, but if I'm going to the 30 delta and making them $15 wide, maybe $5 and a $15 wide.
Yeah, and you're risking that on there. That's not bad.
But you usually do the iron flies.
I do because of my son. So it's something that I'm keeping an eye on. I usually do the iron flies $10 wide for 10% profit. So I'm collecting here $7.75. I'll take it off for $70. Put a GTC in immediately for $70. The drawdown is less for smaller accounts. That's been my go-to move because I've got him on my brain.
Right.
But yeah.
So again, the world's your oyster.
It's just a menu. That's right. Well, I always say whenever we go to restaurants, the menu is just a suggestion anyway. You can ask. You can always ask.
Oh, go to dinner with me. I'm always getting things that aren't on the menu.
I know.
I know you don't
to
have
dinner with you. Okay,
All right,
there's a couple things we want to manage from yesterday. So we're in the platform.
I know. So yesterday was a big big moving day, and we put on a few trades that can come off already, I think. So in ZB, bonds were down yesterday. They bounced back up. They're up a full point from when we put this trade on. So we sold a 23-day put spread in ZB. We made about $100 on it overnight, which is 35%. What do you think?
We're out of that. I mean, honestly, because what we said was the 113 level. We put a put spread in. We have the 112, 111 put spread. $100 profit. Yeah, I'm taking it off. 35% overnight.
We could leave it and try to get the rest out of it, but 35% overnight. If we get another down move in bonds, we'll get back in. And next time we probably won't get back in the 23-day. We'll be moving a little further out in time.
I agree. Fun fact, Jenny.
Yes?
IBIT GTC hit today.
Oh, good. I'm glad. Because yesterday, IBIT, we were looking at possibly taking off for about 30%. And I said, well, I've got the GTC in there to take 50% profit out of it. Let's just keep that. And now we got 50%.
And it hit. So those are pushed out. I pushed out our ZB and I pushed out our IBIT. The IBIT was a Jade Lizard-esque position. Let's put another one on for next week, don't you think?
I agree. I'm going to get all of this out to the follow page.
Okay, so if we're looking at IBIT, we're going to go to the 9-day. And what we have been doing in here while you're pushing that out to the follow page is we've been using this call spread up here. So I'm going to sell the call spread first, and I'm getting about 21 cents for it. And IBIT, then I'm going to go down and try to buy something for under 20 cents, which put, meaning buying the put, because in IBIT we have to define our risk. So I'm going to actually buy the 58 put. We're going backwards.
Oh, you got to buy it.
I did. Oh, sorry. We're going backwards in a Jade Lizard, meaning we want to collect over the width of the spread, but because it is so capital intensive, we're using that call spread to buy the put to reduce capital. So now I'm going to try to get about $1 in, sell the 63.
It's close. You might even be able to sell the 62.5.
Yeah, you could.
Yeah, just to give yourself a little bit of room, because IBIT's had a run. IBIT's had a run yesterday and today. So,
kind of.
Well, yeah, I mean, we had that put that was in the money that's now out of the money in 2 days. In 2 days, it kind of saved it.
Well, and these aren't 0 DTEs, but we're going weekly.
Next week.
You'll look at this. We're in the 9-day option cycle here.
So we have been every week just selling the same strategy, doing the same strategy in IBIT, weekly, and go to the order chains, see what. I don't know how long we've been doing it now, maybe a month or two, weekly, and just collecting $1. But we have.
Yeah. We've been doing
we're up,
good.
So you can see $281 on this one lot Jade Lizard type of trade.
Yes, it is defined risk, and I'm going to show. This is the trade I'm going to put on, and I'm going to show it on the curve view. But I'm also going to remove this. This is what it looks like on the curve view. We don't lose any money to the upside. We have a 5 cents in risk, and here's our win
risk
rate.
to the downside.
Yeah, and we do have, it is defined risk all the way to the downside. We have 355 in risk, but we want to be in this in premium selling.
If this dropped down, we wouldn't just, say, oh, we're just take our $300 loss on this put spread. We would roll it, we would adjust it, we would do something different to this trade. Right.
But I want to show why we're going backwards in IBIT. I'm going to clear all this out and do it again. Trade. Let me go to.
Yeah, because why don't you pull up a traditional Jade Lizard and then adjust it?
So here, this is why we hold on to clear order. So everything's cleared. So a Jade Lizard would be 70 cents on a put, which is 50 cents under where we were. It's a 62.
We're supposed to only have 18.
I know, it's crazy. And then here, so this is your traditional Jade Lizard. You've got about 75 cents on a put and 30 cents on a call spread, and we're collecting almost the width, almost covering the width of the strikes. But in IBIT, it uses $2,458.40.
And we don't have that kind of buying power.
No, but Jenny and I both know, using our synthetics, I'm going to keep that call spread the same, Jenny. And we have to give up a little bit, so we're getting 22 cents for that call spread. I'm going to go down and buy something for 22 cents, 58. So we're collecting a little bit over.
Okay.
And then I have to pull up my strike by 1 on the put.
And now we're getting 95 cents, close to the width of that call spread.
We got 97 on the other one.
Yeah. No, I'm fine with this. This is great. And I'm not a huge fan of selling a call spread for 20 cents, but we are using that 20. It's not like we're just selling the call spread for 20 cents. We're using that 20 cents to buy that put to release capital in this trade.
And we've got tight GTCs in here. Let's say IBIT gaps up wildly up to 70. We don't lose any money. But we're not expecting it to gap up wildly. Take a look at these moves. And keep in mind, it's a week. So each week, if you get this little bit, you can get out.
Look at the, from Bitcoin. So this just follows Bitcoin. So look at the fall from that one day, that one shining day for Bitcoin. Where it got
I know.
Up.
That's why when yesterday you're like, Bitcoin's up, I was like, is it?
For yesterday it was. Yesterday it was. So we'll see. Will it make its way back towards its highs?
So this was the 125 level right there.
Yeah. Yeah.
It was the 120 in Bitcoin, not in IBIT. Just look.
Right, in Bitcoin.
So I'm going to ship this. I like having it in, and I'm going to put a tight GTC in.
And I think I might change mine to this. I've been doing just puts in IBIT, just puts or put spreads, and I might change it to adding on this call spread just to cover the long put.
Oh, I was like, what is happening? We still have our, let me get rid of our.
Okay, so if you get that pushed out.
That is filled. Let me put our GTC in for this.
So then I'll push it out to the follow page, and you can go to the follow page just so people can see where our trades are going.
The other two should be pushed. And then if you come down here, this little people, see these three people standing together? Hit the follow page. I agree to the terms and conditions, and then it's right here.
And so that IBIT trade, if you click on that IBIT trade, and our trades are not trade recommendations, but if you click on that, like we've done, we've done this before with other people's trades. If all we have to hit is duplicate this trade, and then it'll pull the same trade up in our account.
Nothing we do is a trade recommendation.
Nothing's a trade recommendation, but I do like to see, let's see what Fazia's been up to.
Okay. Let's see, Fazia. I haven't seen her in a while. So you just click on this person down here. Whoops. I'm going to click off of us.
And click on Fazia. Anything new is a new
Reddit,
opening
Google
trade.
Today. Ooh, we got to take a look at
No,
Google.
but that's like roll. You can see on the action. Roll. If it says pop, it's a new trade. So you can see Google pop, that's a new trade. SE. What's she doing in C Limited? Let's click on that trade.
She sold an iron condor.
Let's duplicate it.
I don't know that she's pretty aggressive in hers.
Let's see what she.
That's not an iron condor. Oh, sold a combo.
Sold a call. Just hit. We don't have to push it through. Just hit duplicate this trade. I want to see what pulls up. So she has the short 200, 220.
Yeah.
So just a short call spread in C Limited, 200, 220 for $1.65. Now I don't know what credit she got, but
because it was yesterday.
Yeah.
But that's the follow page.
But anyway, that's how we can see. Then I like to hit duplicate trade, pull it up, and then take a look and see, like, is this what I want? Would I want to adjust it?
How would I? From Mexico's doing. Has he been doing anything lately?
I don't know. He's a busy guy.
He's a busy guy. Oh, there's Jamal. I just took it off of everybody, and Jamal's been very, very, very active in Lulu. But let's take a look. What I wanted to do is take a look at this today because this is very topical. Google
I know
was up 9% today.
20%.
9%.
Oh, 9%. I thought I saw an 18. That's changed. It was like 20%. 9%.
I was like, don't test my eyesight. You know it's bad.
It's crazy move for Google. If you look at the chart, it looks insane. And I know Apple had a little bit of an up move, but nothing like Google. So if you see that jump, that's a wild move.
That's the wildest ride in the wilderness right there.
I know.
What's the reference to?
Big Thunder Mountain.
Good job.
I don't know what to think. When you see something like that, I know Fazia jumped in with the trade in Google. I kind of wait to see how things shake out.
But you never, I like to say, I have a 3-day rule when things move this crazy.
Yeah.
To the upside and to the downside.
Right, wait a little bit.
Yes, I mean, that's just a...
I'm definitely not going to fade it. I'm not going to say, like, oh, it's up, it's going to come back down. I'm not fading
Well,
it.
it was funny. I think it was Tom and Tony this morning. He's like, I'm going to fade Google. He's like, in a couple days. If it's still up there, in a couple days, it makes sense.
Yeah.
But yeah, so that was pretty topical today.
All right, one other trade I thought we could take off
right?
was CCJ yesterday. Yes, this was the one where it couldn't come to me, the uranium, or the uranium trade, CCJ.
1.21 gigawatts.
And we put this on. We went with a buffer trade. Now, could this make more? Yes. We've got another $400 in profit potential in CCJ, but we made $100 overnight.
Yes. we did. So the buffer trade is, I'm going to break this down. The buffer trade is, and it looks very similar to where it was when we put it on. The 60 put is to define our risk and to release capital, just a little FYI. The 75-70 put spread that we purchased is the buffer, meaning that we would then get long CCJ and give us a buffer of room in there. And then the in-the-money put that we sold, that 80, is our synthetic
Do you want to go to the analysis page?
Sure.
So I know so we took in $520 in credit. There's still, it's worth $418 right now. So if we buy it back for $418, we lock in $100. If we let it go and CCJ keeps going up, we can make another $418. We went through this with CRWV, where we put on this buffer, took it off quickly, and then on a down day got back in.
Yeah.
Where if we don't take this off and it drops back down, we won't have our $100 profit anymore. I would say take it off and wait for a down day to get back in.
And we're active traders. 20% overnight is pretty good. And it is so
It's
quiet.
so quiet. It's so quiet. Everyone's tuning in to the Liz and Jenny show behind us. It is
20%
very
overnight,
quiet.
I'm going to take it.
Okay, so...
Close the position?
Yeah, so close CCJ.
$4.20?
And...
Did we get filled? We did. I'll push that through the follow page.
That's fine. And then we can go to Twitter, because we've got lots of viewers popping in on Twitter.
Okay. So anything else we need to manage real quick? I just want to, you brought it up, so I want to take a look at it. Core weave, we had the buffer, we took it off, and we just wound up jumping in with a short put. The other thing that we want to look at is our other buffer trade in SPY. That did not work according to plan.
That's the Delta Buster.
Oh, the Delta Buster. But that is also a 44 days till expiration trade. So we've got October 17th with 44 days.
I wouldn't do anything to it with 44-day trade, defined risk. I would just leave that.
So let me ask you this. PLTR, 33%. It's got 16 days left till expiration. We got a 45-40 put spread.
I would close that. So typically we'll roll at 21 days till expiration. So we have not. Usually when we get around 21 days till expiration, we'll play roll it, hold it, close it. Do we want to keep a position? Do we want to move it out to October? Do we want to roll it, hold it, close it?
Do you think we could ever get a trader to come in here to play that game?
Maybe. We need to make some dice that say roll it, hold it, close it.
Yeah. Well, no, because we know what we need to do. You can't be like,
which is random. Let's just let the dice decide. Let the dice decide.
We should get a trader to play roll it, hold it, or close it.
If they would come down
if
here.
If they would ever not be afraid to talk.
But you know what? This is interesting. And so retail trading is different than pit trading. So
they would never take 30%.
I don't even know. Like, do you remember when we talked to one of our friends who was a big trader back in the day, and he's like, I watched your show. Like, what's this? What's that?
He was like, what's an iron condor?
Yes, what's an iron condor? Because pit trading is not the same as what we do as retail trading.
I think it might have changed a little bit over the years too.
I
You
agree.
do see some iron condors now going up in there, but a lot of times it's rolls and combos and things like that.
But that was when we started, like 15 years ago. He watched our show. He's like, what the heck's an iron condor?
I didn't know what an iron condor was when we started. I had no idea.
Yeah.
Because it wasn't quoted that way. They would come in and they would just quote like the 8 legs.
And we wouldn't.
Or the.
Yes, it was different. It was different. So
we could ask each trader, what is Jade Lizard?
They wouldn't. I don't know if they would know. I don't know if they would know what a Jade Lizard is.
I don't think they would either.
But again, it's different. Most of these guys behind us are trading for big firms. They've got positions on that other people are hedging.
Yes.
Anyway, do you want to pop into Twitter?
I do. Okay, so there's our volume right there. Okay, so I'm going to.
Yeah, you can refresh and go top down. Ooh,
the
Mikey.
Polish Warriors coming in ES. I love it. 0 DTE.
Oh, yes. Oh, and we didn't mention that in our SPX study about the PDT.
We did not.
No, we didn't. We forgot to mention that. We can put a disclaimer on there.
That's okay.
Okay. When we started moving up, I rolled up. So ES 0 DT winner. When we started moving up, I rolled up the long put. So create a reverse big lizard type trade. See, Mikey knows what's going on. He can come in and play roll it, hold it, close it.
Yeah, he can.
To remove
but
risk to the downside.
Like the dice. I think he wants to make the decision.
Yeah.
Yeah.
But still close for a net profit of $100 in 1.5 hours. Nice work, Mikey. Now,
and this is what I've been doing, like I said, with my son, and I did it the day before, and I probably shouldn't have done that, just because I was sitting with him.
In his account, you did it the day before?
Yes, that's when I know. That's how I know where products are really trading, is if I put it in his account.
Poor JD.
But it's okay. Like, he's done pretty well. So that's.
And I thought he was taking a break during rush week.
Oh, but it was Monday and he had nothing to do.
Oh.
They didn't start rushing yet. They start rushing at the end of the week.
Okay. He's a freshman in college.
Freshman in college. They start rushing next week.
I heard he was going to take a 0 DT.
First Monday off. He hasn't been doing it, so he calls me. So I put him in the day the market crashes.
Oh,
Mother
poor
of the year.
JD. Anyway, I heard, he was going to take a little 0DT break for Rush Week.
No, he's back. He's back. He's convinced so many people to open up Tasty accounts.
Good.
In his econ class. So we got a lot of newer
Good.
viewers. Okay, so this one, this is what you do to avoid pattern day trading.
Use ES.
Correct.
Use ES.
Okay.
But PDT should be lightening up, changing soon, very soon.
Look at this. Blue Wackadoo, Eric, done for the day. Threw on a put spread a la AI gone wrong per the options depth. 64.50 call wall and grabbed an extra 420, bringing the day to $2,007.
Eric.
Closed, done and dusted.
We need to have Eric on.
I am retweeting all these.
Yeah.
Repost.
Jeez.
Hold on.
But again, when people hear these numbers, like, oh, he made, $2,000 this morning, you're taking a lot of risk. You don't make $2,000 in the morning without taking a lot of risk.
Correct.
Yeah.
Oh, and then Ashvin, you said you tried the night before ES Monday. I wouldn't normally do them if I can't get around 16. Last week, most nights, the premium was closer to 14, which is not worth it in my opinion. So it's nothing. I would never say that you told me to do this, Ash. I take complete and total responsibility for my own actions. I was actually kind of bored, too, because the markets were closed.
Oh, someone...
That is a long time ago.
Oh, I'm not on the latest.
Nope, you're not.
I was wondering why my Twitter doesn't look like your Twitter.
I know.
I'm not on the latest.
I know. I'm going to repost all this stuff. And then Mikey comes in. Happy hump day, ladies. Takes me back to grade school listening to you take turns reading the lines in a presentation.
Such good team players. Thank you, Mikey.
Yeah.
Thank you, Mikey. One time, we were just talking about this. One time, Tom told us like 2 people could not present together, and he never does. When Tom gives a presentation, it's always just him.
Well, Tony goes with them now, but Tony does.
No, but they do
platform.
their own thing. Like
Yeah.
Tom does. They kind of do their own thing.
Yeah.
But when you see Tom on the road, and he did tell us once, like 2 people can't present together, and somehow.
What did I say? Challenge accepted.
We've been busy working on our MC talk, and it's going to be fun.
It is going to be fun.
It's going to be fun. We're looking forward to it.
Okay, Bob on Fire comes in. Thank you very much. Potential earnings plays today. There's a lot on this list. Fig is new.
CRM, AI, American Eagle. Ooh, I have that. I've got that.
GTLB.
AEO.
Oh, AEO.
What's going to happen?
HPE. Fig is the new. I want to look. Let's take a look at a couple of these, okay?
Okay.
Fig. That's the new. Right. Hold on. Let me see this.
Figma.
Yeah, this is the brand new one. If you look at the chart.
Right.
Okay.
So usually that's a giveaway when you see like dot 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 dot, and then it jumps to a new price.
Well, that's a SPAC.
Yeah. So it was. Just imagine that it just opened now on the August 1st.
Yes. When we knew that IPO was something that was talked about all over Fig.
And since it's IPO, it's gone slowly grinding down.
So it opened
134.
Oh.
I opened at 134, high of 142, and now it's trading only 68. I'm curious to see what kind of premiums in these options.
No, I'm sorry. It opened at 85. That was his IPO price on the day it opened.
Oh, okay. Sorry, my bar was on the next day.
Okay, so it opened at 85.
Yeah.
So, and that's just where it started trading. I wonder what the insiders got it for.
Oh, I mean,
the world may never know.
Yeah.
So
the rest of the world who bought it on opening day got in on the open at 80. What'd you say? 84, 85.
So you're $20 almost beneath where the opening print was.
Some of these IPOs have been good to me this year as far as selling premium in there because there's usually a decent amount of premium. If you go to the 2-day and you look at, there's not, I don't see great premium here. That expected move option is only $1. To me, that's not.
And take a look at this. And it's using the expected move option is $1, and it's using $5,900. So it hasn't released the capital yet.
So it's not like CoreWeave has been, where you've got nice premium and low buying power.
That's right. CoreWeave has always been very bizarre with the buying power.
I don't know.
Considering it's an IPO. So let's crumble up Fig. Now, CRM is Salesforce.com. That's going to be the big one I think people are going to be looking at. 4 million shares have traded. It's $253 product. It's got an $18 expected move.
Which, it doesn't seem, I mean, I'm not going to do anything in Salesforce.
It's too expensive for my blood.
I'm more worried about AEO. All my shares of AEO. Take a look at AEO. What do I do against all my shares?
Okay, I would throw downside ratio spreads against it, but that didn't work out so well for me in Marvel. Well, I forgot to in Marvel, so it doesn't matter.
Oh, I did those in Marvel. Yeah. Throw down, but I'm probably not going to be able to get anything. Right now, I just have shares. That's it. So let's see. I can do, so when Liz says throw downside ratio spreads against my shares, let's say I buy 113.5, sell 212.5. I know I'll have to pay 11 cents for this.
But it brings your break even to 11.50. It's not bad.
If the stock goes down, to 12.50, it goes down $1, then I won't lose on my stock.
Correct.
Yes.
That's the thought process behind it.
I know.
And I would say a lot of times I'm holding shares to sell strangles around it. There's not much.
There's not enough premium to sell strangles.
Let me show you this. Because Macy's had earnings today. Macy's had earnings today, and they're up 17%.
Oh, it's up 17%.
Does this dissuade you at all? I don't think they're the same, and I don't even think they're really competitors, but I just knew that they had earnings, and I knew they were up 20%.
What's A&F doing?
Didn't they have recent earnings, too? Oh, you know what else had earnings? And you said it yesterday. Remember, you're like, I wonder why Campbell Soup is always on this list.
Oh,
Earnings.
it had earnings.
Yes.
What did it do? Oh, well, A&F. I don't know what it did on earnings, but...
A&F's down a little bit. CPB, right?
CPB.
Yeah, Campbell Soup is up 5%.
Up $1.50.
Yeah.
There was a time I was worried. I was selling puts in Campbell Soup, and it kept going down, 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 down. I was worried about the fate of Campbell Soup.
You were? I don't think that thing's going anywhere. Tom exclusively keeps it in business because that's how he decorates his house. And I'm not kidding. He decorates it with Campbell Soup.
Yeah, he's got Campbell Soup cans. It's quite an.
But that is why it was always had the high rank.
All right. So also on this list,
AI. I want to look at AI. It says C3 AI, right?
It's AI, and I know one of our viewers, Alan, is in AI. We have been in AI. Alan has been in AI. We took a hit. Liz is in AI. We took a hit in AI. Let's look at this because
we have AI.
All right.
Hold on. Let me see what our AI position is.
Pretty ugly. You could see that 27.5 put that we sold lost $655 because now we're trading $16.61.
Yeah.
So maybe we turn this into something else.
Well, at least a zebra. So I'm going to close this.
Take off that 22.5 put for 14 cents.
I'm taking both sides off.
Oh, you're going to close the whole thing?
Yeah. We're going to close the whole thing, and we're going to open AI.
Yeah, let's just put on a zebra.
Yeah, we can open AI and take a look at something else. So if you're taking a look at this, Jenny, I'm going to ask you a couple questions. Zebra is a smart stock replacement strategy. That makes sense, and we can do it farther out in time. If you have earnings, sometimes if I have a farther out zebra, I might sell that zebra. This is over trading or active trading, however
I don't want to sell any call against this, not when we got in at 27.
No, that's not what I'm saying. But if I had a zebra in the 16 or the 30-day or whatever on earnings, sometimes I might close that and overtrade and just buy a call in the 2-day.
So we'll compare. A zebra in the 16-day is $3. How much is the call in the weekly?
Oh, it sucks.
The call in the weekly is, you're paying like $2.50.
Yeah.
Then just do, so what I was looking for, an in-the-money call with almost no extrinsic value. It's almost the same price as a zebra. So I would just go out to September and put on a zebra.
So you're
because we know if AI falls down to that strike, that'll have some value.
That's a cheap zebra.
I know.
So in this example, 16 days, I'm selling the 16 and a half once and buying 2 15s for $3.05. Now, the reason I said it stinks when I opened up the 2-day is that you're paying $3 for something and you're giving up extrinsic value. Here, you're not giving up any
extrinsic value. And let's say
usually I'm shocked by that.
I know. Usually it doesn't. Usually it's a lot cheaper in the weekly. Why don't you in AI? I was going to say go to the analysis page just to show how this is going to make money 1 for 1 if the stock goes up, but our risk is capped at $3.
Oh, it doesn't show it if I hold on. I'll cancel.
Yeah, because it's not filled yet. AI has been a real doozy, right? We got in, and it's fallen straight down.
Yeah.
So.
Okay, here's our $3 zebra.
I like the idea of having defined risk. We only have $300 in risk. If AI continues to fall, all we have at risk is $3.
Here's your 1 for 1 profit potential. And the expected move for the earnings cycle, give me 2 seconds, then I'll go back to it. Oh, sorry about that. I don't know what's going on with this.
Let's see. The expected move is $1.76.
So the expected move is $1.76. I don't know why this is so zoomed in.
You can. Where's your little?
It doesn't have the zoomer.
Well, we all got the idea. We'll make money 1 for 1 as the stock goes up, and our risk is defined at what we paid for it.
$2.99.
$2.99? Are you out of your mind?
I'm gonna ship this.
What commercial? Tell me again. What was that commercial for? $1.99. Are you out of your mind?
$9.99.
$9.99. Are you out? What is that?
I have no idea.
What was $9.99? A pizza?
$3.08. Okay, we're filled. $3.08.
All right.
I'm gonna push both of these through.
So that's kind of like we're on a wing and a prayer, hoping AI goes up.
We were on a wing and a prayer with our old position. I mean, we're replicating stock that
our old position was a short put, and that was $6 or $7 in the money. So that started as a high probability trade, which turned into a deep in the money put, which turned into synthetic long stock, which now we have synthetic long stock, but defined risk. I don't know. I don't know that there's going to be a big turnaround for AI, but what else can we do?
But we're in it.
We're in it.
We have very little left to lose. So
after earnings, we could sell a strangle around this zebra if we want to.
Well, and if it goes down to 15, the longs will become the at the monies. There is something to do. There is some recourse with them.
Yeah.
Okay, let's go back to that list because the AI saved us.
What AI saved it?
No, looking at this list.
Oh,
because
yeah.
I wouldn't have wanted to hold that through it.
No.
So CRM, we're not going to do anything. AI, we adjusted. AEO, Jenny is on her own.
I don't know what I'm going to do.
What is GTLB? GetLab?
Yeah, something lab. GTLB.
GitLab. $47, 81 rank. 3.95 million shares have traded, and it's got a $6.70 expected move.
They're crazy today in the pit.
They are. It's because there's nothing going on.
I know. GitLab. I'm probably going to... A lot of these earnings, unless I'm in it, I'm just going to wait till after earnings.
Yeah, I'm not going to do that either. And I'm telling you, and I know I referenced it, so I just got to show. Marvel really took me out. And today was up this morning, and now it's down again.
Oh, really?
Yeah. So this is we said wait 3 days. I mean, obviously, it's the opposite in Google, and it wasn't earnings. But Marvel went from 76 all the way down to 62, and it's staying right there.
It's staying right there. One thing that we could look at, it's been a topic of ours. We found an old photo. We showed the old photo of Liz in the Hewlett-Packard pit.
Oh, yeah.
HPE was on that list. Hewlett-Packard used to be a big hop-in pit. Now,
back in the day.
Yeah, back in the day. Over 9 million shares have traded in HPE. We've got $1.65 expected move. When we have such a baby move, sometimes I'll do an at-the-money calendar.
So you've got a $1.65 move. At-the-money calendar meaning, this is going to be cheap.
Oh, well...
I'm going to go 16-day. So I went the 23 just because I picked, it's trading 22.89. So I went with the 23. I'm paying 16 cents. 16 cents for the 2-day, 16-day.
Do a few of them.
Or, so here's your question. Or, if I'm selling the 2-day, I could go all the way out and pay 50 cents and give myself a ton of room.
Sure. Yeah.
So those are your choices. Now, you have the 3-day, 16-day where I can do multiples. So if I wanted to get to 50 cents, I could do 3 of those.
Yeah, just do the longer term. If then basically all we're playing for is HPE to not move that much, and you're getting the decay from the 2-day. So you're selling that 2-day option. The 2-day option is like 70, 80 cents.
Yeah, I mean, that's decent. What I'm
90
saying when we're doing this is that's a decent chunk in the 2-day option.
Right. If this doesn't move and you can get 89 cents in a day, and then October doesn't change.
Yeah.
So it's just a very low-risk way to try to get that earnings decay if the product doesn't move. And a $1.64 move isn't that much.
No, it's not much at all. I'm going to pay 52.
Okay. And then I think that's it for the day.
I think so, too. Let's make sure everything is pushed out, if you don't mind. So I'm going to check your work. I just did HPE. Did you push out both HIs, PLTR, and CCJ?
Oh, you're checking my work?
I'm checking your work.
Hold on. I'm going to get...
Your last one was IBIT.
Let's see.
So from IBIT up, you need to do...
Okay, CCJ, Palantir. What'd you close in Palantir?
The Palantir.
Oh, the put spread.
Put spread.
AI, we changed our trade, adjusted for earnings.
AI, HPE.
And HPE earnings calendar. Not an earnings setup calendar, an earnings calendar. But we are coming to that time soon of earnings setup calendars.
Oh, we are. It's an exciting time. The earnings setup calendars.
And I think, did we get to everyone in Twitter?
I wanted to make sure, kind of going through. Yeah, I think we did.
Yes, I think so. All right, everybody. Thank you so much for tuning in. I can't believe it's Wednesday already. We won't be back here till next Tuesday.
I know.
And next Tuesday is like our last week as we prepare to leave for Germany.
I know. I'm excited for the Germany trip.
I know.
All right, everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Glenn Freiberger here with us from Tasty FX. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. Get spent with my buddies, Mike and Glenn. G-Money. Glenn, how are you, sir?
Pretty good. How are you guys?
Hanging in there.
Middle of the week.
Yeah. We had an extended break, Mike and I. Did a little charity golf outing yesterday.
Together?
Fun. Yes.
Oh, that's awesome. What charity? Yes.
Through Wintrust.
Great charity.
Yeah, they sponsored it. It's not, we're not donating to Wintrust, but it was for the Chicago Police Department.
There you go. Back to blue.
Back to blue. Yeah.
It was fun. Grand old time.
Yes.
Is it like a scramble, or are you guys a team? Or
Best ball scramble.
Okay.
2 teams of 4.
for us.
Yeah, I don't even know what that means. I'm
Great.
just kind of.
Well, it's best ball, so everybody hits the best ball.
Oh, that's fun.
Yeah.
Nice.
Yeah.
Yeah, it was fun.
Great day.
But it's a scramble because you got 4 people on each team.
Okay, got it.
Best
Beautiful
ball
weather.
scramble.
They had margarita stations.
Get out of here.
Yes.
They
9 a.m.
had
tea
iced
time?
coffee in little squirt bottles.
Yeah.
They had
McDonald's sausage biscuits ready for us. Cigars, gloves. They gave you a fresh glove.
Really?
Yeah, yeah. They had a fully stocked cooler in the back of the car.
Or even got to your golf cart. There was just already beers in the back.
So that's where all the money went. How much went to charity? Any?
Very little.
That's a good question. That is a good question, yes.
Next year, we'll break even on the damn margaritas.
Yeah.
Yeah. Once upon a time, we did a tasty one.
We did.
Nice.
Which one did we do it for culinary care or something else?
I think it was something else. We went as part of a Tasty Trade team.
Yes, to another.
With Tim.
Gotcha.
Yeah. That wasn't that Jamal did one.
Jamal did a separate one, yeah.
I forget what it is for some sort of one of the schools here or something.
Something.
I'll go.
Nice. Every time I golf, I lose money, so it'd be nice to lose money to charity at least.
Yeah.
That's what I'm saying.
And my idiot friends.
Yeah, at least you know it's going to a good place.
Yeah.
How was your weekend? You do anything fun?
Fantastic. It was a long weekend still.
Yeah.
Monday off. My girlfriend organized a little wine tasting at my apartment on my patio, on my lower patio, not the upper patio.
No.
For my birthday, so that was fun.
Happy birthday.
Thank you.
Belated.
It's tomorrow. I'll
Happy
be in
early
San Fran
birthday.
with the Tasty Live crew. If you're in San Fran, say what's up.
Is that
on
this week?
Friday morning.
Wow.
At work by 11.
That'll be
San
fun.
Fran edition.
Yeah. You going out there early? Do you got like friends or something out there?
Going out there tomorrow. Staying the weekend. Yeah, I have some friends there.
Nice.
Never been, so should be fun.
Fun. Very nice.
Are you going to go back to that motel bar that you took us to last time?
That was in.
No, that was Miami.
That was Miami.
That was Miami.
You're right, it was. You could still fly there.
I could, make the quick trip from San Fran to Miami.
Across the
Just
country.
to go to the motel bar.
Yes.
Yeah.
Yeah, sorry about that.
That was quite the experience.
That was something else.
Yeah.
That was
You guys
wild.
no show for a while, not till October.
No, we're going
October 12th.
Yeah.
And then we got
One
San
month.
Diego after that.
There you go.
Yeah.
It's gonna be fun.
Better planned. It'll be really nice there when it's not so nice here.
Yeah.
But T-minus 1 day till football starts.
I know. Who you like? You a big football guy, or are you like
I'm a Bears fan. Let's get excited.
Okay. Are you like a football guy? Like, are you like do you bet on them? You do fantasy sports? I know you're in the fantasy league.
I'm in 3 fantasy leagues this year. That's too many.
Nice.
But I have some good crossover with players, so we can root, because there's nothing worse for when you're just rooting for everyone.
Yeah.
At the same time they're playing against each other, so we're pretty good.
See, I go the other
this
way.
year.
I go the other way because if you got, I have multiple teams as well.
Sure.
And I have some crossover players. You lose one, you're screwed and all.
Yeah.
You know.
But if you're just spread too thin, then you're not winning anything.
Yeah.
You gotta go for it.
Well, there's hierarchy. You know, you got like the Johnny Lee.
I make sure I have all the same kickers.
There you go.
There you go.
That's the easiest way to do it.
But yeah, trying not to bet this year.
Really?
I'm not. Turns out I'm not a sharp bettor.
Yeah.
As much as your ego would like to make you think so.
Nobody's really a sharp bettor. If they tell you they are, it's too much vig. There's too much vig. It's tough. You know?
And now sports books have all these
You got
taxes.
10 cents,
which is just
10 cents on each side. It's
But fantasy.
That's where you can get it back.
Yeah.
Daily Fantasy Sports, DFS. Go look it up. It'll drag you in. We already got Gus deep in the trenches.
Vanetta is not happy with me, and I have explained to her that it is you that is the problem.
It is me.
Yeah. It's not me.
Yes.
I have outlined the risks. Mike will say something like, "It's free money."
Dude, you draft a new team every day?
Well, at least one.
Yeah.
Multiple. But yeah, it's the best part about that is it forces you to have diamond hands because you can't cash out early like in the sports betting slip. If you have a parlay that's like doing well, they'll just give you some lowball number, and some people take it, and you're just losing money doing that too.
Right.
But at least with the fantasy, you're in it until the end.
Yeah.
You know?
You never take a cash out. You could always hedge. Always hedge. But the cash outs, not good.
They win always.
Yeah, they're just never the right odds.
Yeah.
You know, your cash out odds should be plus 1,000, and they'll pay you out at plus 700. You know, and you might as well just hedge.
Might as well. Yeah.
But yeah, speaking of hedges, no need to hedge to the downside, it appears.
I know we were, gallivanting on the golf course yesterday in the sun. Beautiful tan.
Yeah, very tan.
Yes. So we missed some of the action yesterday. Was the FX space as crazy as the rest of the market?
Not too crazy, but we got some good ranges.
Yeah.
A tale of two halves. You know, you wake up, see what the London session's done, and then that was all in the U.S. dollar's favor. And then once U.S. markets opened, reversed it all. And so made for some healthy ranges if you were day trading. Pretty good day for you. Got a lot of unique price points. But similar thing this morning. Again, we had some a big pop on the London Open, not in favor of the U.S. dollar. And that trend continuing after job openings data. We had jolts here at 9 a.m. Central Time. That was weaker than expected, and
boosted the bonds.
Yep. If you're
rate cuts,
if you're checking the CME FedWatch tool,
98% or something like that.
Wow. We went from for September, we went from 91% to 96%, which already priced in, but a little of that tail taken out of it. But we're already looking to October because what we love is 50-50. Looking at those odds, and those shifted from a no cut in October as well. By the end of October, if we're either 50 basis points or 25 basis points lower than where we are currently, it was pricing in a 51% chance of no cut in October. Now we're looking 51% chance of another cut in October. So
that's
the storyline now. We had Fed Waller, who already dissented last meeting, but today got up, said we should cut rates.
Will not bend
September.
the knee.
No, he's bending the knee.
Oh, he's bending the knee to Trump, not
to Jay Powell.
Too late. Too
not
late,
to Mr.
Powell.
Too Late.
Not to Mr. Too
Never will I bend the knee to Mr. Too Late.
No.
So yeah, that's what we're looking at. We're looking at the rate cut projections for the end of the year. We've got 3 meetings left. We know with some high degree of certainty, or markets are predicting, there's going to be 1 cut. Before this morning looked like probably 2. Now we're leaning more towards 3. So dollar's suffering a little bit here today. But we've seen it paints an interesting story, because over the past 6 months or year to date, we've seen a trend multiple months where this employment data has been the early indicators, ADP, JOLTS, say one thing, and then we're gearing up for non-farms on Friday, and that kind of says the other complete other signal. So historically, year to date, we've had outperforming non-farms right until that August. Was it accurate or was it not? Who knows? But now we have a new head of the BLS.
Numbers are just numbers.
Well,
we can move those numbers around.
My numbers or your numbers?
Yeah.
So I don't know if any of that reporting is actually going to change.
No.
For this month at least, speculation that they would move to quarterly, but for now we'll have the same system. So for both cases, if you're looking at these dollar markets, you can either say, yeah, we're now leaning towards 3 rate cuts, but I think on Friday that will absolutely confirm that with shocking.
So you think they'll move?
I'm saying it kind of sets you up for 2 stories now. So by no means is 3 rate cuts this year priced all the way in. So you have room for further dollar weakness from that end.
Wow.
Or we could have, like we had in months past, where this kind of early indicator, not
it's
indicative
the fake
of
out.
Exactly. And if we get really strong non-farm payrolls on Friday, Probably we're still looking at a cut in September, but maybe that dispels
some of the later this
exactly
cut 2 and 3.
how aggressive our cutting cycle will be. So nice to have on a midweek like this week, right ahead of a Fed decision.
Beige book today too. Does that matter? No, that's just that's just the recap of the last meeting. They strike some things out, put a little red note, change a little wording.
Could make all the difference.
Could make all the difference. Who knows?
That book can only be beige from, like, you can't change the color of that book because then you have to.
Unless you fire the person, the beige book guy.
Yeah. Anyways,
quick little market update, and we'll get into it. E-minis are up 19 here. Had a wild swing yesterday. We've pretty much reversed most of it. We've had about a 40-ish point intraday range. It includes the overnight session. They were basically, or they rallied into the close yesterday on the Apple, Google news, which are both skyrocketing higher. There were some antitrust stuff that got thrown out the window. Surprise, surprise.
Monopolies forever.
Yeah, it is what it is. But that led to kind of the late session rally. In the overnight session, they were pretty much unchanged. They were up like 5 or 6 in the later part of the night. Rallied into the open this morning. Got as high as 64.64. So we were about 20 points higher from here. A little bit of chop in between throughout the session here. NASDAQ up 150. Again, it's been the strongest of the group on the backs of the Google and Apple move. Google up $18, $19. Apple was up 7 or 8 at one point. It's only up 6 here, but those have definitely been buoying the E-minis and the NASDAQ, but the NASDAQ in particular. You have you have the Dow down 199, the Russell down 8, so the Russell and the Dow underperforming the rest of the indices. Not a shock given the move in some of those tech names. It is kind of a surprise, though, with bonds moving so much higher, full point to the upside, over a full point there at 114 and just about a half here. And a little bit of a volatility contraction involves at 1740. It's kind of a surprise to not see to see that the Russell is not kind of moving higher. You would expect if rate cuts were coming on the table, you get some movement there in the Russell. That's not really happening, especially when you look at gold and silver, which have both just skyrocketed. Gold's at a new all-time high here, 36.29. Silver at 41, almost 42 here. Both up just about 1%. They've had a massive move as well. Another kind of rate cut, trade, so to speak, in that you kind of look for the small caps as well as stuff that doesn't yield, right? Because rates are going to come down and gold and silver don't have a yield. It kind of gives them a bid if yields are also coming down. Bitcoin has had a little bit of a bounce. It was weaker yesterday as well. With the sell-off, it's at 112 and change here on the futures. Spot is up 700 and change at 111.7. And then Ethereum as well having a nice little day here, up $127. So definitely a mixed bag. It's been a choppy session here. Mixed indicators kind of at play here. I don't know what to make of it. It kind of tells you that market's a little uncertain about just about everything here.
Yeah, the Russell's an interesting point because, like you said, in theory, rate cuts supposed to boost small caps. But then the wrinkle on like job openings today, where softer than expected, you're seeing an increase in profitability per employee for all these big names like Google reducing headcount and still making more money. Does that play through in small caps? Probably not as much, that kind of scalability.
Yeah.
So maybe some piece there in terms of, what's coming, in terms of the labor force overall. Not the best picture for small caps at the moment, but who knows?
Yes. As you mentioned, dollar, super, super weak. Has been weak.
Yep.
We've been trading kind of both sides here. Had some Tasty FX positions that we closed out last week. I got a couple small little trades here, little Johnny trades here, but are there any currencies that really sticking out to you here on the session or whether it be a lot of volatility, a lot of people trading, a lot of volume, stuff like that. What have you been kind of looking?
Yeah, so a bunch of people trading dollar yen this week for sure. And that's been the big mover of the U.S. session this morning. We're down 0.5% from.
Oh, look at me! I got my Bollinger Bands on here.
There you go. So yeah, rejected from from 149.
No.
Like I was saying earlier, we had a pretty strong movement on the London Open. Some, UK speakers, Euro area data points, and that dollar yen actually tested 149 early this morning. Didn't spend any time there, and now looking at the daily chart, pretty much erasing all of yesterday's gains. Now sitting around 148. So
mid-range.
Yeah, it's in the middle of the range, but it's definitely moving, and moving with the most momentum here in the U.S. session. You've got Australian dollar back around 65.50. If that gets closer to 66 cents, that gets really interesting.
Yeah,
because that's the top of that range for the whole year so far. And then British pound, U.S. dollar, that's been a big mover this week on some UK news. Just like how our bond market picture is pretty complicated, steepening yield curve, a lot less demand in the longer term, and the short dated now dropping on some of these rate cut projections. There's also an interesting storyline in the UK too, where they're having some financing troubles. So interesting to see that play out here in the currency space, because you have them directly one against the other. But we had a big drop yesterday in favor of the U.S. dollar against the British pound. Now that's inching back to fill that gap. That would be at 135. So bouncing off of those lows, I think these markets definitely waiting for the reaction on non-farm on Friday.
Okay.
But yeah, as you have it now, nothing really at its extremes, but a lot of momentum, some coiling for what could be the storyline of the fall here, and heading into this FOMC rate decision. Is that next week? 2 weeks? 2 weeks from now. So if you're long dollar, short dollar, whatever your speculation is, I would just trust the historic correlations. If you're looking more towards the rate picture, look to dollar yen. Risk sentiment, you're looking to
as a
Australian
long
dollar.
If you want to be long U.S. dollar versus Japanese yen.
Yeah, that
would be a rate play for rates to come, or cuts to come down, rates to stay higher.
Correct. Yeah. So if you're thinking today's data is showing, maybe 3 rate cuts this year, and you're thinking they haven't cut all year, they're just going to do 1, 2, 3. Doubt it.
Yeah.
Then you could see that play out in this dollar yen market, especially.
Okay. I can buy that.
You also have, surprising to me, that through all of the risk on, risk off, sentiment changes, you're getting a dollar Swiss franc pair that's really stuck around that 0.8 level.
Okay.
That one, I think, for position traders is still historically cheap. Whether we're in a new era of dollar weakness, who's to say?
This would be another, if you think rate cuts are less likely than what is projected right now, or maybe we only get 1 or something like that, and that projection moves, you would expect the dollar to be stronger, a lot stronger. This one is probably a pretty, via the price extreme that we're looking at here.
Yeah, and a popular carry trade as well.
Okay. If you're long dollar.
Correct.
Okay. Mike likes that for his 50 cents or whatever he makes on it.
Scoopy.
I love it.
Yeah.
Absolutely love it.
Okay, so I'm going to do that. So I'm going to get a couple little long dollar trades. I also have that New Zealand dollar versus the Canadian dollar, and then I'm short the Euro USD. So I'm short the Euro and then long USD versus Japanese yen and Swiss franc. So I got a handful there.
So yeah, Tuesday morning you were looking pretty good on that short euro dollar, looking like it was going to break through 116. Now it's turning all the way back. So
Yeah, but that's what happened. I mean, you know, I was throwing darts on the golf course, you know, just a couple. It really wasn't though. I wasn't throwing the darts. I was putting. I got a new putter.
And it works?
Ooh.
Please tell me you got the one that goes like to your chin and you're just like
No. Those are illegal now. You can't do that. You can't have it anchored. You gotta have it.
Okay, but are they gonna tell you that at Winnetka Golf Course?
I certainly will. Illegal.
I do have the Alien Sand Wedge in my bag. It was a club I bought for $5 at the Jackson Park Golf Course. They had a bin of left clubs. It's one of those like infomercial sand wedges, like get out of any sand trap with the Alien Sand Wedge.
Yeah. Are you horrible at golf? Use this club instead.
Is it like this big or is it like?
It's a shovel. It's literally a shovel.
That is so awesome.
If you took like a wedge angle and combined it with like a 3-wood backing, so like it's like a huge,
just a chunk out of a 3-wood.
It literally, you cannot miss. Like you just,
sick.
and it only goes like the max is about 15, 20 yards. So it's just a greenside bunker. Just dig a hole and it just pulls the whole thing up. So
That's awesome.
It is very much illegal though.
Yep.
It is not a legal club.
It's aggressively illegal.
Yes. Any more goofy trades that you got for us? And by goofy, I mean
Goofy pairs.
Yeah, some things that have kind of, you know, that might not be on my normal radar.
Silly goose pairs. That's what
Silly
we should
goose
call.
pair.
We should call them.
Yeah.
That is what you should call it. Nothing serious because we're watching a lot of the dollar story this week with non-farm, but top of the range if you're looking for unique price points.
Yeah.
Australian dollar, Canadian dollar.
Okay.
Australian dollar taking Canadian dollar to the woodshed right now. We're looking at the top of that range dating back to March, and that one is one that's stuck between 90 and 89 for.
Is that because of the move in gold?
Could be, yeah. Gold new all-time highs.
Yeah.
Traditional, historic commodity currency, with the heavy weighting of exports from Australia. Absolutely playing a part there, but that's a historic price extreme. That's kind of the $1 pair I'm looking at, non-dollar pair I'm looking at right now. Of course, still $2 pairs, just Australian dollar.
Different dollars.
Canadian dollars.
Different than our dollars. So if I added this, if I was short.
And that one margined at 3% as well.
Yeah, so then I would synthetically be long. If I was short this pair with my New Zealand Canadian dollar position, I would synthetically be long the New Zealand Aussie pair. If I was short the Aussie Canadian dollar.
Right. Yeah. So yeah, you have a pretty. I reckon that those two pairs are highly correlated.
Yeah.
To the tune of 0.85, if not 0.9.
Okay. Is there another Aussie dollar pair where I could play into that you can think of?
Let's see. Yeah, I mean, if you wanted to go look at the Australian dollar, Japanese yen, that one's bouncing off of, with the move in Japanese yen's favor today, that one's bouncing off of almost year-to-date highs. Hit yesterday, hit earlier this morning, I suppose.
What about the Euro Aussie dollar? So if I was short this, I'd be long the Aussie dollar.
Right. Yeah.
Ooh, I don't know if I want that. I already have the euro. I'm short the euro. Should I just get more short the euro?
That's also a popular.
If you want to be long dollars, that's probably a pretty clean way to do it.
Yeah, and the most leveraged way to do it.
Okay. Let's do another one. We're gonna add a little micro. Little micro lot in there.
A couple of micro lots.
There you go. 2 micro lots.
Yeah.
Love to see it.
This is the second time I've done this, and the fun thing about this is that you'll have And you mentioned this last time, 'cause I forget which pair I had. I think maybe it was a New Zealand Canadian dollar pair. I think I took one side of it off. But you can close these as different lots. If they're the same size, they group them together then.
Correct.
So,
Yeah,
these are separate lots, separate trades.
So regulated from a FIFO basis, first in, first out.
Yeah.
But if you have unique lot sizes, you get enhanced flexibility in managing those positions.
Very nice. And of course, you can do the one-click close for all of them. Just nice.
Zip them up.
I know. One of my favorite features.
Yeah, very
is
nice.
that just quick little boom.
Yeah,
On,
and the
see it,
charts.
Give me my money.
The profit and loss on the charts. It's really quite something.
Yes, it is fun. Good. Any last questions for Glenn before we send him off to grab one of the worst lunches we have here? K-Fire.
Whoa.
I like K-Fire.
Hey,
but
hey. Whoa, John,
John likes
come
K-Fire
on.
too. But man, I totally forgot. I definitely missed the boat on the dumplings. They're definitely gone by now.
Oh, yeah. We peasants do not get the dumplings.
Yeah, I don't know how you guys do it.
Those are reserved for the early morning hosts.
Oh, there's James eating it up.
Oh, James.
So
That's
good.
rude.
I actually love K-Fire. I think it's nice and clean.
I think it's very good, yeah.
Clean energy.
Nice.
But yeah, you and
sauteed
Laura.
mushrooms.
Laura like despises K-Fire.
It's just
she's revolted by K-Fire. Okay.
Well, I will go enjoy it. Thank you.
Awesome.
And thanks for having me once again, guys.
Of course. Thank you for joining us. We appreciate your time. E-mini S&P 500 futures up 20 right now. Gold up 41. New highs there. If you got some questions, throw them in the YouTube chat for us. We'll be getting into some trade ideas. I got some capital sitting on the sidelines ready to go. So your trade ideas are welcome here.
Indeed. Yeah, we got the Cherry Picks newsletter pinned to the top of the YouTube chat.
Yes.
Just pop over to the tastylive channel. We're streaming live.
Yes. Did you post what Glenn wanted us to post to?
No. What was it? What was it?
Can't load my teams on here.
We'll get it up.
Yeah, we'll get it up there.
We'll post
Either
it.
way.
I did do some stuff this morning. So
Me as well. It's Johnny Trades Day.
A lovely day indeed.
One of the best days. My favorite day.
I had an HG short put spread. Closed that for $175 winner.
Nice.
And I closed the micro natty gas.
Yes, there you go. And the 3 handle.
Craziness. Just absolutely nuts. And that was a $230 winner.
Damn,
And then Costco, I had an iron condor there, right between the range, closed $140 winner there. And that, it looks like, is going to be all I'm closing today. Unless I close this CRM short put spread.
Earnings.
Which I actually am going to do.
After the close today, I believe.
Yeah.
Yes.
We're getting out of that.
Cool. Take a little
50-cent winner. Don't need to hold the risk.
Yeah.
Through earnings. So we're out.
Why not?
And that's pretty much it. Yeah, this gold move not helpful with my upside broken wing butterfly.
This one
Completely
is
in the money.
painful.
But pretty close. Only 50 points to get to the middle of the range there. I'm just not going to be able to close the risk on this. I'm going to have to hold the risk unless we get a swift sell-off here.
I'd have to just leg out of this put spread. Yeah. See you later.
There you go. There you go. But yeah, pop in your trade questions. We'll get to them right now on the YouTube channel. H. Montero, considering the Fed's anticipated 2 rate cuts this year that are already priced into the market, how do you feel about structuring a position by selling 30 delta options on the put side to lean a bit bullish?
On
the E-minis, SPY.
SPY.
Sure. You could. But we're also at highs in the market. So you could assume that the market has priced in these rate cuts already, and any further rally may not be due to the rate cuts that are already projected to happen. But yeah, if you think the market's going to be smooth sailing for the rest of the year, short puts are going to benefit from that.
Yeah, I mean, obviously, yesterday would have been a perfect time. Got a vol, you had a pop and vol, and then you had this nice little rally. But yeah, volatility has, is a little bit higher than what we've been used to in the last week. So yeah.
Yeah. But yeah, it's we're getting some kind of movement in the minis, but we're in this narrow range here. We need to pick a direction and blast through it. I like the idea of bonds higher later in the year.
Sure, if you're playing for that, you would expect rate cuts to continue or at least be at the expectations here. So trade that via ZB or TLT. TLT, obviously, we've talked about this before. It's a tough one to trade, and bonds in general. You use the futures to get a little bit extra leverage because, TLT is just kind of cash secured or not cash secured, but most of the time when you're selling these spreads, it's a lot of capital for very small reward. You can look at like leap calls, in the money calls as a way to, leverage shares in TLT. It's just not my favorite thing to do.
How much buying power are you currently using? How about a naked put in HIMS, 40 strike for a $2 credit in October? I'm using less than 50%. I do have a lot of positions on right now, but I will be closing a handful of them in the next week or two, so that'll free up some buying power.
I have 2 butterflies in September at higher prices. So
in HIMS?
Yeah.
Yeah, I have a call crab trade benefiting from this move. But short put at 40, yeah, don't mind it.
You do kind of the similar thing that I've been doing in here of selling a put and then doing the call ratio when you bring it up on the analysis mode. I think this is including my other ones. Hold on. So when you pull this up on the analysis mode, it's a synthetic strangle from a risk perspective, but you're financing this long spread via the call that you're selling here. So you're doing this, this call ratio, you're selling for $1.20-ish. So it does, you are doing this part for a credit. You could widen it out and do it for basically a scratch, and it'll trade closer to $2, give you a wider upside break even. But it's a short vol type trade, but you kind of play into the upside skew that you have here because this ratio, plays into the upside skew. You move the above 50, they only have $5 wide strikes. So going to the 55, you end up paying about 70 cents for this ratio. We can even show it here. So you pay about 75 cents for this ratio spread via the selling of that put. So I think I would rather just get the higher credit here. Gives you a break even at 60. That's probably near the 52-week high at 72, but it only spent a day or two around there.
Yeah.
I'll do that. Let's see if I can.
There you go.
345. $600 in buying power.
Yeah, I have the 45 October call, short 2 of the 55s in September, and then long the 65. So I've got the crab trade on in HIMS, which is a scratch right now after this rally, but it will be nice and profitable if we get another move like this.
338.
Lovely. I've seen some rising star segments where the trader is active enough to trade 4 times a day. What account size requirements do I need to do the same? It just depends on what you are trading. But if you're trading 4 times a day in and out, you need to have over 25K for the current.
For now.
The current pattern day trading rules, but
will hopefully go away in the next 6 months, let's say.
Yeah.
Through the end of the year and into early next year.
Would be great.
Yes.
But yeah, it depends on what you're trading, really. But 6 figures, I would say, is a good guess to cover a lot of different.
Yeah, you need at least 25 to do in and out. on a day-to-day basis. So, and number of contracts, you can scale that up. So, there's no like upside limit.
Yeah.
Obviously.
Generally speaking, what would you do with in the money puts 16 days out right now? Roll or wait? Usually we're rolling if we're staying in it.
Yeah.
But
it's an interesting conundrum because volatility is so low.
yeah, if you have deep in the money puts, maybe we just take the shares.
Yeah.
If you're not collecting a credit to roll it out, you might as well just have the shares and get the static delta. The whole point of the short put is to have extrinsic value that you can collect. But if it's too deep in the money to where you're not collecting it, you're better off with the shares if you get a rally.
I think with naked positions, it's a little bit, you'd want volatility to be higher, but when you're just naked short premium, you're getting the rolls are going to be substantial, assuming they're not deep in the money, like Mike was just mentioning. With spreads and volatility this low, I tend to hold those longer just because they don't have as much exposure to volatility. And I'd rather just get bailed out of those trades on a directional move versus the short puts where it's a little bit more subjective, or short calls or strangles or whatever you have.
Wanted to place an SPX calendar. It was rejected because the strategy is not allowed. Can you place an upside SPX calendar? Yeah. Yeah. Maybe you set it up to a point where you can't afford it. Like if you have to be long the longer term and short the shorter term so that the risk is your debit paid. If you have it opposite, you're going to have buying power requirement on the short option, and that is 120K.
Yeah.
So that might be why. If you had it flipped, that might be why.
Yes.
Is TLT the same as other future ETFs like USO and UNG, which degrades over time with downward drift due to contango in the futures market?
I don't
think so.
I don't believe so. I mean, like, there is a role, but it's just based on the projections of where the bonds are trading.
Yeah, they are. Seeks to track investment results of an index composed of U.S. Treasury bonds with remaining maturities greater than 20 years. So it's not the same where the roll is continuous and the contango and backwardation is aggressive. And you don't see it because if you look at a long-term chart history of TLT, you don't see that same $1 million price down to 10 like you do with other products like the VIX. We are at lower points for sure, but
yeah, and the dividend that gets paid out is the yield, and that's so the yield is the difference in the bond prices. And so you're getting paid whatever the drag would be.
Yeah. So if you go,
which is actually a drift because front is typically higher than further out.
Yeah. But yeah, it's not subject to the exact same thing. If you pull up a 20-year monthly chart and you type in UNG and USO, you see a drastically different chart than TLT.
Yeah.
UNG is really bad.
Yeah. They're all like this.
Yeah. VXX, UVXY.
Yes.
You name it. Ooh, UVXY. 24 billion previous price point. Now it's 12.
That would be fun.
Being short. Yeah. Let's see what else we got here. Bearish neutral ideas on credit card companies, please.
Bearish to neutral.
Like American Express at highs.
AXP. Visa. So Visa and MasterCard are kind of off the highs. AXP is at the highs. So we're bearish to neutral. It's tough because none of these have particularly high volatility. MasterCard at 13 IV rank, AXP at 9.8, and then Visa at about a 16. So you don't have super high implied volatility. Let's see some of these markets. You got earnings coming up in October, middle of October from most of these, I would imagine. Let's see. These are usually early part. MasterCard isn't out there yet. Visa looks like it might be in November or past this October expiration, just based on the volatilities. I say that because the volatility 79 days out is 25 and change. In the October, it's 22. When you look at AXP, which has projections to be on October 17th, so there is a little bit of heightened volatility relative to the back. It's not much here. But yeah, Visa and MasterCard look like they're in November, so maybe we do those. We can just sell a call spread in MasterCard.
Could.
That is directionally, it's a bearish to neutral trade because you're selling an out of the money call spread, so your delta is going to be small. Let's say if we go to the 20-ish delta, we do the 615, 625 break even, is up at almost 617 half. So it's out of the money. It'll be bearish to neutral because if you have choppy sideways movement, this will decay. Obviously, it has a little bit of short delta. You have about 8 short deltas on this sort of trade. I can get behind that. See if we can get something like we want to get around 1/3 the width of the strikes, but if you moved this to the 30 delta, which we could do here, and do like the 610, 620, you're going to get more towards that $3. We'll try that. 295. Let's see if. Not a ton of liquidity here, so I don't love this, but it's okay. It's a spread trade. Let's see, 292. 292. There we go.
Perfect.
Small little short delta play.
Lulu put butterfly. Surely it goes down on earnings. Maybe CRM to the upside. Yeah, Lulu's it's already at lows, but they are really struggling. It seems like every earnings announcement they just gap lower.
Maybe we could do something like we did or I did for my Johnny trades this morning.
A little disconnected butterfly?
Yeah, like right at the expected move on the downside.
A little condor action?
Yeah. Something like this where you're doing it for basically nothing. If you're selling this this 10-point wide put spread to finance buying this call spread, and you do it at a couple penny debit or credit, you basically have no risk to the upside. You have no risk to the upside, and the stock is at lows. And then if you get an inside or at the expected move to the downside, you can make up to $5 on this trade. So I could get behind that into the weekly expiration here. Let's see if I can get filled at like 2 penny debit. Really should have tried it at a credit, but I don't think we're going to get that.
I dig it.
Let's see if I can get.
And then CRM to the upside.
All right, I'm in for a nickel.
Sweet. We just had a Salesforce earnings preview. I just put it in the YouTube chat on the News and Insights tab on tastylive.com, so you can check that out. Earnings after the close today. 18-point expected move, $250 stock. It's decent implied volatility, but very high implied volatility in the weekly relative to October and November. So, yeah, this one is near lows. Does Salesforce finally rally?
You just closed the put spread, so you took some money, some downside risk off the table.
Yeah, I think
butterfly like I was looking at, like I did in Lulu.
Yeah, the put spread I had on only had 80 cents left to make. I had 50 cents on profit on the table, so there's just no reason to keep it on if there's a huge gap down. But yeah, I think a little butterfly action to the upside is what you want to do here.
Me or them?
Well, they want to play it to the upside. The peeps. Tom. specifically.
265, 270, 277 and a half, 290.
Small credit.
Yeah.
Yeah. 265, 270, 277 and a half,
diagonal.
290.
Do a cheapie. You want to put that same sort of 200-ish.
Yeah, you could do a 10-point wide diagonal for $8.
A cheap one, you do the 265 in September in the monthly, and the 270 in the weekly for $3. But that, if you get a downside move, it's basically over with.
Yeah.
You know, your risk is $300. Your reward is probably $400 or $500.
Yeah.
In this sort of trade, if you get a move to 270. What do you think?
I kind of like the cheap diagonal.
You know, it's a cheap shot. I mean, it's one where if you have a tail move to the downside, you lose $300 there. Whereas if you do an October weekly one, you probably lose $500 or $600. So,
how about we just crab this up?
You can do
that too.
Even shorter, the short with the September.
I was thinking October.
Yeah.
So you buy the 260 October, sell 2 of the 270s.
Okay.
Actually, you could probably just do the 260, 275, 290 for $7. 15-point wide crab for $7.
Yeah.
Kind of like this. I think I'm gonna do it.
Move this into the end of the week. You can see your kind of your risk profile. You have to keep in mind that volatility will likely come in.
710, I was just filled at. 260, 275, 290 to the upside.
15 by 15.
Yeah, 15 by 15. Nice profit potential if you get the rally. If you get a sell-off, you can roll the short options to the September and create a diagonal spread there.
We like these trades because they do give you a little bit of a buffer on the downside. You can even see here, I just moved to the end of this week, and then I contracted the October volatility by 10 points, which is probably on the higher end. But you can see, you still, if you get like kind of an inside down move, your risk is very minimal relative to your inside up. Potential profit is 2 or 3x what your risk is. But you do have that upside risk if you get an upside tail.
Yeah.
Even though you're long 11 deltas here on the trade entry, you do have a cap to where your long exposure is.
Yeah. Shooter McGavin.
All right.
You were doing some of those yesterday.
Ooh, shooter. I was. I mean, I hit 2 or 3
15-footers.
15, 20-footers. And they were nice. They were good. They were good putts. Clutch putts for us.
Yeah.
What did we end at? -1? Were we -1 or -2?
Something not great for a scramble.
That's okay. But we were 3-man. We were a 3-man versus
true.
a 4-man.
That's true.
So that's pretty good.
Short call ratio on BE.
BE.
Bloom Energy.
Yeah. I've seen this one kind of pop up in my
6570
feed. What are we doing?
6570 call ratio.
September.
October.
6570.
So these ones, I think you give up the credit and you go wider.
Yeah, you make this as wide as possible. You might even do this in September.
Yeah, you can do it you can do a 10-point wide for a small credit, or you can do. Yeah, 6570 in September for 25 cents. I like a little bit better if you're going to do that. But if you're going to October, you can do a 10-point wide for a small credit. Because these trades, you want to have that upside.
Yeah, you're playing into the skew. You can even see it on the.
Yeah.
I mean, like the upside, you have 30 or 40 points of more skewed to the upside.
Yeah.
I'll do the 60, 65, 70. You can move this to the 75 and do this at 60 cents if you wanted to.
All right.
I'm going to be a little bit more aggressive here. The 60, 65, 70, because you have break even at 76. Let's see if I can fill 120. There you go. That's not a good sign. Instant fill price improved. Oof.
Any trade ideas on Fig earnings today?
Yeah, the stock went nuts after the IPO and has come down pretty significantly.
Yeah, these ones are tough. I mean, I would just make sure you're defined risk in here, given the history of the price.
Cash secured too.
Cash secured is tough. Yeah, I'm not going to trade this one. There's not a lot of activity going on here.
Yeah, good look at Adobe.
Mm-hmm.
That's another in this space. Has earnings after the close today.
Mm-hmm.
No, middle of next week.
What is going on in Chicago, or just media narratives? Feels like media narratives. I was walking around all night last night, and it's totally fine. There's no issue.
Nah, we're all right.
Everything's gonna be fine.
Yeah.
Looks like a. Yeah. Okay. So calendar. Long the 6400. Let's see.
What are we doing? SPX?
Yeah. 6400, long the 910, short the 94. 6400.
910, 94.
6400.
Are we doing this puts?
Yeah. I'm not seeing the same thing that you guys are seeing. I'm seeing $2,400 debit for buying power. So if you have it flipped, then yes, you will see a $126,000 buying power.
Yes.
If you
have calls, if you're doing this on the call side, you're going to be using more buying power because you have that in the money call option. That one goes to, like it expires to cash. So your risk profile changes on that position versus the put diagonal where you're just still long that put option.
Yeah. Google short put spread. Stock is up big today. Yeah, I mean.
I can't do a put spread into this move, but power to you.
Huge move.
Yes.
Yeah, their little lawsuit got swept away, apparently.
Yeah, with an Apple to antitrust stuff.
Is UNH next?
I think that's a different.
It is different.
Type of
lawsuit. But if it gets swept away, probably see a similar rally. Let's see. But yeah, if you think it's going to continue, it's fine. I like defined risk in there. I wouldn't be selling a put in there into this move. That's for sure. Core weave high vol setup, please.
Ivy rank in the dumps here.
Yeah, and it's funny though. Ivy rank at 3, but implied volatility at 80%. That just tells you how high implied volatility was.
What about another little ratio here? The capital requirement has come in significantly.
Upside or downside?
I was going to do a put ratio on the downside. Let's see if I can do like the 80, 75, 70 at like 50 cents. See if I can get 60 cents.
What did I do here last time? I did a wide. I did
Butterfly,
a wider.
You did like a wider long spread to a tighter short spread.
Yeah.
All right. We did another one. 80, 75, 70. So my break even on the downside is like 65 and change. Put ratio in October. It's all about the ratios today. Laying into some of the skew. This one is upside skew, but still.
Sold a Jade Lizard in Lulu. Okay.
I mean, the stock is near lows, so I hear ya.
What's the most popular option strategy for me to go learn more about that revolves around earnings? I thought the tasty mechanics to play earnings is not recommended. It's not for the faint of heart, we'll say. But I think the biggest lessons for me that I've learned over earnings is if you're going to play them in a smaller way that you would play regular trades. So if you're using like 3% of your account for regular trades, non-earnings, use less than that for earnings trades. I like diagonal spreads a lot. I think they check off a lot of boxes, taking advantage of near-term IV, having a nice return on capital if you're directionally right. If you want to be neutral, Iron Condor is your classic setup. If you're selling credit spreads, I like to give myself more time than just the 2-day, unless you're doing like what we just did with like the Condor, which is like a butterfly disconnected. Yeah. But yeah, I would say neutral, Iron Condors, cookie cutter, but diagonal spreads are what I like to do or crab trades for directional earnings trades. Last one here. How would you set up a gold Brookwing butterfly? What's a good credit? So I've been doing these for $250 or around there. So I have one right now. I had the 3530, 3550, 3590. So a 20 by 40 in the 22-day. Yeah. So I usually just put the short options near the expected move, orange bar, and then do a 20 by 40. So like that might be a 3730, 3750, 37. Ooh, they don't have the 90.
Yeah. Do like the 3700.
Yeah.
3750. You know, if you wanted to go 100 points.
Yeah.
Depends on how much risk you want to have on.
Yeah. But yeah, the Broken Wings, I'm usually collecting like $250. And then if there's a sell-off, I move that in and create a symmetrical butterfly and lock in 50 cents to $100.
Got it.
That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn is at Glenn Fry Barger with an A. Go pester him about Tasty FX stuff. Also follow Tasty FX as well. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We're back. It's still Wednesday, September 3rd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how's your turn through the middle of the week going?
It's going, it's a little cooler here in Chicago, so got the sweater finally. So, it's a good time here, but we're chugging along, short week, and feels like a Thursday, but I keep on getting reminded it's Wednesday.
Why does it feel like a Thursday? We had a Monday off, so you could argue that it feels like a Tuesday, but Thursday?
Oh no, I must work backwards. I don't know.
Okay, that's thrown me for a curveball. My mind has to get wrapped around that. We're going to have to get wrapped around a few things here today, Thomas, because we're getting into a second half of the week now. Now, I guess if this is day 2, then tomorrow the second half begins. Stocks are rebounding a bit. Volatility outside of equities is perking up. You're seeing it in the metals still as gold and silver run higher. But the currency space, IVRs in the Canadian dollar north of 100 today. It's across the board. Oil volatility slightly higher as well. Bonds are making a move. So we have an interesting bit of price action. But vol sellers still may have the upper hand in many asset classes. We can go to the slides, Josh, because we want to talk about the context in which non-equity vol has risen and why the vol sellers, at least in stocks and bonds, still retain that upper hand. Thomas, our spotlight today is on cross-asset volatility. This comes from Mandy Zhu over at CBOE. She's their head of derivatives. Charts of how in the various spaces vol has behaved, realized versus implied. You can see here the gray lines being the actual realized vol. For the last several months, realized vol has underperformed implied vol in stocks. You see it here for the most part in bonds as well, and in credit, in oil for sure, since at least we have the end of the Israel-Iran war, but not so much in currencies. Currencies themselves, realized vol in both Eurodollar and dollar yen, two of the largest or the largest components of the dollar index, has been running above water for the past several weeks. That's not necessarily unusual, but when it does occur, it usually means something interesting is happening in the market, a regime change, a turnover, a big decline. When you look at the currency market, given the depth of the liquidity, we're talking about $7 trillion a day effectively changing hands. Does it stick out to you that the currency market's a little bit more jostled than everything else right now?
I mean, kind of. And when you look at the currency market, you're also looking at how bonds are moving between countries or the yields. And, overnight, we definitely had some bond movement, but more broadly speaking, recently, what's the ECB going to do? What's the BOJ going to do? So when realized volatility, the gray line on your charts is above, the implied volatility, means that the movements in the market have been larger than what options have been pricing in. So you can say it another way is the market didn't have that good of a read on what the market was going to do. That's another way to put it, maybe. But it makes sense for me. The euro, the Japanese yen. We've had policymakers on the BOJ backtrack on what they're doing. Then they're saying rate hike is appropriate. It might come. But just over the past year, traders haven't really had a good read on the yen. I think the euro's been a little bit more predictable. But yeah, this is some interesting stuff here. I mean, the equity market, realized volatility coming in under the actual expected moves. So, I mean, how do you trade this, though? How are you trading this, Chris?
When you think if you're a vol seller in equities, right, you think about dip buyers, they've been rewarded. The bond market in particular, while volatility hasn't been super firm there, if you've been fading vol and you've been playing long deltas or at least directionally neutral off the May lows, you've had a successful run the last few months. And so vol and bonds has kind of been the prices right, if not a little bit overpriced. That tells me that in this environment where we're looking at ZN and ZB, at least for me this week, this is a roll week. Is it appropriate to continue to trade directionally neutral, if not have a slightly upside bias? Sure. We haven't gone through a period where that's been hurting us, and in hindsight is not exactly a predictor of the future. But nonetheless, we're kind of on that track still. So if we go into a world where equity vol begins to outpace, the implieds, kind of a sign that you're going into a little bit more of a sticky situation. That's not where we are right now. But you see that happening here in March when you get the VIX starting to go up and it's, not great. And all of a sudden you get that bump in realized vol to catch up. And we have to play a bit of a period where we fade it. And sure enough, that was the right thing to do in April. We're not there right now, but buying the dip in stocks, still working. Any bumps in vol, fade it, because the market's not nearly as volatile as people fear it will be. It's a wall of worry to a certain extent, right? Doesn't that signal that as well, that there's more fear out there than there needs be?
Yeah, definitely. I mean, if you're an option seller in equities, I think this looks good that realized vol is below the implied volatility, right? Is that the same read you're getting?
I think so. I think it shows that the path forward, it's been working, continues to work.
So you continue to do that? Is that what you're doing?
Yeah, is what I'm doing.
Yeah, that's what I'm doing
in stocks
too.
at least.
Yeah.
Right. We're gonna have a different conversation in gold and silver, but that's for a different story. There's a really meager equity market rebound playing out today. I know the Nasdaq's up by 0.78%, largely on the back of that Google antitrust ruling where they're not going to have to sell their Chrome browser. The S&P is up a little bit as well, up 0.37%, Thomas. But the Dow and the Russell are fading off here. It's almost a mirror image. The Dow's off by 0.38%. Yes, Josh, we round out to the hundredths here. And in the Russell, off by 0.17. So inside days for the most part. In the NASDAQ, in the S&P 500, you're not seeing significant price improvement. But it is a hold around key levels. The S&P never really broke through the late August swing lows, and we're back above that 1 month today. Similar price action here in the NASDAQ, bouncing off of its 50 and trying to reestablish itself back above the 1 month right now. This is a big week. We do have significant jobs data coming up around the corner. How do you feel about the market here in stocks now? IVR is still below 20 with this looming non-farm payrolls report in 2 days' time.
Yes. So, I mean, at the end of July, we had those 2 big down days, right? And then kind of the end of August, you get a similar candlestick pattern. Not as intense, but kind of similar to close out the month there. And then you get this tepid rebound. I mean, last time this happened, we had a more substantial and immediate, we got bought up right away. Now it's kind of much more tepid, and that makes sense given that, and I know you've probably talked about this already this week, is seasonality. Just not a great month to put your chips on the table for equity longs. But I kind of see this, if this move goes into the afternoon like this, I could kind of see some selling here. And then, where do we go from there? Do we just consolidate a little bit? Volatility in ES 15.6, NQ, you're got a glare on the screen, but 17.5. So it's decent. I mean, you could find trades if you need to. I'm doing more short-term stuff right now, selling put and call spreads on 1 days in the ES and NQ, but I'm not taking a directional approach for the month yet.
Well, we've seen this happen a few times in recent months where we go at the start at least, and you get a little bit of a bump higher. Maybe actually this is just the second month, but here in July going into August, you get this bump in vol, end of July, start of August, and then it begins to fade thereafter. You have the buildup going into the Powell speech, and then Powell's speech, dunk. Maybe that's what happened here again, similar to the start of non-farm payrolls last month. We're getting a little bit of a bump in vol, people sell off. And so when you go into the report, it's not a stock market that's up at all-time highs. It's given some back. Vol has been juiced back. You get an all clear signal there. A good jobs report, not great, not terrible, not enough to make them back away from a rate cut, not enough to make them think that they should go for 50, but that 25, the price is right. The market's appropriately priced. That's probably the best case scenario. You don't want to see an economy careening into recession. So this talk of people hoping for a negative jobs report to give us 50 basis points of cuts, careful what you wish for. History tells us that the equity market won't like something like that over the next month, 3 months, 6 months, 12 months. So I see this rebound here today, Thomas, slightly promising. I'm still leaning long deltas in the S for what it's worth, both in terms of looking structured for a move up towards 6,700, although with only 27 days to expiration, this is a little bit of a reach during that time frame. If I didn't want to ride this to roll this at 21, it'd be a different story. But I do want to roll this at 21 to retain some intrinsic value. And I am going to be looking out closer to 58 days towards the end of October here, just being cognizant of this seasonality window where vol is low enough. And if I want to keep that longer term exposure, moving out to the 67, 6750, or even 6,800 long call spread, I'd be a little bit more comfortable than playing something this week with non-farm payrolls looming. So that adjustment needs to be made. I'm likewise nursing a MES position that is working-ish. Entry is about 64.35. It's just been a lot of chop since I put it on. But again, the structure is there, so it's not worth taking it off the table at this point in time. So leaning long right now, but very cognizant that if this is going to be a bad week, bad month, as your data shows, you published a report yesterday on the News and Insights blog about the seasonality. Up days, down days, basically split 50-50, but the average return for the month is lower. And over the past 20 years, it's basically a coin flip if it's an up or down month. So it shows that when it's bad, it tends to be really bad. And when it's good, How did you think about the seasonality when you look at it? Does September scare you? It's not a pretty month compared to really any other month of the year for whatever reason.
Yeah, I mean, long term, the seasonality is bad for September. Short term, it's even worse. I mean, the past 4 years, going from 2020, I mean, you're looking at a decline of over 3% in September. I mean, it doesn't mean that it has to happen again, right? It doesn't mean that it has to happen again. This time can always be different. It's just something you have to look at and consider when you're trading, and the past can only tell us so much about the future, but it is one of the, better things to look at. That said, I am being a little more cautious. Like I said earlier, I'm not taking anything, long term or beyond a couple days here directionally in equities. I'm kind of thinking the market seems to want, even though Fed funds futures are pricing in 92% for this rate cut to happen this month. It seems like, when that JOLTS data came out this morning, it really reassured the market. Do you think that even though market-based bets like Fed funds futures are pricing in a very, very high chance of a rate cut, do you think the market is still on edge about something throwing this story off with rate cuts? And can that be the big threat to the markets in the second half of the year?
No, I mean, I think we're in the window where we're going to get the cuts. Even with the JOLTS report today, 7.18 million job openings versus the 7.4 million expected from 7.35 million. So it does miss expectations. It comes in softer. It confirms that we're seeing a labor market weaken a little bit here. I actually shared today the downside risk to the U.S. jobs market in a tweet, Thomas, which I suppose I'll pull up here. These come from Torsten Slok over at Apollo. This needs to be a little bit bigger, in fact. But looking at the U of Mich expected change in the unemployment rate over the next year, measured against the change in non-farm payrolls advanced by 3 months, you could see that we're probably in a period of downside. And then the other portion of this, the survey of independent businesses, small businesses, NFIB, single most important problem, poor sales. Increasing, and relative to the unemployment rate, that tends to follow there. So a period of softness for the labor market looks like it's ahead still. We already had some in the background. That's enough for the Fed to start cutting for sure. Do we want to see significant weakness? No, because as the data sets have revealed, when you look at why the Fed is cutting, if they're cutting for recession reasons, equity market returns are negative 1, 3, 6, 12 months out from that rate cut. So we want a maintenance cut. And the way to convince ourselves a maintenance cut is coming is that inflation is manageable and jobs growth is still positive. But hot inflation and bad jobs growth, what a nasty narrative. We're not there right now, though. We're still in the headspace that things are good enough.
So a bad jobs report on Friday, bad news for the market is the way you're seeing it.
Yeah, like a negative jobs number would be disaster, like minus 2%. Yes, and NQ.
And even a bigger jobs number, that would be probably not good, but not as bad as a big miss.
Yes, because it probably tells the Fed that they don't need to cut as much as maybe the market's hoping they'll be cutting over the next few months.
Yeah.
Right now the market's priced for 2 cuts outside shot of the third. I'm sure it would love that third cut.
Right.
But if it's all of a sudden like just 1 to maybe 2, stocks won't like that.
That's the way I see it too. And I mean, what's the number we're looking at for Friday? 75,000.
That's the consensus forecast from Bloomberg when I last saw it. Yeah.
And I don't know this. Maybe you do. Is the new BLS chief or statistician, whatever you call it, is this job report under his purview?
That's a great question.
Does it even matter?
there's been no confirmations for any, like the BLS commissioner is a Senate confirmed role. So he hasn't been confirmed yet. Stephen Miran, I've heard people on Bloomberg and CNBC pronounce it all different ways. Someone please correct me. He's going to be going up to the Hill this week for his confirmation hearing. So this Trump advisor may actually get a seat on the FOMC Board of Governors, the person who's replacing Kugler, who retired a few weeks ago, before the September rate meeting. So like that adds another layer to this. If Myron gets confirmed this week, next week, okay, a cut's going to look more likely because that's an additional voice for a cut that's joining for the official meeting, regardless of whatever the jobs data shows.
And I think the market would be fine with that alone, moving towards another cut. I mean, there's another conversation. At which point does the Fed lose its independence a little bit more, and maybe negative long term? But I don't think that's really too relevant to the near term price movements.
No, we talked about bad rotation today. Just a quick look at the sector ETFs here, Thomas. I only counted 6. That's a nice little improvement. Now we're looking at 9 sector ETFs that are in the positive. Top performer gold, GDXJ sit near the top of the heap again. But then it's some rate sensitive stuff like the home builders. There was some chatter yesterday that the Trump administration is considering declaring a national emergency about the housing market to help cut red tape and facilitate the quicker building of homes. If it's an emergency in a few weeks, why not now? Either way, though, this would be a boon for the sector. And if you're getting Fed cuts and all this building, all this money pouring in from the federal government to the builders, it's not terrible. But you see here, they are the leadership here in this group. Also discretionary, retail. There are some things here that tend to stick out when the market's in a little bit more of a growth-oriented mindset. The same token, you look at the downside, while it's a lot of energy names, I have to say the fact that it's stuff like staples, Thomas, it doesn't bother me. Utilities, staples, healthcare, those aren't the names that we complain about when they're leading the way lower. That's really defensive. So not a perfect day, not the best rotation, a little bit weak, but also the growthy stuff is on top, and that's not terrible.
Yeah, it's kind of back to the status quo of, earlier this year. You got tech doing some work and things like that. Energy doing its own thing on the move in oil, but
energy always doing its own thing because of oil. Yeah, oil back to the midpoint of a range. We're going to get there shortly. We're going to keep moving here, though, Thomas, because I do want to touch on grains today per your request a few weeks ago. And we have to end a little bit early because we have an interesting truth or skepticism coming up next. Maybe, Josh, we're using that topic we recommended. Bonds are bouncing back. We have a strong performance here across the curve in U.S. Treasuries. We'll pop on over to ZN first here, Thomas, up over half a point now. And that's bringing us to the highs in the ZN-Z5 contract that we've seen going all the way back to the start of April. 19.6 IVR as well. So we've seen volatility perk up a little bit here. The high IVR for today is 20, and that's the highest volatility that we've seen since August 4th, according to my chart. August 5th. Either way, what do you make of this move here in bonds? This is coming on the heels of that JOLTS report, which shows that there are fewer job openings in the U.S. than anticipated. Locking in this cut?
Yeah, I mean, I get on the train this morning. It's before the JOLTS jobs data. Bonds are, not getting bought. After the JOLTS data, you see the effect it has on the market. 10-year moving up on it. So it seems like, that's why I asked about the rate cut being locked in by a slightly weaker labor market. It seems like the bond market especially like that. And that's inverse of what we saw overnight in the global bond markets, Japan, the UK. Yields were moving higher overnight, and the U.S. yields were mostly following that move overnight as well until it disjointed on that jobs data there.
Well, you see here that bonds are also up now over a point, 1.6 ticks. The shift in the Fed rate expectations curve, 92% chance of a cut in September yesterday. Today after JOLTS, 95.41. Odds of a cut in October yesterday, 48%, now at 51%. And then for December, the odds of a third cut this year have gone up from 31% to 34.5%. So there is meaningful movement, right? Labor market weakness subsumes inflation concerns longer term, because if the labor market weakens, you're sucking aggregate demand out of the economy in theory, but also in observed history that undercuts a meaningful inflation impulse. And then we think about what happened, the oil rise in 2007 and 2008, Thomas. People are freaking out about inflation. Granted, it's one of the reasons why the Fed doesn't cut as aggressively going into the global financial crisis, hindsight being 2020. But the Fed was able to keep rates low after the global financial crisis because of that aggregate demand destruction and just the persistence of high unemployment rates for a number of years. So to that end, if the labor market's weakening, the Fed looks through inflation and the one-off bump, as we've shown here in numerous times over the past several months, the Fed sees tariff inflation path, one-time increase, then it continues along the aforementioned path. They're going to cut rates for potentially avoiding a recession. Historically speaking, since 1980, what two asset classes have given you the best returns during a recession? Bonds, gold. What's been doing well here this week, Thomas? Bonds, gold. Bonds have clearly subsumed yesterday's move. And this, before I get off my high horse, this is a beautiful technical bounce. That's a bullish engulfing bar. We set a new low relative to yesterday, only to move through yesterday's high. Meaningful turning point here. So you get a softer jobs report Friday, maybe not 75K, but heck, even 75K is soft. That's a pretty soft number. 115.5, the top side of the recent range, that's got to be in question right now. So thinking about all that, okay, I have a bond position here that's just quite frankly got to go then. 23 DTE ahead of this Fed meeting, or excuse me, ahead of this non-farm payrolls report. There's no reason to take that kind of risk because it would be time to roll it on Friday anyhow. I'm going to get out of this now. It's been a decent trade over the past few weeks, just playing the range in bonds, trying to get it going again on a longer term time frame. But right now, it's time to get out of anything directionally neutral, I think, going into Friday's non-farm payrolls report when it pertains to bonds or notes. And so notes have to go too. ZNZ5, it's not as pretty of a day, but we got to get rid of you as well. This directionally neutral stuff may not be appropriate anymore, especially as vol is moving up. So mindful, there could be a bit of a change in sentiment and tone. This notes position, whew, $15. Great. I can buy myself a sandwich.
Yeah.
So much for that one.
Yeah, I think that's right to get out directionally neutral for bonds. I'm long ZB. I'm going to stay long. I'm 50. I'm at the 50 whatever day out, 52, 51 for a long call spread, 115, 116 in ZB. I'd prefer there not to be a jobs report if I'm taking this trade right now, but there is, and I think the trend is going to hold up here. I think it's a pretty strong signal going into the rest of the year. Like you said, recession, what goes up, gold, bonds, gold sending the very strong signal with the move over the past week. I think bonds are just going to follow higher along with it.
You know, when we think about the way this bonds market is shaping up, I can't help but think, I'm going to just pull up one of the education pages from IG here real quick. This looks a lot like a cup and handle. Maybe it's just me and how I'm viewing the market, but here you have your cup, or maybe this is your cup and handle action that's going on right now. We're carving out a base. We're carving out a low. The swing high that we have here on May 1st comes in at 112, 20 and a half ticks. Where do we find ourselves right now, Thomas? 112, 20 and a half ticks. So I suppose if you wanted to lean short, you could be short for the rest of today, hoping that we don't break through. But if we're starting to break through here, not only is directionally neutral not appropriate, let's look out to 51 days and let's look at the 114, 115 call spread. This is a decent trade setup to take some risk right now, as far as I'm concerned. Given what's ahead of us, given what the labor market that we see and the jobs data coming down the pipeline, 37% pop, long the 114, one short the 115. You're risking 1 to make 4. I like this much better. I like to be directionally neutral at the long end in ZB because there's all these fiscal hijinks still going on. But notes, that's a different story here. So rotating out of the directionally neutral in ZN and ZB in the 23s, putting back on directionally neutral in ZB at 51, going long out of the money call spread in ZN at 51. The stars seem to be lining up this week for that kind of move.
Yeah, I really like it because if you lose small. If you're winning on it, you're winning big. You got some time ahead of you. So that's a really good trade. I like that. I might jump in there with you on that.
The charts are evolving, and we need to be cognizant of that. And this is a really beautiful hold of the 1 month. We're seeing this period of higher lows and higher highs. It's continuing here. The high for today is 120, 112 and 21 ticks. So technically speaking, we did just punch through that May high. So we're continuing this trend of building up and building up. Let's not ignore it. So yields going down. Maybe that's one of the reasons why metals keep mooning here. I got out of some of my gold exposure yesterday. Feel like a dang fool for it today, Thomas, because gold's up another 1.27% right now. That's $45.30. That's 3635.50 now in the GCZ5 contract. I was at 3 DTE, so I saw no reason to continue to hang on to the 30, if it was 3550, 3600 or something like that call spread, or 3500, 3550. Okay, but now this keeps running up. Have we gone too far too fast? First off, without even thinking of any of the news that may be driving this. It's a 40.5 IVR. We've rallied what now? 6 days in a row from 34 up to 36.35. Do you fade this move?
So I think it has run up too far too fast because I've punished myself for not being in this after being in silver and or gold at least at one time over the past 6 months and missing this move. I don't know if I want to fade this move. I think I'd rather wait for it to either consolidate a little bit, make a small pullback, and then get long again via something like a long call spread, since we usually see volatility expand when gold goes up. So, if gold had the different relationship with volatility, maybe I would sell a put spread right now, but I'm going to wait for it to at least consolidate a little bit, then take a position via long call spread.
If only to make a little bit of a point here, right? Just showing how there's some call skew in this market. If we were to go out to the 20 delta puts here in the GCZ5 contract, so that's 55 DTE, you're looking at a price of 34.45. You go out to the 20 deltas here, you're closer to 3,900. And so the only point is that we're $270 away from 3,900 to the upside, and we're only $200 away from the 34.40s to the downside, Thomas. That's also one note here, where if you want to be a vol seller, you really have an opportunity to do it because of the call skew here. But I personally hate selling calls in gold because of that double tap that we've seen over the past 2 years now, where when gold prices rise, there's been a contemporaneous increase in volatility. So the fact that gold vol is going up day after day with gold prices tells me that this is a sustainable move. And if we have any setbacks, as has so often been the case, it is a buy the dip type of environment. So I'd rather be thinking, if I'm trying to harvest vol from here, it is trying to sell puts, but finding the level that's reasonable right now. I mean, the 1 week moving average, which you see the blue line here, we've closed above it every day since August 22nd. And since then, it's really been a bounce point for gold. If we wanted to play against that 35.50, we could chase this up to the upside, selling a call spread down here. But that's a big contract. That's a big contract at 55 days right now. You're putting out, thinking about this being like a $2,500 or $25,000 account, Thomas, setting aside $1,800 of buying power, risking 2 to make 1. This thing could come against us and come quickly. So I'd rather wait for a setback to get a better opportunity to get some new long exposure in gold rather than chase it after 6 days up when we're, 3% plus off of our 1 month moving average. It's a little frothy from a technician's perspective.
Yeah, this is when options in micro gold would be a good thing to have. But we don't have that, and that is a lot of buying power, you're right. So, I'm not doing something like that if my account size allowed me to, I'd probably be more serious about, that kind of trade. It's just a big contract. You're right.
Well, there is the new contract on the platform, Thomas, the /10ZZ5 or 10Z. It's the 1 ounce gold futures, which are available here. So if I were to put on just a single long 10Z contract right now, the buying power used is $82.50. So this is more manageable. It's more reasonable. I think the tick value is like 10 cents. So it's a much different trade. Whereas you go to micro gold, that's $1. If you go to big one GC, the tick value is $10. It's a different way to trade the market, but GLD is another way to express this. Of course, it doesn't need to be futures. There's perhaps more liquidity across a plethora of strikes, depending upon what time frame you're trading. What is working though, Thomas, because there was no reason to get off that train with the expirations we had, silver continues to run. $42 now, 9 cents as we press up into a 1.2% gain today. What made you decide to break my heart last week and get off the silver train?
I had a nice little profit, and I thought I'll take it, and did not know what was going to happen this week. So
no one never knows.
Having a little hindsight, FOMO, I guess, regret on getting out of that trade, but it was a positive trade. It worked out. So I'll.
So when do you get back in?
When do I get back in? The next pullback, I mean, to that previous swing high, if we could pull back there. I don't know if we could get there. This move's starting to run a little bit away from it. Maybe back to that 5-day EMA you got on there. I do more of a 9-day for my analysis, but somewhere around there, when we get a pullback, some of this froth gets taken out. I think you're going to get a lot of profit taking coming up here in the next couple days, maybe especially before the NFP. Some profit taking in gold and silver. I see that as maybe a viable time to do it.
Thomas, I'm taking everything off the screen except for that band between the 1 month and 50-day moving averages, which if you've been getting long silver exposure near the 1 month, really at any point, and it looks like we're good on that ZN, we've had an opportunity to get some long exposure. So this is why we say it's a little frothy here. Find me the last time that we were like 10% above or 7% above our 1 month moving average in silver prices.
Yeah.
And show me that wasn't a place where the market was getting a little frothy and gains became harder to come by. So laying on new exposure up here is a difficult thing to chase, even if you were just in it, right? And psychologically speaking, I personally hate when I get out of something and then see it keep running. Nothing bothers me more. Yeah, but the answer is not to chase. The answer is to stay within the mechanics, which in past episodes, it's been observing the levels and keeping an eye on where the technical trends are and what are the candlesticks doing when we reach these levels of support, and does it substantiate staying long? So if there's a pullback, right, ideally, where does it occur into? 40 and a half, right? And then we're not so far away from our 1 month, and then the longs continue to make sense. So,
yeah, I mean, chasing it's something easy to do if you're a new trader. You got those endorphins, that adrenaline rush. Luckily, I have no more endorphins in my body. I'm spent on my lifetime allotment, so I guess that's good. But it's patience is probably the thing to do here with the metals.
Oil back to the midpoint of its trading range, which has been all reliable here for several months now in crude. We saw the bounce off of it yesterday. We returned into it today. Consistent with that, one of the points that we had mentioned on yesterday's show is ultimately shifting some of the exposure there in crude. So at 14 DTE, back to the midpoint of the trading range that we've been observing, it was time to get out of this. So in the CLV5 contract, that was jettisoned. But moving out into the CLX5 contract, Thomas, does range trading in oil make sense when we're near these levels? I personally still think so. It's been a trade that's worked. Oil prices outside of periods of geopolitical risk tend to stay range bound. Whatever this breakout was occurring yesterday is flummoxed today. And when you return into a range, it usually means you go to the other side. So perhaps a drop down towards 62 is coming. But that doesn't mean we're going to break out lower. This is just a point where, again, over the past several months, if you had an opportunity to range sell at the midpoint from the lows after Liberation Day, the highs around the Israel-Iran 12-day war, that can be any point in June, July, or even in August so far, it's worked out. So I don't see a reason to stop doing that, even if we may be at a turning point right now. Until it's proven wrong, don't fix what's not broken.
Yeah, and I mean, those longs from yesterday, they got being down pretty quickly. We have a full retracement pretty quick of that big candle. I think directionally neutral is the thing to do here. Still, I'm in Iron Condor. The shorts are at 60 and 67.5, so I feel just fine here with that trade. I'll probably leave it on until later this week or next week, take it off and reassess. But right now, I mean, you got some inventory draws that are bigger than expected in the U.S., but now driving season is over, demand season. We got some Iranian sanctions that happened, helped the price go up yesterday. Now today, the focus is shifting more to this OPEC meeting on Sunday, where they're going to consider unrolling more of these voluntary production cuts. And this is the first meeting really in a few months where it looks like, you know, most analysts and forecasters are a little more uncertain about what they're going to do. So they still do have some of those voluntary production cuts that they can roll back. At the same time, they've rolled them back over the previous year, and you know, member states have had trouble getting up to their higher quotas. So you know, it takes time to ramp up production. We can still see it go up, but you know, virtually every forecaster, EIA, IEA, everyone is forecasting at least a balanced market in Q4 of this year. So, you know, the production, especially outside the U.S., still pretty high. Non-OPEC production still pretty high. And now it's more of a story of demand coming in. So any chance to go back to those levels that we were trading at in June or even July, I think that's kind of off the table for now. And I think, you know, meandering around 60, 62 is going to be the story for at least, you know, another month or the short term that I can see.
As long as it's for the next 45 in, 21 out, that works for me.
Yeah.
Thomas, natural gas prices are up 1% and change, 1.06, but off the highs, which come up at 3.131. We're back down to 3.041. So 32.3 IVR, Thomas. I'm outside of the timeout box for natural gas because I put myself in these, you know, little bubbles whenever things don't work out for too long. Is it time to get long again? We haven't seen this type of price action above our 1 month since the end of or middle of July. Does this surprise you with what we're seeing here?
No, because throughout the last month, the price has really sold off. I mean, the past 2 months, it's sold off. We had a really hot start to the summer. Then, you know, we have this really cool August, and then you get the forecast for September, really cool. So the bears were in full control there. And then now we're going into the season where you usually get injections. And you already hit peak bearishness. I think the bottom, you know, of early last week, 2 weeks ago, that is now, you know, it's in. We're back above 3. Last week on OTCL with Mikey and Nick, we got long natty gas. I got long the micro contract because NG is just a big contract to take outright. I sold it in 2 days with, I think, 160 in profit. I was fine there. If I still held it at this point, I'd be around 330. So, you know, of course, a much better trade, but it was a quick profit. I still am long via a put spread in the NGV5 contract at 3 and 2.95. So, you know, now we're 4 cents above it. 42 days out. I'm just going to keep this position on and expect us, you know, if we stay sideways, I'll be fine. If we move up, I'll be fine. If we come back near 3, a little sub 3, maybe I'll play the micro contract to the long side again. But the chances for, you know, late summer heat wave, they're decreasing, and now the focus really shifts to what's going to happen in the winter. How much gas is Europe going to need to import as they start really buffering their inventories more in anticipation for the winter.
Yeah, you mentioned the temperature outlook. I mean, still, I'm looking at the NOAA forecast right now, and we've talked about how if you simply take a line and draw it through the middle of Indiana, you're basically talking about half the population of the entire country being to the being to the east of it, right? Just draw a vertical line here. September cools off anyway. So, I mean, this morning when I took my kid to school, it was like 50 something degrees out. It's only September 3rd. What's up with that? Well, I don't know about that, but we're a little bit warmer in the morning still. It's only like, weren't we on the beach last week? What's going on with us?
Yeah. I mean,
okay. I'll have to bring my permanent marker to change that map myself, Thomas, so it shaded in a little bit warmer. Maybe it'll help fix things. Before we get to the world of currency, which is pretty important because the vols there have started to jump up, I do want to touch on some of the grains here, which I know you have a greater interest in. The vols in the space are quite high. Corn, IVR 62, wheat 41.7, the beans a little bit softer at 35.8. But this is an area that's been overlooked. At least we overlook it enough. It is a future space. There's decent enough volume. You're seeing greater trading volumes in corn futures than you do in silver. What's the move here? I've seen nothing but stories of record yields coming for crops in the Midwest this cycle.
Yeah, so I'm about to take my corn position off. I think I put it on 2 weeks ago on the show on OTCL. I sold the 390-400 put spread. That's pretty much at max profit here because we had this nice rally. Soybeans not following corn that much. Soybeans, there's a lot of trouble right now because, President Trump, he said, he wants to see China triple or quadruple their soybean purchases. This year, there's been no purchases of new soybean crops from China. They've been taking it all from Brazil. And, when you look at it, especially with what China did in the last trade wars, they do concentrate some of that retaliation power towards things like soybeans, something they know is really going to hurt Trump's base, cause some anxiety, things like that. So right now, soybean prices pretty much everywhere in the country for farmers, the actual selling price they get is now below break even. So, there's still a lot of soybeans and pretty much they have nowhere to go. Unless China steps in, soon and, we see some new export purchases announced, there's not a lot to support this market. But, volatility it's there if you want to make a trade. It's just a story of when is China going to step in, if they are, and take these soybeans, because the soybean farmers really need that. So, I mean, I don't know how much lower prices can go from here. I mean, we made a pretty nice move up in August. The last crop progress report came out earlier this week. Conditions, they got a little worse for soybeans, but that was expected with the lack of precipitation across the soybean planting areas. And, worse conditions are usually bullish. We haven't found any support from that report here so far. So it seems like bears are in control. You got some technical levels you can kind of play here. I'm in a position for soybeans that is, only 1 day out now, selling the put spread at 10.10, 10.30. I'm right on the line, so I haven't gotten rid of it. And I'm just hoping we stay above 10.30 until tomorrow and hopefully take some profit out of here.
I was just looking at a 35.8 IVR here, Thomas, and thinking about the trading range we've been in year to date so far. That does put the yearly lows, and if we're only to look at the year to date price action, that's effectively this. So the year to date lows are right near we'll call it 971. The highs come up at 1,075. Playing iron condor, short iron condor wrapped around that, 61% pop, risking 3 to make 1. That's actually a really interesting move. The tilt to the downside, of course, is because you talk of this oversupply issue, and the crop yields for across the board have been very strong if folks have been following the ag. But I would encourage, this is something that's unrelated to, broadly speaking, anything else that's happening in the future space, if it's bonds, if it's gold, if it's what's happening in the NASDAQ. And we talk about bringing down the beta weighted deltas of exposure in your portfolio. That means taking positions that have different time assumptions, different directional assumptions, different strategies than your core holdings. And adding in something like a natural gas or an ag, a soft ag, it helps provide that diversification for your portfolio. So think outside the box a little bit, which is really why I wanted to go to FX and the vols jumping, because there is a lot of volatility here that perhaps can be used. Canadian dollar, 109.6 right now. We have continued exposure here, and granted, it's a bad day for the US dollar as US Treasury yields come in. But again, the Canadian dollar is the one that's lagging, and it's offering the juiciest vol on the board right now. 73 has been a very difficult nut to crack. 74 is basically the local high for the year. Going out at 65 days, the 73-74 short call spread is yielding a little bit worse than a 2-to-1, risking 690 to make 310. But you know what? You're looking at a technical setup that can be validated by this kind of approach. So I already have my exposure, Thomas. I'm at 30 days. I'm short the 73.5, 74 call spread. But when it's time for me to roll, you know what? I may have to just do this now. That's a lot of vol that can be taken advantage of. And so the technicals look good. The dollar is winning somewhere, and it happens to be against the loonie. The loonie's giving you the biggest volatility. If I want to be a directional bull in the US dollar, this is the best place to do it. We can sell calls here.
Yeah, definitely a lot of volatility in here. I'm kind of looking at the same thing as short call spread, 65 days out, around 73.5. Definitely like the risk to reward. I might just put this on here with you.
And even the 73.5, 74, you're going 50 pips wide.
Yeah, that's
it's
what
basically a three.
That's what I'm doing.
It's a 3-to-1.
Yeah.
Right? So tinkering with it, if you wanted to get back to that 60% pop, you go 74, 75, right around the one standard deviation move. That's why I'm not so keen on this and why we use the technicals to inform. You know, we get through 73, you could say something has changed for the loonie because it's been a line in the sand, both as support and resistance in recent months. And it's served as resistance once again here. So the series of lower highs and lower lows continues. We just had a regional swing high. Good chance to fade the move. And what do you see here, Thomas? This has been so consistent. Before we get off the show, there's something that looks like an evening star candlestick cluster. Here's another one appearing on your chart, and that's not the right thing. So we'll just drag you here. There's another one. What does this look like? Kind of like an evening star candlestick. What just happened here? Another evening star candlestick. Green bar up, something that pins you in the middle, momentum fading, and then red bar down. That's been happening as we carve out these lower highs, and it just may have occurred again. So Canadian dollar is the place to look as far as I'm concerned. Ilya and I will get into the currencies a bit deeper later on today on Overtime with Dylan. We need to go, though, because Truth or Skepticism is coming up next, live with Sosnoff and Radigan. The calendar for tomorrow, watch out for that 10 a.m. data release, ISM Services, PMI. Outside of that, we're done and dusted. For Thomas Westwater, I've been Chris Vecchio. Take a brief break, get some coffee, get some water, grab a sandwich, and come back for Radigan and Sosnoff. It's Wednesday, Truth or Skepticism time here on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? What? Uh-oh, watch yourself. We don't want to get hit by a car. Oh. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? Oh. First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Hello, everybody. We are back. I'm Tom Sosnoff here with Dylan Radigan. Looking forward to today. Mr. Radigan, how are you?
I'm great. I'm great. Before we get into the whole thing, we'll talk about whatever we're going to talk about. Can I just ask an unrelated and uncorrelated question, if I might?
Sure, of course.
Were you a tennis fan, a U.S. Open man?
I loved tennis when I was younger. I was actually really good at it when I was like 12 or 13.
Okay.
Played a lot of tennis. I've never been to the U.S. Open. I have been to Wimbledon.
Okay. Wow. Okay. Because I think the U.S. Open is the greatest sporting event among all sporting events that exist in this world. The reason I say that is because I think tennis is one of the best spectator sports. I haven't been to Wimbledon, so I haven't been through the pomp and circumstance. But I have been to the U.S. Open, both early rounds, and I've also, on a couple of occasions, been to the finals, which is quite an exciting situation. I just want, before we get into it, I just want to make one news announcement for those following along.
Okay.
The youngest tennis player ever to make it to the semifinals in all 4 Grand Slams, Novak Djokovic.
Okay.
The oldest, that was in 2008. that he completed like the youngest. The oldest player ever to make it to the semifinals in all 4 Grand Slams, Novak Djokovic, who today qualified to play our man Carlos Alcaraz in the semis. And so I just want to say, listen, I'm not a huge fan of the Joker, as it were, but I do think he might be the best ever.
It's very possible. I saw Lendl Becker in 1988.
And at Wimbledon, that you did? You really saw Lendl Becker in 1988?
I saw the finals in 1988.
Wow.
Yes.
I mean,
I paid the most money ever for a seat center court next to the Queen, basically.
Come on, really?
I swear to God, 1988. I paid $1,500 a ticket to the concierge of my hotel. He was trying to get 1,500 pounds.
Okay.
He was trying to get 2,000. He couldn't get it. And the last day, he panicked and sold them to me. And I went with Corinne, and it was great.
I can't even. When Becker was a kid, I mean, that was when Becker was like the rocker, and he was like was that when Becker was like the kid and Lendl was the king? Was that what was the kind of the situation?
I think so. Like, I don't even remember. I think Becker won. I don't even. It was so long ago. I think Becker won, and it was great. The whole thing was amazing. The whole day. But I'm not going to put that at the top of the greatest sporting events.
Okay. Okay. What do you believe is because it's going to be the NBA Finals for you, obviously, with the Jordan years. Obviously, I'm assuming that happens.
I mean, the greatest for me personally was the Jordan years and the Blackhawks winning the Stanley Cup 3 times in 5 years.
When they had that, all the Russians for that one. Oh, no, that was the Red Wings that had the Russians.
The Blackhawks had Taves and Kane, but the greatest single sporting event you can ever go to for a one-day sporting event. I mean, the Super Bowl is really cool, but a prize fight in Vegas is the single greatest sporting event to see. It is the atmosphere, the intensity in the crowd, the gambling on every round, the way those guys hit as hard as they hit. You can hear it. If you feel it in your body and you're 25 rows back, it just hurts. It is.
Which fight? Is there a specific fight that you attended that you're thinking about when you're telling this story?
I did see Leonard Hearns for the championship. They fought to a draw. It was unbelievable. I also saw Riddick Bowe against Holyfield, which was unbelievable. I mean, it just every single one is just
incredible.
It's incredible. I mean, it's just incredible sporting event. It's just unbelievable.
My one U.S. Open story, and then we'll get down to the future of humanity and the financial markets and the bond market and the currency market and all. Like, I'm just going to if you're worried, if people at home are kind of want me to cut to the chase, the conclusion of today's podcast, and you'll just have to find out how I get there, is going to be buy gold, but we won't get there for 40 minutes.
It's going to be buy gold.
Buy gold. This whole podcast ends with buy gold, but that.
Oh my God.
We'll get there in a minute. So I went to the U.S. Open Finals, paid not one penny for it because I was the host of Fast Money at the time, so I was given 4 free tickets for the NBC box at the U.S. Open because it was one of those.
That's good. That's cool. That's the best way to go.
Pretty good. And it was when Roger Federer was the king. He was having a Federer moment in those years. And his opponent was some underdog, like a 10th seed or some Croatian that had sort of wormed his way through whatever, beat Nadal, beat Djokovic. I don't know what he'd done, but he'd done something like, he'd become the darling of New York City because he made it to the final. He's on the cover of the New York Post. He's like 17 or 19 or something. So they introduce him first, and the crowd is, and the New York crowd is the best crowd in the world for tennis because they're crazy. And so then Federer, to his credit, knows that the crowd is the crowd, they want the kid, okay? And so for Federer's announcement, they turn on, it's a night game. So they flip all the lights off at the Tata Stadium, which is a beautiful stadium in New York. They flip all the lights off and they use the sound system in the stadium and they play the Darth Vader music. Dun, 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 dun. And Federer comes out in a marching vibe with black sneakers, black socks, black headband, black t-shirt or black tennis shirt, whatever, black shorts, black wristbands, black racket with black strings. And basically and the crowd goes insane with boos, and he's just basically, it just gave me a lot. I don't even really like Federer. I don't really have an opinion, but it made me really appreciate him because the crowd wanted him to be the bad. They wanted him to be the heel, and he's like, okay. He's like, I'm not gonna. His feelings were not hurt that the crowd.
Did he win in straight sets?
And it would not even straight. It was like 6-0, 6-0, 6-0. Like the crowd was excited when the kid, like it would be like 30 love, and then it would go 30-15, and just on the 15 the crowd would erupt just because the kid got a point. So no, it was a slaughter. But anyway, it was exciting. So
when you're Federer, that's what you can do that.
He's like, okay, people want to have it. You're like, he's like, playtime is over. This is not an amusement park. This is the war zone.
That's what I love about superstars is that they Jordan was the same way. He loved it when you just challenged him.
When you were like,
don't challenge the king. Do not challenge the king because he will kill you.
But also just the confidence to be disliked, one of the things that everybody wants to be liked. And so when you're like, okay, I have 100,000 people openly screaming hostilities at me, and it actually is making me better.
Yeah. Yep. But only a few people can do that. So it's not
very few.
Yeah. Very few. All right, man, let's go.
Okay, here we go. So I got a few different things. I'm going to try to tie them all together. First of all, everybody's all hopped up about the meeting with Putin, with the president of China, Russia, and India making plans to take over the world and bypass America. I'm sure
I'm not all hyped up about it, but if you think that it's nothing, it's a nothing burger, you're crazy.
Okay, why? Tell me why it's not a nothing burger, because I can chew on this for a minute.
Because these are all the most miserable, self-centered pricks in the world who have been united because we have the biggest miserable, self-centered prick in the world that dwarfs the other ones. So somehow all of these horrible people have gotten together to form a team because our horrible person is worse than all their horrible people combined. And, as cocky as you want to be, we are fat and lazy, and the rest of the world is hungry and lean. And so let's not, this is a situation where you don't want to fuck around and find out. It simply isn't. You're talking about too many bodies.
What can they reason? Because on the one hand, I look at it and I'm like, oh man, this is bad news, because you have the two large, half the world population, half of the Earth's population is either in India or China. Like just those two countries combined.
Yeah, sure.
3 billion, 3.5 billion, 3 billion, probably 3 billion, maybe 2.8.
Yeah, whatever it is. Whatever.
But it's almost half of the people in the world, at least a third.
It's almost 10x the US. Add those three countries together.
Exactly. Plus, you have the largest landmass. Russia obviously is not a big population, and it's not even an irrelevant economy, but it is the largest landmass in the world. So it's a good commodity resource for India and for China. And so my thought was, I'm like, okay, well, they're not going to be able to create a bypass currency, they're not going to be able to create a competitive capital market, and they're not going to launch a coordinated military campaign. So what can they really do? And the only thing I could think of, they could accelerate their internal trading, like they could trade more with each other, basically. They could say, we'll just have more economic activity between us, being India, China, Russia, et cetera. But beyond more economic activity, that Tata Motors is going to sell in Beijing, or, that the electric cars from China are going to be sold in Moscow or whatever. Like, I don't really know what else they could do in terms of manipulating the levers.
In a world where your future is, I don't buy that at all. It would just, if you took China away from Apple, just as an example, or you took China away from Nvidia, the stock prices probably, or China and India stock prices probably get cut in half. So I don't know what you mean by,
So you're saying, but you think it's a credible possibility that they would withdraw U.S.
I think it's credible. Well, it's definitely a credible possibility that they use their whatever powers they have, sanctions, economic limitations, restrictions, against the U.S. The best way to fight a bully, everybody knows this. This is not like, this is
Not a revelation.
bully. Yeah, it's not a revelation. This is bully tactic 101. The best way to fight a bully, and Trump's a bully, is you hit him in the face.
Mm-hmm.
And the way to hit them in the face is you try to destroy their economy. Now, can they destroy our economy? Probably not. But can they hurt it? Absolutely. Absolutely. This is in a world where you cannot survive without globalization. Just think about this. Technology's come too far. Decentralization's come too far. Globalization has come too far. And it is absolutely impossible to continue expanding when you have, just inside of your own borders. The whole isolationist approach is not scalable past a certain point. And the crazy thing about it, the hypocrisy in all this is that Trump is trying to, and his family is trying to get rich off of a decentralized game plan. That is their personal family game plan.
Meaning the crypto billions that they're
whatever between stable coins and meme coins and cryptocurrencies and all the money they're grifting in the digital asset space, which is completely decentralized, which relies on kind of pure globalization, for that matter.
Mm-hmm.
With the public policies and that are coming out of Washington, it's all the exact opposite. It is completely centralized. So for the American public and consumer, they are trying to centralize everything and control everything. It's almost like a true socialist state. Mm-hmm. But for their own wealth, they're going pure, and this is the crazy hypocrisy, they're going pure global in a decentralized world where they don't care where the buyers or sellers come from. It blows my mind. And nobody is calling them out on that. Oh, I mean, I shouldn't say nobody, but not enough people are calling them out on it. And it is a very dangerous policy. And when you see, listen, India and China hate each other. India and Russia despise each other. To have those groups in the same room doing business together,
laughing it up,
having cocktails when we should be the middleman selling to all three of those places. I mean, with the fact that India and Russia, they can't stand each other. And the fact that they're doing business blows me away. The fact that they're both doing business with China's doing the right thing. They're trying to take over the world, which is the right thing to do when somebody gets, decides to go full isolationist. It's insane.
Because obviously it's China's game. So if China can roll up India, Russia into their sort of world, not to mention the U.S. withdrawal for all of the goodwill.
That's right.
All the medical equipment in Africa, all the medical equipment in South America.
Yeah, and so and the reason, and what's Trump
all the roads,
his administration trying to do about it? All they're trying to do about it is to create more and more limitations and restrictions to doing business in the U.S., but yet they're trying to create their own currency, which essentially, so on the one hand, trying to create their own currency, on the other hand, trying to destroy the U.S. currency. And nobody's calling them out. They're murdering the U.S. dollar and trying to build up their own currency, their own digital currency, essentially not to replace it, but to complement or supplement it, which is the fact that we're not calling them out on this is so sad.
Remember what I said earlier about this podcast ending with a recommendation to buy gold? But anyway, we'll come back.
Well, you just missed a 200-point rally in there.
Well, okay, better late than never. Just like Google, I'll get to that as well.
Okay.
So an additional layer of this. Well, I mean, I almost don't want to abandon this. This is actually, I think, this is the most important conversation in the world right now, actually, which is the consolidation of power outside of the United States and the degree to which it represents a credible threat. The other thing that I find interesting right now, we saw it yesterday with the markets, because I know we're talking about this rate cut coming later this month, is the fact that long rates are actually rising in a world that is anticipating short rates to be cut in the next couple of weeks. Do you think that the central bank has lost? I mean, I kind of know what you're going to say, but do you think that the central bank is losing it more? It has less control than normal over long rates? Is the central bank losing the authority to influence rates as a result of the shift in power that we just talked about, not to mention the trade policies and isolationism and.
Are you talking about in the U.S.? You're talking about the rest
We're
of the
talking
world?
about our U.S. rates rising in recent days in a world that's expecting a short-term rate, a cut in the short term in the short rates.
I think you're going to see a cut in the short-term rates because although the long-term rates have remained heavy and they're still high, the short-term rates have rallied enough for them to cut. At least to make it'll be superficial, but it's a statement. There's also a lot of political pressure. So I think, and today the long rates rebounded a little bit, which no surprise to anybody.
Is there a risk that we've lost basically Trump's all hopped up, wants to cut rates, wants to change the Fed governor. He wants rates to come down.
Yeah,
they're going to cut rates, and long rates are not going to go down. They're going to go up.
No, I don't think that's
in the cards.
No, I don't think that's the risk. I actually don't think that's the risk at all. I think the risk is that they cut short-term rates, which it's already reflected in the market.
Yeah.
The 10 years up to 12.5, which is about 2.5 points off its low, which is a pretty big move. It's a 10% move, and so I think that they cut short-term rates. I think long-term rates don't move much at all. I think they'll stay about flat. But I think how the market reacts to that will be very different. I think the message that the market will get is that that's not going to really help to knock down inflation at all. I don't think that's going to help to put any kind of a cap on inflation. In fact, it could be an accelerant, and I think the market will act negatively. So I think the risk is in the stock market. If they lower rates, the risk is not in the bond market.
Got it. All right, going back to our friendly neighborhood, despicable world leaders. There was a hot mic moment, apparently, between the presidents of China, Russia, and India, where they were not talking about how to bring down the American empire, nor were they talking about an alternative bypass currency to end the US dollar, nor were they talking about nuclear annihilation. But rather, they were talking about modern medical science being able to swap in fresh organs and allow people to live to 150 or 160 years old. And I believe Mr. Putin, and President Putin, I should say, went so far as to say we might live forever if medical technology gets to that point. Would you, this seemed attractive to them. Obviously, a good dictator is only as good as his or her ability to stay in power. So if you can live forever, that means you could be dictator for a good 100 years. Even if you could come in, you could get your dictator gig at 70 and still run the table for 100 years of dictating, with the proper organ swap protocol. Does this idea appeal to you? Would you like to?
Well, first of all, you are giving, to start off the conversation, you're giving those guys, you're not giving them credit for what is a very brilliant PR move. In the world in 2025, with three of the most powerful world leaders on stage, there's no such thing as a hot mic moment. Okay, does not exist. Okay. What exists is leave the mics on. We are going to talk about this so that it's picked up as a hot mic moment. There is no such thing as a hot mic moment. So I don't believe that for 1 second. They left the mics on to have that discussion. That's why they didn't talk about blowing up something or doing. They talked about something that they knew would generate a
provocative and meaningless.
That's right. And the other side to it, which I think is so funny, is you have three old dictators essentially talking about extending life into perpetuity. I mean, that would have been a perfect discussion for Trump because he needed all four of those guys there and talk about extending life into what else do dictators want to do except to extend life into perpetuity so they can maintain control for another 75 years. So that was a complete setup. There was no hot mic moment. That was just, that was a complete setup. And they just, that's what those guys talk about in their spare time. I mean, they want you to think that they're going to be there forever. That's why Trump always talks about a third term, because it's not that he believes he can run for a third term. He wants you to think that he can run for a third term. And that's the same thing that Putin does all the time. They always want you to think that they're going to be here forever. So don't mess with them because they're going to be here forever. That is part of the whole.
So it's the long arm of retaliation. So basically, there is no future without me. So don't even think about.
That's exactly right. That's exactly right. That's why those are very well orchestrated. Those are planned moments.
All the same, do you think that would you like to live forever? Is that an appeal? Would you like to be the permanent Sosnoff?
I mean, could I fix certain things along the way? Like.
Oh, that's the whole point. We'll swap all sorts of things. It's like rebuilding an old Ferrari. Like give you a new engine. We'll give you a new carburetor. We'll put in, we'll put in a new shock absorbers, new lungs.
I mean, sure, why not? I mean, if you could do it, I guess, I mean, who would say no to that? I don't know.
Yeah. All right. I mean, I guess it depends on I think that people get sort of mixed up between long life and quality of life. It's one thing if you're healthy and vital and have purpose and people, then living for a long time obviously has appeal. But if you're decrepit and bedridden and all your friends are dead, right. there's a wide market there in terms of the quality of life over time.
I agree. I don't want to be a 90-year-old Tom who lives to be 120. I'd be okay with, a 50-year-old Tom that lives to be 120.
Yeah. Staying in the world of technology, but I'm just going to tell you why I want to talk about this. I was at a board meeting for a company that I'm on the board of last week, and it's a big. They do a lot of digital advertising. It's a bit like they use a lot of Google ads and stuff like this, and so as part of the 3 days of meetings, the Google team came in, and we were teasing them about GPT, and nobody uses Gemini, and what are you guys even doing, and whatever, and because there was like a dinner with them, a social occasion with them before their presentation. So the night before, we were breaking their balls. We're like, oh, search is dead, and you guys are gonna have to find new jobs, and no one uses Gemini and all this stuff. And they were like, ha, ha, ha. And so anyway, next day we're in the meeting, and it's their room for 3 hours, and their slide deck and all their things. And they sort of they showed off. I mean, they basically, showed off. And what they showed was, I think they called it Performance Max or something. Anyway, it's basically the end of search as we know it, the end of tagging as we know it, and basically using what I think, from what I saw, the most impressive artificial intelligence I've ever seen in my life was in this meeting last week, where it was inferring every single thing, like the same way that you like TikTok because the algorithm kicks you with the things that you're most interested in.
Yeah.
They were basically showing how that Google on the back end can use sort of hyper interpretation. I don't even know what the word you would use to describe it, but basically inference through direct and indirect behavior to both reveal who are the best possible targets for new Tasty Trade clients out of all the people in the world. And you can say it to the robots, and the robots will kick out a list of 100,000 people filtered from Alabama to San Francisco to Seattle that are the high. And then what's the best way to bring them in, catch their attention in the first place and move them through the funnel and close them and all the things. And whether it's a Tasty Trade client or a travel customer or a car buyer, it could be anything. The point is, the robot's capability was remarkable in terms of its inference and understanding of human beings and its ability to manipulate them in behavior. The other thing that was clear in that conversation was that entry-level computer programming jobs are maybe not going away, but are the demand for entry-level programmers is in collapse because they're hiring senior programmers to manage AI programmers. That junior marketing and communication jobs are in rapid decline. That junior finance jobs are in rapid decline. junior marketing jobs into basically all the sort of entry level finance, programming, communications, marketing jobs.
I don't agree with that assessment, but go ahead.
But why? How can you? I mean, that's factual.
I don't know that it is factual. I think that it's a very temporary phase until the market sorts out, what new jobs this creates. And I also think the other thing is I mean, have you been fooled by AI yet?
It's not about fooled. It's about the utility of.
Have you used it as a utility for something that you've replaced something else for yet, other than search?
No.
Okay, either have I.
But I'm on the edge of trying to use it to replace a little bit of a marketing function.
I mean, I
would say marketing is after search, it's a marketing and.
I understand that, but 99% of the people that use AI at this point have basically replaced Google search with Google AI.
Yeah, agreed.
And that's really what it is. I think that beyond that, talking about how AI has, have you used AI for marketing? AI marketing to this point, for me, is so bad. Like it's so.
I don't disagree, but I just feel like
so
that's
annoying.
The next problem.
It's annoying. It's not effective. It's obvious. It's fairly obvious. And I so far haven't bought into it. The AI marketing aspect of it.
Layer 3 of this, because I'm going to try to tie together living forever medical science with AI with this final piece, which is the other conversation at the Google dinner, was quantum computing.
Okay.
And the fact that quantum computing is a real thing that will actually be deployed on some level in the next 12 to 36 months. And that one of the anxieties that exists in the finance world is that quantum computing apparently has the ability to bypass that the entire security infrastructure that exists around banking, energy infrastructure, medical infrastructure, tax, IRS infrastructure is basically meaningless in the face of quantum computing. And the basically once quantum computing is in place, I can drain Goldman Sachs, I can drain JP Morgan, I can flip the switch at the Department of Energy on the power grid, on and on and on. When I'm sure you're going to say, don't worry about it. Why should I not be concerned about the quantum raid on the banking and energy infrastructure over the next couple of years?
Have you ever seen any technological advancement that has set you back and not moved you forward? Can you name one technological advancement that has made your life more difficult as opposed to improving your life? And that's the reason that quantum computing, again, I don't like when people start to bring up the negatives that quantum computing is going to destroy the world, because what's going to happen is we're going to figure out how quantum computing is going to make everything better, just like AI, just like everything else. Of course, everybody is scared of change. Everybody's always scared of change. But change, especially technological change, is never bad. It's never bad. You can't. I challenge anybody to go find, and don't give me some
nuclear weapons, not a problem.
Well, I don't think nuclear weapons,
technology.
I don't know if that's more science. Okay. And you're talking about, we've had nuclear weapons since, late 30s, early 40s. I mean, that's not a technological advancement as much as it really is, scientific. And there are some things about science that potentially could scare me, but for the most part, okay, and of course it's not going to be 100%, but the reality is, in the last, however you want to say it, 10, 20, 30, 40, 50 years, any technological advancement has made all of our lives better. And every single thing, people have been scared. Do you remember how scared people were of the freaking internet? I mean, like how scared we are of everything, any change. It's like, oh my God, it's going to ruin the world, blah, 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 blah. And it's never happened that way. It never will.
So
That's
you
how
don't think there's a world where AI uses quantum computing to take all the money, launch all the nukes,
No. No,
and
I don't
send
think
all the
there's,
murder drones?
no, I don't think there's a world where that happens. Okay. And I
Have you
don't,
mentioned this scenario to Tony? Because I feel like he's more susceptible to this type of paranoia. Quantum computers and AI could very easily take all the money,
I would agree with you. Tony would be more open to this
launch all the nukes,
scenario. There are a
and
lot of
send all the
people that would
murder
be more
drones.
open to this scenario. I am not.
And if that happens, I recommend buying gold, by the way, not to come back to my original.
I figured that was along the way. I guess that was your connection, that quantum computing leads to global destruction, hence buy gold.
Yeah, that's right.
Yeah, I got it.
I'm sorry, you were going to say something? I apologize.
Yeah, I'm going to say that's as insane a line of thinking that I've ever heard you come up with.
Why is gold up so much right now then? If it's not,
I don't know, because there's been in the last couple of days there has been this flight to certain assets, and virtually every single commodity has been bid up. A little bit different today because crude oil's down and some other things are a little bit lower, but for the most part, there's just been, maybe it's a little bit of a short squeeze at this point. Maybe it's something else that I haven't been able to read into it, but for whatever, who cares? Gold's up, big deal. You're not gonna start thinking about
not big deal. Gold's up because the three most evil dictators in the world are planning to take down America at the same time that AI and quantum computing are preparing to raid the banks, launch the murder drones.
Listen, we have, you're right. The three of the four most powerful dictators in the world are getting together, and it's three friends and a stranger. But the problem is, our stranger is the dumbest of the four. He's got like an IQ of about 80 or less, and so we have the dumb guy. And I don't know, I don't know what that means. Doesn't bode well for America. So maybe that's why gold's up. I don't know.
You mentioned that you actually think that the risk in this rate cut coming down the line in a couple of weeks is in the stock market.
I worry that the rate cut is, I have been waiting for bonds to go up. They went up a lot today, at full point. The notes are up a half a point. They're back near their recent highs. I think the market, the short-term rates can handle a very small rate cut here. I think I was worried about 2 days ago that when we were about almost a point and a half, 2 points lower in the long bond, I was worried that would wipe out a rate cut, but now I don't think so. Now I think the rate cut's back on the table. I think a rate cut will not move the long bond. I don't even know if it'll move the shorter duration, but I think it will spook the stock market.
What's spooky about a rate cut for the stock market?
What's spooky about it is, why are you cutting rates if things are good?
Because inflation is under control, and
but it's not.
And the president wants it.
I understand that the president wants it, but I just got done telling you, he is one notch above a moron.
Okay.
And so he doesn't understand how rate cuts work. And you can't have rate cuts and lower inflation side by side. So something's got to give.
Not to totally change the topic, but it's sort of just on more market related things. And just because it was in the news the last minute here, there's the Google news with Apple and all this jazz. Are we basically just sort of, what's the adjective I'm looking for? Are we resigning ourselves to a world that is controlled by tech monopolies? And is this most recent decision further evidence? Like, are we basically just forfeiting our freedom to the tech monopolies?
I'm not sure that we're forfeiting our freedom, because the argument that they would make is there's never been more wealth. There's never been a situation where more wealth has been created, other than what's happened over the last 15 years when these tech mega monopolies have taken over. So I think their argument's going to be, these are the best of times. And, we basically insulated the U.S. economy against any kind of a down move because we truly are too big to fail. I mean, essentially, on the one hand, you want to say, are these tech monopolies, do they really rule the world right now? And the answer is they kind of do. Is that a bad thing? That's and the question is, well, it depends what you compare it to. I mean, nobody wants a bunch of tech mega monopolies ruling the world, but the other side of it is we don't like the other people that rule the world. So, I'm torn. No, I do not want Mark Zuckerberg ruling the world. No, I do not want Elon Musk or any of those other yin yangs ruling the world. But the choices are not good. My choices, the choices are just not that good, who to choose from. So I do not want Jeff Bezos ruling the world, and I don't want Google to be making, to be doing social planning for us for the next, and creative planning for the next, 20 or 30 years. And I don't want Google to control every aspect of search, but it looks like, that's where we are right now.
Good for Google stock.
It's good for Google stock today.
I mean, I still feel like I've said this to you, and I've been saying this on Overtime, that Google is the best the best name on the board for the mega techs.
It was the cheapest relative, not anymore.
Yeah.
It's no longer the cheapest relative. Now it just got expensive. It's gone from 160, to 235. It's basically up 50%.
Yeah.
So
it's over.
Google is cheap no longer. Apple is cheap no longer. So, let's be careful here before we
get too excited.
We get too excited. That's right.
None of this. Of everything we've discussed, the only thing that gives you fear is the 3 dictators hanging out in China. Quantum AI, the rest of it is a non-issue. The murder drones, no problem. It's the 3 dictators. You got to make sure you use the phrase "murder drone" with Tony on a regular basis.
I mean, quantum computing does not keep me up at night. AI does not keep me up at night because I truly see the benefits of AI integration into everything that we do in our lives. And so I feel like the positives are going to outweigh the negatives. I'm still worried when there's a subjective, like I'm one of these people that believe in the quantitative mechanics of everything. And if I can make sense of something, 1 + 1 = 2, it's cool. If you tell me 1 + 1 equals a -1 or a +4, I get all confused. Mm-hmm. And when you bring in a subjective point of view from some, politician or world leader or whatever, and it makes no sense to me,
mm-hmm.
Like the idea of an isolationist policy or America first makes zero sense to me. Zero. Like, I don't understand it. The idea of no free trade, I do not get it. You can't argue with me and make that make sense. And for that reason, 1 + 1 does not equal 2. And I'm really bothered by that.
Do you think that is that expressing itself anywhere? Meaning in your dollar value, the places where it would express itself would be in the currency of the bond or gold, I guess.
Well, I guess it's expressed itself in all those places. But the reality is that bull markets in mega tech stocks make geniuses out of everybody. And so that's kind of, that's saving the political paradigm right now. That's protecting it all the way down, through multiple layers. So, let's see.
All right. We will see.
All right, Mr. Radigan, that was a fun conversation as usual. Sure. Getting off the rails.
One quick note, just because I do have a relative who had an organ swap. Before you get too excited about that, in order to swap organs, they've got to literally crack your chest and they pull you open like a clamshell. Okay. It seems super unpleasant. I think it's better to try to keep the organs you've got. Don't be swapping organs, honestly. I don't think it's a good call.
I haven't swapped any organs yet. I'm not on that list, but I will take your advice. Thank you so much.
It's not pretty.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. Dylan, see you next week. Thanks.
See you next week.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling the whole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And that he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75. I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
everybody, and welcome back to today's assignment. Today is Wednesday. It's been a pretty not as volatile day in the market, but we got a couple days left. Dr. Jim, great to have you back, my brother. How are we doing today?
Man, what's going on? We're doing okay. It's man, just another day and another
It
what,
is.
2 to 3% in the metals, man. I mean, gold and silver, that's some crazy stuff, E. That's some crazy stuff.
No, it is. I mean, I was looking a little bit at gold yesterday. It was my risk of the week with Gus, which is a little later in the evenings, Tuesdays and Thursdays at 4:30 Central Time. Trading some gold. It was getting a little crazy in there. It wasn't too comfortable in those metals. Things got a little volatile there, like you kind of mentioned. But other than that, I wasn't taking a look too much at silver. Are you doing anything over there in the metals?
I mean, just spectating mostly from the sidelines.
Yeah.
And I mean, being a short-term contrarian trader like most of us are.
Yeah.
I mean, this has been a really tough market. I mean, if you got short gold or got short silver, basically any day the last week and a half to 2 weeks, it's been really painful.
Yeah, no, completely. I mean, we got the platform right here today. I wanted to touch on, it's funny you brought up gold and silver, some of those metals, because I wanted to talk about the point multiplier with some of these futures products and how we can get some exposure to some of those markets. But we do have the platform right here. I get some of your thoughts on some of these positions that we have right here. It's been a little while since we got to do that. It's been a couple weeks now. So with that being said, Dr. Jim, we took off quite a few positions today. I decided to take them off a little earlier, so you're not going to really be on my head too much today and telling me to take some of those off. They've been managed. They were pre-managed a little earlier today. First thing is first. We got some Apple, got on some long delta. That was really difficult for me to do. I don't know if anybody else has noticed. If you look at the rest of the positions in this portfolio, got a lot of short delta on. We're selling a lot of out-of-the-money call spreads, but not with Apple. We were able to capitalize on a little bit of a short-term bounce in Apple. Happy about that. What was the position there? That was... we had sold this one about 13 days ago, $1.87. Took it off near 50% potential profit, so it was nothing too crazy, kind of just like a textbook tasty salad trade, to be honest, which what Apple was. M&Q was a tough one for today. We'll talk a little bit more about this active trader tab later on in today, but it was a tougher trading day on the day. I'll kind of give a little bit more of my thoughts on today and the volatility that was going on there, but $100 on some micro NASDAQ today. Celsius, this one's been doing pretty well for me, Dr. Jim. I forget what your view or take on Celsius was, but this one's panned out. I am a Celsius guy.
Yeah. This is your product.
Yeah, I forget. Are you a Celsius guy? You like Celsius? What's your opinion before we shift gears here?
Never. And if I was, I wouldn't be public with it.
But
like that's something I would just do in my private time.
We'll never know. Dr. Jim's cracking some cold ones. We don't know.
No, I've tried it. I've tried it a couple times. Yeah. I mean, it's not bad. Like, it's okay. But it's like, if you're looking for something with a little bit of bite, like if I need something with a little bit of kind of,
that's
like,
a monster.
Get me in the kidneys,
or
it's
Red
not
Bull.
going to be, it's going to be Red Bull?
I mean, I don't know. I was hoping you were going to say anything other than Monster.
Well, no, Monster is solid, dude. Monster is really solid. No, but I'm talking like you could go Ghost. You could go Rain.
Ghost is a good one. A little too sweet.
Yeah, you could go a bunch of... Yeah, you go with like a Ghost, sour pink lemonade. It's like the best tasting stuff that's ever been created.
I mean, that's a pretty good one. Before we shift off the topic of Celsius, though, Dr. Jim, I believe not too long ago, Celsius was having a lot of struggles in their business, and I think they had made some moves in their marketing department, and they absolutely took off from there, if I'm not mistaken. I think that's what the story of Celsius was. But I digress. After Celsius, that one worked. That one panned out pretty well. Celsius was just extremely, quote unquote, overbought. So it was one of those shots to the downside that we wanted to try and take advantage of. So I don't know if anybody else was in that trade, but if you were long, pretty much the last, since April, beginning of this year, I mean, you were reaping a pretty penny on this because we were trading at around $21 on Celsius. Now we're trading at $60 near the highs. So it's been a ride in there. After Celsius, we got some Gap. OG Gap, Dr. Jim.
Wow,
Gap isn't as popular, but Gap is coming back. You're familiar, right?
Coming back?
It's coming back.
Wow, seriously, they're still in business?
They're
That's
still
unbelievable.
in business. Yeah, you're going to start buying your kids
incredible.
some Gap, just like how we had Gap growing up.
I'll tell you what's amazing about Gap, though.
What's
here's
that?
where you really got to tip. You got to tip your cap to Gap. So they've got there aren't too many stocks where the company and the ticker are the same, right?
Yeah.
Gap. I mean, the only other one I can think of right now
100%.
is Uber. Uber.
Uber is
can
a
you
Ford
think of any
ticker.
other companies where the actual
I know
company
one.
name?
I know one. I think.
Oh, I got another one. If you got another one,
What's the other one coming to mind?
IBM.
Isn't IBM?
IBM. Yeah.
Isn't IBM? IBM doesn't stand for anything.
Well,
I know
course it
we
does.
refer to it as IBM. But
Yeah.
Okay. I won't get
that's
so
a fair
technical.
point.
I get
that's
so
a fair
technical
point.
sometimes.
I
was
can't
pretty
think of any others though.
Yeah.
Yeah, I don't know.
AT&T.
Oh, you see Ryan Ryan coming up clutch there in
No,
the
what was that?
in the team chat. He said Meta.
Oh, right. Yeah. See,
Yeah.
this is I just think the move by Meta was actually a really smart move. Like, taking away the Facebook branding is tough, and we'll shift gears here in a moment, Dr. Jim. But with the Meta.
Hold on. Ryan wants to make sure that Laura gets credit for coming up with Meta.
Oh,
so
hey,
that was Laura's call.
shout out to you, Laura. If
Yeah,
you guys
so
got
good
any
job,
more in mind,
Laura.
let me know. I
Yeah,
still haven't
Meta-
even thought of one. So shout out to you.
Meta's tricky though, because I still don't even think about Meta as Meta. I don't think anybody does.
Right.
It's still Facebook, right?
No, it's still
like I still
Facebook.
think about it. Yeah, I still think about it like Facebook. I don't really think about it like Meta. So that was a good pull by Laura.
So Kyla Scanlon is a content creator. Very good watch. She had made a point about Mark Zuckerberg and how he made a pretty big bet in the metaverse, and how that's not really kind of panned out yet, right? And when she made that point, it made me even think of like Meta repositioning themselves as Meta instead of Facebook, and how the metaverse actually hasn't came to fruition yet. But originally, I thought it was such a genius move because it sounded like the kind of move like Band-Aid, the brand would make, right? We call Band-Aids Band-Aid, and the brand is called Band-Aid. It's the same thing with Meta. They're changing the name of their company to Meta, and it's called the Metaverse. That's like SEO on crack, right? Like, you're gonna get the best search engine optimization ever. So that's kind of the move I thought Meta was taking. But to your point, I feel like Facebook is still sticking, and Meta has not fully come to fruition yet. So Meta is Facebook until proven otherwise.
I mean, that's what I'm saying. But all I'm saying is, man, we've really started a movement here, because I'm getting I mean, you see the YouTube chat.
Yeah.
I see the team. I mean, people are blasting us with
Yeah,
like
shoe,
Dell.
hymns.
Yeah, hymns. Like, it's all there. Like, apparently every stock is this.
Yeah.
Apparently.
Hey, if anybody doesn't know, Dr. Jim's most active, most traded stock is probably Hims, because he's him, right? No, that's the dad joke. I took the dad joke of the day.
That's a total dad
That's
joke.
so
Yeah,
dad
that's a
joke.
total.
As I was saying it, I already know. I was like, I got to go with it though. We got Gap. Then we had a little bit of gold in here. We sold an out of the money call spread on gold. Gold is absolutely ripping right now, right? It was defined risk. I'm not comfortable being in these products right now, undefined risk, because of how volatile they are. But to Dr. Jim's point, we're ripping on gold. IV rank is sitting at 40 still. Volatility looks like it's being priced into the upside right now. We'll go into more details on that. Microsoft sold an out of the money call spread. This was one that came back into my favor, Dr. Jim. This was one of those we had put on for an earnings play. Went a little further out in time, I think at around 45 days till expiration. Complete max loss trade, and now we're about to have a max profit trade. So that's how Microsoft has been playing out in my favor over the last few days. The overall market wants to continue to sell off. It'll help some of these positions, but this is one where you could make the argument I should definitely just take this off from now. And we'll stay on Microsoft for a moment. What are your thoughts on Microsoft, Dr. Jim? Sold an out of the money call spread, $5 wide, 16 days left to expiration. Collected about 211, so we got about $300 worth of risk on the trade. We're up 120 right now.
Well, yeah, I mean, you got to take it off, man. Like, you're over.
But we can squeeze out
max
another
profit.
50%. We can squeeze out another 30 to 40.
Those are famous last words, bro. Like, that's exactly what the gold shorts were saying at 31.50. Like, man, let me just get 10 more points.
Right.
And now here you are on the doorstep of 3,700. And I was one of those gold shorts, by the way. And so that's tricky, man. Like, when you get to 50%. Defined risk, it's like, or even undefined risk would be a better example, of course. But man, just take your profits. Like, take your profits, take it off the board, and just kind of move on. Because remember that, the longer that you wait in a trade that's earning profits, and the more profits you go for, the more risk you're adding to the trade, essentially. Because remember, if you sold it for $2, let's say, which is about the case for Microsoft, if you sold it for $2, your maximum risk is $3, right? The trade starts working, and now all of a sudden you can buy it back for $1. Like, I know it's 90 cents, but just to make the numbers a little easier. Now your maximum loss is really no longer $3. It's actually $4, because you could essentially give back the profits that you've earned, plus whatever the original loss potential was on the trade. So just keep in mind that if you do go for a few extra drops of juice out of the orange, it's making less and less sense. Let's just say that.
Which, with the point you bring up too, isn't very far fetched. I would say that's a pretty common reality. I think all of us as a trader has experienced, and we can pretty much all relate to. And I think we've touched on before. I think a winner turning into a decent loser, or a loser for that matter, that was well in your favor, is probably worse than a position going against you right after putting it on. Like, that's probably one of the more worst experiences as a trader. Am I right or am I wrong?
Oh, that's 100% right. Oh
Yeah.
my gosh, that's 100% right.
Yeah.
Like if you have a loss, you have a loss.
Right.
If you have a big loss, you have a big loss. Like that's just part of trading. Like every trader goes through that. But man, you have a trade that actually worked and you didn't take it off and it turns around. That's probably the worst feeling. I would say.
No doubt. I hear gold is doing me dirty. Yeah, no, gold is an absolute beast. We're going to manage this one with care. We got a little bit in NVIDIA. As you can see, Dr. Jim, we were getting active lately. We got some NVIDIA, sold an out-of-the-money call spread on NVIDIA. That one's panning out pretty well so far. It was a really muted move, and I got to tip my hat to Tom. He did call publicly NVIDIA on the earnings last week on CNBC, so hat off to him. Sold an out-of-the-money call spread on NVIDIA. It's pretty muted right now. QQQ sold an out-of-the-money call spread, just really expressing my overall short-term bias on the market with this QQQ position. 44 days till expiration. About 232 was able to snag a little bit more credit on that one, so you have a little bit more risk, a little bit more potential reward there. Pretty much break even right now. RKT was a risk of the week. It's just a very small. It was a very small position that we had taken on RKT for risk of the week. This one's pretty much dead to me. It's a very small position, but we'll come back and manage that too. We can't neglect the little ones in there. And then we got SPY, sold an out-of-the-money call spread on SPY, 16 days left till expiration. Pretty much break even on this one, Dr. Jim. I got 16 days left. I could call it quits. I could redeploy the capital elsewhere. What's your perspective on that last one?
For SPY?
Yeah, for SPY, it's 16 days. I'm pretty much I'm down a little, but I'm pretty much break even. 16 days left, $5 wide. I can pretty much take this off and redeploy the capital elsewhere or see it through for a little bit, but that's where I'm sitting.
Yeah, I mean, you could go either way. You know, I mean, you could go either way. It's really your call at this point. I mean, usually with defined risk, I would leave it on until the end. I mean, if it's at a scratch, unless you have like a really, really good feeling, not even a feeling, but a good reason to take it off.
Yeah.
And like, you know, you put the trade on, it's like, give it a chance to work, give it the whole time if that's what it takes. And so that's kind of how I would look at that. Oh, you got filled on Microsoft.
Yeah, we just got filled on Microsoft. So took that off the table. No excuses there.
No.
I just peeped the chat. X. How could we forget about Twitter? X. I mean, the most
Twitter,
straightforward.
Look at Ulta, man. There's some great.
Ulta.
Ulta's a great pull. We got Kava. Kava's a great pull.
I just can't with Kava again. Like Kava.
There's so many stocks.
I don't know how we didn't even think of Twitter. We didn't think of Twitter because that was another massive rebrand that we had seen.
Yeah, but no, come on. We're talking public stocks, man. Like, I'm not talking about, I mean, we're going to start talking about Subway? Like, are we talking about anybody now? Like, come on, man. We're going to start talking about, I mean, we're going to start talking about, you know, Giordano's pizza place on the corner? Like, I need a publicly traded stock, bro.
There's a few private, small-owned businesses we could get into, Dr. Jim. You got any thoughts on Google? And then we'll get here into some of the slides.
Well, I mean, obviously, you got all the, it was some antitrust or something like that obviously benefited Google and it benefited Apple overnight. I mean, you know, that's a pretty crazy move for a stock the size of Google or for like a stock the size of Apple.
No, it is.
And so, you know, again, being a short-term contrarian, I would want to sell this. I would want to be bearish, you know, on this move.
Oh, thanks for the.
And so, you know,
thanks for the insight, Dr.
Did you just get bullish?
No, I just sold an out-of-the-money call. So of course, I put on more short delta. I'm over here loading up short
I wasn't sure. Hey, man, sometimes I come on here, you're buying puts.
No,
you
never know.
Calls. I don't know what to believe.
You got to keep both eyes open, Dr. Jim. You never know.
I got to do something.
You never know.
Oh man. And so, yeah, I mean, I would do the short-term contrarian move here. So, you know, I mean, you could go with a gap fill. You could go with whatever you want to go with here. I mean, you could get a few points to the downside. Yeah. You'd be in a good spot.
Did I say, that's funny. Did I say more worse? Even worse.
Oh, you 100%
Did I say more worse? Wow.
But I've got 3 small kids, man. Like, I hear more worse every single day. I hear like this is huger every single day. So it's all just normal talk for me. So I'm used to it.
That's more worse. But we will go ahead and shift gears here and slide over to the platform. What we're going to be looking at in the platform is just these point multipliers to give us a good idea on.
Oh, you mean the slides?
Yeah. The
Okay.
slides. Yeah,
there we
just,
go.
just quickly, the futures multiplier, and we can go ahead and go to this first slide. For anybody that has missed, you want to get a little bit more involved into some of these options. We do have a futures, we have a futures watch list. So if you want to segment that watch list a little bit more, there's some pre-built watch lists on the platform. All you got to do is click that drop-down tab to the top left and then hit those futures micros if you got an account like mine. And if not, go to the minis. You know, if you're Dr. Jim over here, you're slinging 5 to 10 minis, 15 minis, 20 minis, whatever it might be. But the watch list is super helpful to kind of sift through these different products that you can take a look at. And then we can jump to the second slide here. On this second slide, we have some of the futures point multipliers, Dr. Jim, and I got to get more familiar with these products too, right? MNQ right off the bat, $2 per point. I know that. I got 15 points of risk on. I already know that's $30 worth of risk per contract. I know that immediately. So it's like ingrained in my mind. But oil, natural gas, we got some VIX futures, we got some Bitcoin futures, we got some Ethereum futures. There's different types of futures products. There's different types of futures products depending on your personality, what you're comfortable with trading. But I think those points will catch you off guard. Those different tick values, and depending on the product that you're trading, you'll definitely feel the change in sensitivity, especially in your P&L. But with that being said, Dr. Jim, we got some energy products. We got some micro crude oil. This is going to be about $100 per point. So paying attention to that tick value is going to be really important. And if we have a couple minutes left, we can go in and see those different ticks values for each different asset. But we got some crude oil. That's going to be about $100 per point. QM, this is an E-mini. These are going to be some larger products too. I know we got some bigger guys out there, some bigger whales, some bigger portfolios too. About $500 per point. The E-mini natural gas is going to be about $2,500 per point. So you can see, again, some of these futures products can be very massive. Some people might speculate using these futures products. Some people might hedge their portfolio using these futures products, but the points all work the same. And then over here, we have the Russell products, which is going to be $5 per point. I've been saying this. I want to get a little bit more active with the Russell products. The volatility doesn't seem to be, I like the volatility in there, and the point multiplier isn't too much. And then we have volatility in some of the crypto products. I haven't traded any of these crypto futures, but I was pretty surprised to see that we do have some of that micro Ethereum, which is pretty intriguing to me, just because if a market does have volatility, just because I'm not well-versed or don't have a ton of experience in that specific market, doesn't mean I don't want to dabble in it or just become a little bit more familiar with it. So seeing those micro Ether products got me excited, just to know that we can kind of get our feet wet a little bit with some of the futures crypto side of things, just so we can stay up to date with the times, Dr. Jim. I'm not trading too much crypto, but these young guns out here are. But with that being said, Dr. Jim, those are some of the lists that we have for the day.
Yeah, man, we gotta stay. You gotta be relevant. You gotta stay relevant in 2025. Yeah, that's pretty cool with the crypto futures. I haven't traded those either. I do think it's so interesting to me that for the equity index futures box, you went Russell NASDAQ.
I did.
You didn't go with the big dog.
I'm showing my bias. No, I didn't.
Yeah, you didn't go with MES. No
I didn't.
MES.
We all know what you're alluding to, Dr. Jim. I didn't trade the S&P.
No,
Times have changed, Dr. Jim. So it used to be the Dow, then it was ES. My hunch, I think NASDAQ is going to be the more popular index to be traded eventually. I see a little bit more steam picking up with the NASDAQ, a little bit more favoritism with the NASDAQ, but ES is still has a crown, no doubt.
Well, no, it definitely has the crown. So I think that, and maybe we're both kind of just colored in bias from our little circles that we live in, but I mean, I think right now NASDAQ is the preferred trading product over S&P 500.
I would agree.
But my question to you is, so it used to be the Dow, like that. I mean, that was before your time, man. That was before my time.
Mm-hmm.
Like that's how far back that goes.
Yeah,
right?
This is from doing research, by the way. This is no.
Yeah, right. Yeah, you had to crack open the history book, right?
Yeah.
Yeah, you just got to talk to old people on the street. They know. Just talk to them.
Right.
So so the Dow, that was the market. S&P 500 is now the market.
Right.
Do you think we'll ever get to a point where the NASDAQ is the market?
I do. I think so. I think
really.
I think once the young bucks. Once
they take over?
I think once the young bucks start really building a career and just have developed more of their path, more of their career. I'm talking when the young bucks get above 25 into their mid 20s, late 20s, early 30s. Like the young bucks today, once they get to that age, I think we might see a little bit of a shift in terms of the preferred index that we refer to as quote unquote the market.
That's really interesting.
Yeah.
Wow, that would be quite a shift.
Yeah, we'll
that
see.
would be quite
History
a shift.
tends to
And
repeat
so-
itself. Will it this time around? I don't know, Dr. Jim. I don't know.
Well, I mean, so that means we're going back to the Dow? Is that what you're saying?
I don't know. Have we gone full circle all the way? I mean, I don't know if we've gone a half
I
circle
mean, you're
yet.
you're mixing sayings now. Like, I can't keep up. We're going full circle. Like, history repeats itself.
Yeah.
Like, we got to stay modern and relevant. Like, I don't know, man.
Yeah,
you know?
you adapt or die. But
Adapt. Dude, that's exactly what I was just going to say. I'm like, we need a Moneyball
Right.
reference on the show right now. Dude, that's so good.
I mean, I think adapt or die, obviously that applies to everything. But I mean, as a
Oh, yeah.
trader, I mean, especially as a trader, I mean, especially anybody else in chat, I've gone through this multiple times where, especially when it comes down to scalping futures, I'm like, oh, a month or two green consecutive. And it's like the market is changing. Now I'm forced to adapt, change risk parameters, do those kind of things. And it's like, sometimes you're forced to adapt or you die sometimes, Dr. Jim. But anything else to add on to that before we wrap for the day?
No, it's good. This is good stuff. I think, and I mean, there's so much opportunity with the different futures products. And, there's so many different things you can do. Like, you can do the equities, you can do the metals,
Yeah.
you can do the energies. Like, you can do a bunch of different things.
No doubt.
And so I think it's a nice addition for a lot of people's portfolios, but you just got to make sure that you know what you're signing up for.
Absolutely.
So, make sure you're getting it with the micros, make sure you're starting off really, really small, and then just build up some experience.
I love what you said there, Dr. Jim, as we close here. Know what you signed up for. I think one of the best ways to manage your emotions in the market, in life, yada, 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 is to manage your expectations. Knowing what you signed up for, I think, will help you manage those expectations a little bit. So I love that you said that. But we got a comment over here. Well, MES has options, while MNQ just moves like a madman. That's hilarious because NQ absolutely will and does move like a madman. As we've noticed, MNQ and MES have a very high correlation. They're two highly correlated assets, but NASDAQ is more prone to having those fake out type moves. This type of that crazy price action. Definitely NQ is prone to that. Hello, man. Did we miss a futures lesson? We did miss a little bit of a futures lesson. We really just touched on the different types of point multipliers for the different futures products that we can trade on the Tasty platform. And then usually we'll come over here to the trade tab, click that drop down menu, and look at our list over here. But with that being said, Dr. Jim, we always appreciate you having you in the teacher seat, getting your insights and thoughts on the portfolio, whatever's going on in the market right now. That's pretty much going to do it for today's segment. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We will be back next week. We'll catch you guys next time. Peace.
Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been
You, man. Thank you. I really appreciate it. Very kind word.
Hey everybody, tonight, and it's another great day. The old ratio charts serving us well. Bullish precious metals, bearish equities. And that may seem odd because, you know, it's like, what are you talking about, bearish equities? The ES is up, NQ's up. In fact, the NQ is up hundreds of points. What are you talking about? What I'm talking about is almost every short I've got is down. And precious metals are up. However, I've dumped them. Not the short equities. I'm more bearish than ever. But for the moment, I've taken my profits on gold and palladium for a number of reasons. I want to get back in, believe me. This could be a terrible mistake. But my view has not changed at all long term. But for the immediate moment, I'd like to get back into better prices. We'll see if I've jumped the gun or not. We got a late start, so I'm gonna go at a brisker pace than normal because I'd like to end and not stomp on the toes of my the show that follows. So let's jump in together. We have the spider here, which is, as I said, up, but not by much. We're just basically filled the gap between Friday and yesterday. So meh, not a big deal. The diamonds, which I'm kind of fixated on, are down. And this is why I'm in better spirits than you might expect, because the only option position I've got is puts on the diamonds. And the diamonds, God bless them, have been red all day long, in spite of all the other green happening, including a big rise from Google. So diamonds doing pretty good, but what we want to see is to cut below yesterday's low, which would mean that all of this giant pop from a couple of Fridays back is laid waste. So give me another down day, that would help. The small caps are also down a little bit, pulling away from that dashed red line. As I said, Google was the big news for the bulls. It wasn't some amazing product introduction. It wasn't some amazing earnings announcement. It's just that a court basically let them off the hook for antitrust stuff. And so they're celebrating with lifetime highs, big rally today. As you can see, even from a multi-year chart, it's an explosive rally in Google. And so that's helped out the cubes. They've been green all day long, but I actually took advantage of the strength and I re-shorted the cubes early today. So yeah, I've covered almost nothing on my shorts, but I have added some shorts. And as I said, took profits on the precious metals. Keeping an eye on SMH as well. This is the semiconductor index. What we want to see is to not get above that red line again, respect the gap, and get below this dashed blue line, get it below yesterday's low. It feels like the week's just started, but we've only got 2 days left. And Friday morning is kind of the big one, probably, because there's the jobs report. And one speculation, which I kind of agree with, is that it'll come in really weak, which will give Powell not only the clearance to cut rates, but maybe cut them rather dramatically. And people misinterpret this as great news for equities. Crumbling economies aren't great news in the long run. So anyway, should be an interesting Friday, that's for sure. I keep talking about the thesis, the ratio chart. Another thesis I've got, though, kind of a minor one, is that being poor is going to suck even more than it used to. I've mentioned this a number of times, and I've pointed to companies that cater to the working class as in trouble. And Dollar Tree is one of them, and that has paid off nicely today. We're down about 10% on DLTR, and I'm sure it'll be much lower in the months and years to come. DG is falling a little in sympathy, which is another of my short positions out there. But the big shift for me today, which I did not plan on doing, is in precious metals, because as I looked around, everybody's talking about it, and everyone thinks they're contrarian, but almost nobody is. I like to think of myself as one, and I kind of act that way too. And so I don't like it when everybody's talking about what I'm into. So everyone's running around talking gold. I'd rather than cool it a little bit. It's getting a little too popular for my tastes. So, but there's been some chart-based reasons too that I've chilled on this. For one thing, my target on silver has either been reached or close to reach. Here on PSLV, it was reached perfectly. This has been our long-term target on PSLV. There's today. Look at that. Bang. This was set 2 months ago. So that cleared it and a few pennies to spare. So that's cool. I wasn't in a silver position, but it sort of contributes to the idea that precious metals for now maybe should take a breather. Gold is blasting the lifetime highs, and I'm always a fan. God bless it. Want gold to do great. It's a poke in the eye to the Federal Reserve. So I've not abandoned you, gold. But what I would love to see would be an easing back to the breakout point and then an even bigger rally. And then we can talk about 4,000 an ounce. But it'd be nice to see this dial back some. The front month is still up about $30, but it's softened up from where it was earlier today already. Here's GLD itself. And like I say, the perfect trade for me would be to ease back to this gap. I would love that, get back in a big way. But I've had I had an irresponsibly large position on this stuff, and so I've taken those profits. Even with palladium, not because there's anything wrong with the chart long term. I want to emphasize that. But I believe if gold's going to soften up, palladium's not going to ignore it. It'll probably ease up too. Also, miners have gone just bonkers. I mean, here's GDX. It's red. We've got a red bar already, so that's pretty cool because I wrote about this a few hours ago. I thought it was overextended. And our old friend DRD, this also had a good strong day, but again, I think it's going to soften up. Where I've really focused this, though, isn't just taking profits on those things, but actually, I'm not shorting gold or anything like that. But what I did do is bought puts, January puts on the XME, which is partly gold miners. It's other stuff too. Tight stop on this. But, you know, in my estimation, the ratio chart that we've looked at from time to time is going to play out in a powerful way. And if miners soften up even somewhat, XME will really soften up. So I think I'll get more bang for the buck there. So yeah, I got long, they're up, the months are few and far between, but I got January puts 85s, I think, on that. Energy's working out well too. I think I mentioned yesterday I was tiptoeing back into energy on the short side. That worked out beautifully. Here's XLE doing a hard turn, 2.5% negative on that. I shorted COP yesterday, COP down 4.27%. I shorted Occidental yesterday, down 3.72%. And Schlumberger also shorted and also down. So across the board, a lot of good things happening, things lining up very, very nicely. I will say that in this insanely overvalued market, why people are going to IPO still is beyond me, because they all just bomb. You know, I didn't have that. It's not like I looked at 1,000 and found a few that happened to go down. Like every single one is down, you know, like 100%. I didn't have to, it was an easy job. I just kind of look at some IPOs and they're all wrecks. So, you know, here's Unit, here's Six Flags, which ironically is named Fun, Figma, which I think reports this week sometime, Circle Internet, we've talked about before, and the ironically named Bull, which is, I guess, kind of a secondary brokerage, which had a great outing for a day. You know, they came public, and the next day they went exploding higher, and they burned down from 80 down to they're around $12 right now in just a matter of a few months. So these, I think, just are indicative of the priciness of the market, that the IPOs just can't hold their price. One last chart. We actually made it. See, if I go fast enough, I'll get out of here. Hang Seng Index. These, and we've seen the military parade, and our government has managed to let this triumvirate parade around with North Korea and China and Russia, all our good friends, marching up and down in this military parade. That's not why I shorted FXI, but I have. And I do find this chart interesting, that we do get these big lunges higher. And I think we're just about done on China. So I've re-entered FXI on the short side. Long term looks pretty promising, I think, for the bears. So that is it. And I'll see you tomorrow. Okay? Hope you're doing all right. A couple more days to go, and they'll wrap the week. So see you Thursday. Bye-bye.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new, who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. Don't I know that? Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to
I
you.
mean,
That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yeah!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live, but the closing bell sound.
Of course it is. Of course it is.
It's that time of the day. Even the S&Ps are up 12. They've actually been up around 3 to 5 or 7 for most of the last hour or so. This is about as high as they've been for the last hour. Of course, they've been much higher, up to 64, just about 25 handles higher than that. And again, just off their lows of 425, up 12 handles. NASDAQ up 100. You can see there, they got over 525. That's about 150 points higher than where it is right now. Russell down 9 and the Dow down 190. Those have been the two weakest of the group. Volatility in by 20 cents on off. Volatility stayed bid for the first hour or two of the market, even with the market higher, and is slowly giving it up after that. Trading, call it mid-range for the day at 1730, down 20 cents. Bonds have been strong all day. Trade up to 1422. They're 114.14 right now, up a full point. Bitcoin up $1,000 and change, back over 112 after flirting with under the 110 handle yesterday. 111 today, 112.5 right now. Ethereum up $203. That's a big move on a percentage basis, almost 5% on a percentage basis. And that's a big move in Ethereum, especially compared to Bitcoin. Oil down $1.76. That's trading near its lows now. I guess, I don't know, risk off trade? I don't know. Gold up 27. Again, about $20 off of its highs of 36.40. But you can see gold here having a monumental run the last couple of days. Silver up 14 cents and nat gas up 2%, or about 5.5 cents. I thought the big day mover today, Apple up almost $8. Google strong all day, up almost 18. Well, there you go, 18.26. Really no backing off there. Some of the other stocks that took us higher today. I mentioned Google already and Apple, but you got Tesla up 6 and change, Netflix up 6 and change, Roblox. I know you were trading today, up 4 and change. CRM has earnings after the close today. It's up $3. So that's all I got for right now. What do you think? I know you're happier than you thought you were going to be last night when you called.
Well, I
me.
didn't think Reddit was going to go from up 17 to down $1, and now it's up $2. But that's a weird move today. I didn't think Coinbase was going to reverse. There were a lot of stocks at one point this afternoon.
Palantir was another one. Palantir was high.
It was up a lot this morning. I think it had like a $5 or $6 reversal. But what's interesting is at one point this afternoon, I would have bet a lot of your money that S&Ps would have been down on the day at one point, and they never went into red territory. They looked like when they dropped from up 35 to only, up 2, you're pretty sure they're going to go down in the day, and they held their ground at about unchanged or, up $1 or something like that.
Yeah.
They held their ground. I was very
a little bit lighter volume today than the last couple of days.
Oh yeah. Well, the up moves always have lighter volume. I mean, I was quiet. I mean, the S&P still did, 1.1, 1.2 million cars. That's pretty good. I was definitely quieter today. I think I did lean. Let me just see how we ended up in Google. I sold a bunch of premium in Google today. That was the one stock I felt like there was some extra juice, and we are up a tiny bit of money. Miracle, considering the stock was up 14 when we did it, and now it's up 18. I also sold a little bit of Delta and Apple. That did not work out. But I still think that's the right play here to get a little bit short Apple here. I mean, other than the what's your assumption trades, we didn't do a lot of opening. I didn't do a lot of opening
Well,
stuff.
you had to prepare for your boyfriend Dylan. I mean, like on Wednesday, you don't have a lot of idle time.
And my boyfriend was very animated today. He was quite. Dylan fell for the oldest trick in the book. He thought that the Russian president, the Chinese president, the Indian president actually had an open mic. Like I tried to explain to him that there's no such thing as an open mic when three of the top 4 world leaders are at the podium. Nobody's going to make a mistake and leave the mic open. If the mic's open, it's intentional. Like you and me leaving a mic open. And they're talking about extending their lifetime, to 150 years. And I thought that was hysterical. But Dylan likes the idea of being able to extend your lifetime to 150 years. So we had a fun conversation about that kind of stuff, among other things. Anyway, for truth or skepticism. Yeah. I mean, I don't know. I was in a fast market all day long, but I didn't get as much trading done as I would have liked. And I, on the one hand, I'm a little happy that they rallied back here on the close because even though I'm short, I felt like.
Do you consider this an inside day?
Yeah. Well, yes, because all day they've been between up 35 and up 5, let's say. So yes, 30 handle move, inside day, no question about it. I think tomorrow's going to be worse.
Why do you think that?
Excuse me.
Because I tell you.
Because I think the market's going to sit around and play for a Friday number. And I think that, I don't know what the expected move tomorrow is. I'm not looking, but I'm guessing it's going to be pretty narrow.
On the E-mini S&Ps, 28 handles.
Yeah. So that's down about 6 handles from today.
Yeah.
And Friday's probably going to be, let's say 40, right?
Ooh, Thursday, Fridays are travel days for us. Do you know what happens on a Thursday, Friday travel day for us?
Well, Friday's what? What's he expecting Friday? 40?
55 total.
Oh, total 55. Yeah, that makes more sense. Because Friday, you're going to get a big number. And I mean, we're going to be doing a live show. That'll be fun. At least there'll be something to do, hopefully. I like to pick numbers. I'd like to pick days where they have economic numbers. At least fires up the troops. Okay, boys, you can stop this little rally here. I don't want them to go anymore. Up 15 is plenty. Up 5, 10 the day.
Up 14 was good. Up 15 is plenty.
No, up 5 would be perfect to close the day. Up 16, 17, nah, I don't like that as much.
But you got your bond move that you wanted. So
we did. I mean, bonds were up 106 at one point. Now they're up a point, but I'll still take the point. I think the point up move in bonds pretty much assures. I took a few profits in bonds today. I took some profits in notes. I took some profits in bonds, but I think the up a point today, and more importantly, the notes going to 112.5. I think that assures right here a very minor rate cut. I think it's pretty much a lock. I don't think, though, that the bonds will move on a rate cut. I also think a rate cut might
too crowded a field, right? That's what
way too crowded. Everybody's already bought it, that kind of thing. Yeah. I also think a rate cut might send the stock market lower, because I just don't see it as, it's already priced in 12 times over. When you look at different stocks today, it was truly a very mixed day. Like, my screen is probably as a combination of red and green as much as
opposed to what other colors could it be?
Well, sometimes it's all red or all green, and not today. Today
it's mixed, like I said. Yes, it's kind of a mixed day. Yes.
Yeah, today is pretty mixed.
CRM, FIG, CLEN, and AI for earnings.
Well, I thought we did an AI trade this morning. We did. We did a little ratio spread, and so far it is a small loser.
AI is unchanged, down 9 cents.
We sold 2 puts and 1 call at $1.50. It's $1.84 right now. That's ugly. That's worse than I thought.
Volatility creeping up in there. IV rank is 65.
Yeah, and then in CRM, we're up small today. And what did we do in there?
CRM up $3.58 at the moment.
Yeah, so CRM, we have a small put ratio spread, and we have a put calendar below the market, SEPOC 240, and the 235, 230 1/2 ratio spread. It's a very small position. It's tiny. No, you know what I was going to say? It's long, but it's not. It's flat delta. What do you see in there?
I don't see too much to be honest.
10 million shares is a tradable number. Somebody wrote me yesterday, said, what do you consider tradable for earnings? And I go, I'd like to see 10 million. I guess 6 or 7 would be the lowest. The implied move is a lot higher than it was. It was not 19.5 yesterday.
Yeah, it's over $19. That's one of the larger percentage moves that we've
it was a lot lower than that. I thought it was like 12 yesterday. And maybe I was wrong, but
I'm not 100% sure.
I don't know, but it's a way bigger move today. Like, in other words, you wouldn't have made any money selling premium early in this one.
Right. You got a $20 expected move. You can't do I guess you can't do your $20 out. Never mind.
What can you do?
Well, you can't go 2 times the expected move. That would be too far.
Oh, no.
Yeah.
No. You can go on the put side to the 225s, $30, 1.5 times the expected move. You can go on the call side. You can probably go on the call side 2 times the expected move. 256. Yeah, you can go 256 to 300. Yeah, you can do it. You can go 2 times the expected move to the call side. You can go 1 time the expected, 1.5 times the expected move to the downside. You can pick up $160 per 1 lot. Done. I had to do it.
And you're playing that down the middle, pretty delta neutral too.
Yeah. You get 2 times expected move to the upside and 1.5 times expected move to the downside. That's just call skew.
Mm-hmm.
But CRM, never my favorite stock. I won't play it big. It trades thin. Markets are better in there today than they'll ever be.
Because it's active and ready for.
Yeah, because it's active. It's got earnings. It'll be a little weird tomorrow. Are there earnings tomorrow night that we should know about when we're on an airplane?
Oh, I can look at that for you real quick if you want to give me just a quick.
Because I'll be logged in and you'll be asleep, and I don't want to wake you up. You'll probably be drooling on somebody next to you. And
ABGO Lulu tomorrow.
Oh, okay. There you
But
go.
You got tomorrow's show to do it.
I know, but
I mean, markets move overnight. Why would you want to do it today?
I don't want to disrupt your pasta meal on the plane.
And you know what? I didn't go with the pasta, if I remember correctly.
Please don't tell me you went with the short rib. I'll kill you.
I went with the chicken.
You can't do chicken.
I'm just kidding. I don't even eat chicken normally when it's there.
Not real chicken. It's like some kind of rubbery thing. I don't know what it's actually made out
No,
of.
I think I went with a gourmet meal, Sadna. If they offer a gourmet meal back there in Coach, I think they call it Twizzlers. I went with the Twizzlers.
Gourmet? I don't think so.
A gourmet meal. I believe so.
Okay, I'm not liking this rally here. Up 5 was perfect. Up 10 was like okay. Up 21, no bueno.
No bueno. Trying to make Sadnov.
Well, it's weird because here's what I thought. I'll tell you what I was thinking. I was thinking that yesterday when they sold them, when they rallied them on the close about, I don't know, 30, 40 handles, what it felt like.
Yeah.
I kind of felt like today they might sell them off like 20 or 30 handles on the close.
Yeah, you know what? That's never worked in the last 15 years.
It's worked every single time.
It's worked one time for you 15 years ago. Actually,
every single time.
16 years ago now.
I don't know. I may have to just sell them here just to prove you wrong. I don't know how much I can take out of this trade, but
it's about time.
I'll try. I don't really want to do too much, but try and see if we can squeeze a couple of points out of it. Because I think they may just mark them down a little bit on the close. But
is this your astute tape reading?
Yes, there you go. Now we'll see. My astute tape reading. Yeah.
Okie dokie.
All right, what else do we got here? What?
You sold them at 447.
447. That's my lucky number. 447.
That's what I heard.
Somebody win the Powerball, the 1.3 billion?
Oh, I don't know. Let me see. I didn't get any tickets.
I didn't either. Somebody said you can buy them online, but I didn't try.
The Powerball jackpot reaches 1.4 billion after Labor Day drawing draws no winner. Sadnov, that was 34 minutes ago. No winner.
Wow. Well, the cool thing is at the airport tomorrow, they have one of those like lottery, I don't know, booths, whatever they're called, machines.
Ticket? Yeah. Okay.
Better bring cash. Bring a lot of cash. The odds are in our favor.
They take credit cards now.
Yeah, I don't want to use
I'm just teasing. I don't know if they do.
If they do, that's criminal.
I agree.
But yeah, we'll buy some lottery tickets tomorrow. We'll be.
Nothing will make Vanetta happier than us winning the Powerball.
She won't come in.
I'd almost like to get like the fake tickets like we used to do on the floor. Like we would buy the numbers the next day and then like run around saying that we won to her. She would be insufferable. She really would. She might quit.
I don't think that. Yeah. Well, you're one in, what is it? 1 in 300 million, 390 million. Yeah, take your chances.
She wouldn't be very happy with us. I know that. That's all I know.
Yeah, I've never won a lottery, but I know a couple people that have won like a little amount of money.
Mm-hmm.
Nobody's won a big amount of money. All right. Let's see what we got here going into tomorrow. We're not really taking a big position. We are definitely a little bit short going home tonight. Same position kind of we had last night. We just have fewer long bonds. S&P's up 24. I don't like this close. I'm just going on record.
You liked it so much about 15 minutes ago, though. Remember?
I liked it up 14. I don't like it up 24.
Yeah.
Yeah, I didn't need that. Didn't need that.
Yeah, it's been a little bit of a creeper.
Yeah.
No doubt about it.
I'm not going to be able to squeeze out a positive day. That's for sure. Let's see, what else do we got?
Did you put on a gold position today too? Didn't you do something in gold?
I sold a call spread.
Oh, call spread, got it.
And it actually worked. Small.
Nice.
Nothing.
Money goes to money.
What's gold doing? It's up 27. Yeah, it worked small. Let's see, what else do we got here going into the close. So we got the boys in the room coming on in a couple minutes. So we'll go to Dylan, Ilya, and Chris. Looking at my screen just to see if there's any other stocks that kind of
MSTR has been on its butt. Sosnoff, Ivy ranks only 13, but Bitcoin has caught itself a bit. MSTR has not.
Well, MSTR is a scam. Anybody that buys MSTR is an idiot.
I forgot.
Literally, it's a literal scam. It's like, I can't even explain. Like, anybody that puts their money into MSTR is not a bright human. Any one of those scam digital currency plays where you just write a check to them and they buy,
invest your money for you,
and they invest your money for you at 2 times what crypto's trading for. That is a scam. MSTR is going to go down. I'm pretty sure. I don't know what year it'll happen, but MSTR is going to go down as a colossal, very public scam. And I think they're just the ringleader. And you've got there's probably, there's a bunch of copycat.
Well, I hope you're wrong. I mean, it would be the biggest Ponzi scheme in history. I mean,
no, it wouldn't be because
it's $94 billion. I mean, I guess maybe not. Who knows?
The reason it wouldn't be the biggest in history is because there'll be some residual value in Bitcoin, and there'll be some residual value because they are buying Bitcoin.
Allegedly.
It's not like Bernie Madoff, where he just made up the numbers. That's where you just steal the money outright. A little different, but it's still a scam.
These guys are sophisticated scammers, what I'm trying to say.
I don't know how sophisticated they are. I think they're actually pretty dumb, but the investors are dumber than they are. So, yeah.
Well, there's one born every minute, they say. Sosnoff, one born every minute.
Well, it just bothers me, but whatever. That these guys can get away with it. And, it's unbelievable. All right, what else? I mean, what if you started a fund and all you did was buy, just pick a stock. All you do is buy Lucid. I'm starting a fund and all I'm going to do is buy Lucid for $2 or $17.
That would be a stupid fund. That'd be even stupider than the people in MicroStrategy.
Would it? Because
if they had an opportunity to make some money. He would have no opportunity to make any money with your.
Okay, so pick a stock. Let's say I buy Roku, just as an example, or PLTR at 100, but instead of buying it $155 where I buy it now, I'm going to buy it for you at $205.
The low price.
The low price of $205. That's what this is. It's ridiculous. Well, it looks like my initial sale didn't work out too well here. All right, let's go to the boys and have a little fun.
Bring them in.
See what they're doing. Bring in the gimps.
Gentlemen. So Tom, did you tell Tony about our discussion?
Oh, I didn't want to hurt his feelings. Come on.
So Tony, I want to picture this. Picture this. Close your eyes. I want you to picture this. Quantum computing has arrived.
Okay.
AI has it developed 2 more years. So you have quantum computing that is now managing AI that's 2 more years developed, understanding that it's developing every month, it's doubling in capacity. So it's 1,000 times more capable 2 years from now. And it's under the influence of quantum computing. It then takes control of the entire banking system and empties all of the bank accounts, takes the nuclear codes and launches all the nuclear weapons, and then commandeers all of the murder drones.
Wait a minute. They do this and they already have the money? No. You're going to do all that before they have the money. You're not even a good thief, Dylan. I mean, why are you going to steal all the money?
What's the point of the thief? The thief is a robot. The thief is not a person. The thief is a computer.
Well, what do they need money for?
Just for the fun of it.
No, I don't like it. Ain't going to work.
And you know what the investment thesis of my merger of quantum computing with AI, my investment thesis is buy gold.
This is Terminator. Sarah Connor comes and save us. Don't worry about it.
Buy gold. Trust me, it's not going to be pretty.
This is what I said, Tony.
Why, the robots have kryptonite to gold or something?
No, he thought you would be upset by the murder drones. He thought
I was really just trying to get the murder drone. I overdid it.
You overdid it.
Sorry, I should have just stuck.
Well, you sold past the close. If you would have just said they got control of the murder drones, I'd say I'd be in my basement tonight. That's right.
But see, Tony, this is why you got to get the money first, because if you don't get the money first, then there's no financial markets, and then the gold you're going to buy now is useless. So the premise here, if you're going to be buying gold, you need functional markets in which to get liquidity on the way out. Otherwise, the whole thing is moot.
Falls apart.
What are you going to do? Throw gold bars at the murder drones? That's not going to work.
I mean, Dylan's testing his theory here, so in case he gets called up to the big leagues and asks that question on national television, he wants to see what the reaction would be.
I'm working my material right now for my Bill Maher appearance.
Right. This is like a comedy club.
Yeah,
on a Friday night.
This is like working Milwaukee on your way to LA.
Right. Exactly. Yeah, you're just testing. You're testing.
Did he just call us Milwaukee?
He's just testing his content. That's all. He's testing his act.
I think it works. I think we're going to put a plus on this one. Hey, Vecchio, how about my Google call, by the way? You see that?
Sometimes it's better to be lucky than good. You happen to be both.
Oh, see that? That's great.
No, he's pandering because he wants to go on Bill Maher too. He's just being nice to me because he wants me to put him on Bill Maher like I have that kind of power, but I don't. But he'll be great on Bill Maher. Anyway.
I just want to know, is Sadnov going to live for 150 years?
No.
He was into it until I told him that in order to do organ swapping, you got to crack open your chest plate and open it up like a clamshell in order to get in there. And then he sort of backed off.
I just want to know if it's going to be the 90-year-old Tom that lives to 150 or the 50-year-old Tom. I'll do it if it's the 50-year-old Tom. If it's the 90-year-old Tom, I don't want to do it.
I agree with you there.
You need a blood boy, Tom.
A blood boy?
Oh, yeah. It's the newest thing. It's the newest thing.
What is that?
You have a young person with pristine blood that you do blood transfusions with.
That was also a movie. That was
And what's in it for them?
Money? Do you pay them? I don't know. It's something that the Hollywood elite are up to. Don't find out more when he's out in LA.
So you're good company.
Why do you think I'm going to LA?
They get to spend time with you.
See his blood boy.
Now, that was also a movie with Charlize Theron.
I think it's Theron.
Maybe it's whatever she wants to be called, baby. Doesn't matter to me. Mad Max. Yeah, Mad Max. That's right.
Hey, Dylan, he's losing it. He called me honey today.
He definitely needs a blood boy then.
He called, you guys missed it this morning. He called me honey.
It's midterms, Dylan. It's midterms.
I mean, it slipped out. He said honey. That's not how we do it. Or
That's
honey,
what he said. It slipped out.
Not in public.
100%.
I mean, I'm waiting for artificial blood.
Okay. Artificial blood.
The first company I ever bought, and this is a true story, 1980 or 81, was a company out of Japan called Green Cross. It was the first stock I ever bought. It was $8, and I think my first purchase was 100 shares, and it was a company called Green Cross. I think they went out of business a few years later, but they made artificial blood.
Speaking of blood, did you see that there's an Elizabeth Holmes Twitter feed? Is she tweeting from jail? I thought when you're in jail, they take your phone away. Is that really her?
Yeah, you can't do that, I don't think.
Is that just like some sort of some imposter using her identity?
It's those robots you were talking about.
The ones that we're going to throw the gold bars at.
Is everybody else's Chris Vecchio frozen with a giant smile on their screen right now?
It's a murder drone. It's all the murder drones taking over.
Murder drone took out Vecchio. At least he went out with a smile.
He did go out with a smile.
It starts on the East Coast. We got some time over here in San Francisco.
I'm going to go out with a smile.
This new switcher's killing me.
90-second break and let Christopher come back. I'm going to say goodnight to you, Jamokes. Peace.
Ciao for now, boys.
Be
Ciao for
around,
now. Nice
gentlemen.
sale on those futures, Sadno, if you still got it.
I tried. I still got it.
Gold, get your gold before the murder drones do.
Get your gold.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Gold and Google lead the way. It's Wednesday, September 3rd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. Actually, Montreal to take you through the rest of this hour as we're here to wrap up this trading day. Our man of mystery will be in another M named city, perhaps sometime tomorrow for the show. In any event, we'll be taking you through the rest of this hour as we wrap up the session. Futures market closes at 5 Eastern, 4 Central Time. As always, if you're on the platform, Tasty Trade, on the website, tastylive.com. Thanks for joining us. Come on over to YouTube. Tell us what you're trading. Okay, so today was a mixed day, right? We have bond yields that are going lower for bad reason. Jolts come in weaker than expected. Fed cut odds move up for September, October, and December. But the stock market isn't all that bothered. Dylan's call for being bullish on Google yesterday is realized almost instantaneously, with it shot up higher following the antitrust case that helps the NASDAQ move back to the upside. And perhaps indicative, if you're one of these mega tech companies, do you really have to be worried about antitrust moving forward? In any event, gold and silver keep running, which is perhaps the biggest story of the day. Volatility in the currency space exploding to the upside. What does that mean? Oil back to a familiar place, and so much more to discuss over the next hour. Dylan, we have you a little bit on limited time here today. You're going to abscond and make your way across the globe as our resident Carmen Sandiego. So let's go with you first. Stock market rebound, inside day, limited action. People are out buying the dip already after yesterday morning's sell-off. Is that it for the month of September? Was this the shot the Bears had?
No, definitely not it. You're guaranteed to have at least one big spook show. Remember, you got a jobs number coming, you have a CPI number coming, you have a whole list of awful things that could happen out there, and you have at this point the foregone conclusion of a rate cut that may end up actually being a negative. Because what I agree with what Tom was saying, which is so let's say we navigate the jobs number, toss it aside, navigate the inflation data, toss it aside, then you're going to get this rate cut, and then all of a sudden I think that's the biggest risk to the stock market, is you're going to get this rate cut, and everybody's going to look at the rate cut, which has now been, oh, we're going to need the rate cut, we want the rate cut, all the things for the last few months, and then I was going to say, hang on, why are they cutting rates? Oh, because they're expecting a slowing economy. So a rate cut is not very much of a code language, but code language in some world for the central bank is anticipating economic weakness and feels compelled to reduce rates. And that economic weakness is being driven by idiotic and chaotic economic policy from one Donald J. Trump, president of the United States. And so I do believe you're going to get one real barn burner of a sell-off at some point between now and I think the most likely location for it is the cut itself, but you also have the possibility of a really hot jobs number or a really hot inflation number, and all of a sudden they're like, oh, maybe the certainty of the rate cut is off. Maybe inflation is so strong and that maybe they won't do it. And so I just think there's plenty of opportunity for getting your face kicked in here. And as far as today's rally is concerned, for my money, for as much as I'd like to pat myself on the back for my Google love had absolutely nothing with anticipating a ruling like the one that we saw here with the gap higher. So I take zero credit of it, or I take zero validation, I guess I would say, from the Google move, because it was unrelated to my entire thesis, which is that I believe Gemini and Google itself is going to be a dominant piece of the AI landscape, and that has nothing to do with a judicial ruling, which is obviously great for the stock, but unrelated to my thesis. So I think that this thing's going to get pounded at some point in the next few weeks, but I don't have the skills to trade the short side into situations like that, but I'm more than happy to hang around and look to buy some of my favorite names like Meta, Microsoft, et cetera, at lower prices when it happens.
My God, he sounds like me.
Dylan, it's interesting that you point this out about Gemini.
Short though. Sorry, go ahead, Chris.
Oh yes, I am willing to get short, but I think our reasoning for what there stands to pull the rug out from under everybody is basically on point. It's that there's all these rate cuts that the markets now have baked in, especially for next year. I think this year is kind of a given already. We got 3 meetings left. The markets and the Fed have both settled on 50 basis points going back to May, and they haven't really come off that very much. With only 3 meetings left, there's but so many ways you can put together 50 basis points and rate cuts. I think the biggest issue now is what happens next year, because that's where the Fed and the markets are very far apart. The Fed in June said 25 basis points. The market said that's cute, 75 to 80. And that's a big gap. And so if there's anything like a sense that the markets are not going to have the Fed go their way with the summary of economic projections this go around, if they come out in 2 weeks and say, yeah, it's still 25 for next year, I think the markets are going to be very disappointed.
Dylan, I want to circle back to your comment on Google here having the best model. Polymarket judges that to be the case, which it's only September 3rd, so there's a long way to go over the course of the month. But quickly here, Artificial Analysis, independent auditor of the AI models that are currently out there, they test for three different things: intelligence, speed, and price. And you see Google not at the top for intelligence, but in terms of speed and price, it's very efficient.
Well, not only that, Google is the only one that
particularly for the Flash model here.
Yeah. Well, Google's the only one that already has an embedded system to monetize it as well. Like, because the other thing is like, because Google obviously has been doing paid search for so long, GPT doesn't have a way to make money by embedding cash flow from corporations that want to buy keywords on car sales, on cruise lines, on, you know, all the things that people buy advertising for. But boy, Google does. And they have not only have a very impressive AI product, they are by far the best positioned to make money from their AI product.
Well, they've certainly been a leader here today at 9.12%. You can't ignore that. And what did I do? Got to get rid of those lines on the screen, figuring out this new Zoom setup. Either way, though, Ilya, it's a modest gain here for the NASDAQ, up 0.78%, the S&P up 0.54%. So we find ourselves looking at we'll just get rid of you, clear all my drawings. There we go. We find ourselves looking at a bit of an inside day, even if the market's poking up here a little bit after hours.
Yeah.
The jobs data that came out today was not good.
No.
Period. End of story. JOLTS job openings north of 7 million is going to be fine. That's still a healthy number, but it missed expectations meaningfully. 7.35 previous, 7.4 expected, comes in at 7.18, 7.17, I believe. In any event, you're looking at a labor market that has forward-looking indicators of weakness around the corner. There's a fine balancing act between the market liking a 25 basis point rate cut and being spooked by the possibility of 50. Is this jobs report this week something that tilts us into the territory of 50 cuts?
I think actually the larger concern here is pointed in the other direction. So one thing to remember about these JOLTS numbers is they're a little bit delayed. These are July numbers. We're already in September. So the important caveat here might very well be that the U.S. economy actually seems to be reaccelerating. And the markets are operating on the idea that the Fed is wrong to worry about inflation. What they should be doing is worried about an economic downturn. And that's why all these rate cuts for next year, right? The underlying story that has underpinned the rally from April's lows is first, oh, good, the administration is responsive to market discipline. If we crack the bond market and the currency market and the stock market all together, all at the same time, with vigor and conviction, the administration will turn around and go, hey, let's pause the tariffs for 90 days. Everybody's getting yippee, take it easy. And then the next thing, once the market sort of settles on, okay, they're not wholly blind. They do see that when they go across the line that we're going to pull them back and they will follow. The next thing is this mounting outlook for 2026 rate cuts, which has been building for months. Whereas, at least since May, the outlook for this year has been fairly steady, few basis points here or there in either direction. So when you look at the architecture here, the risk might very well be not that the economy is weak, but that the economy is actually speeding up. You saw it in the S&P global PMI numbers. They gave a fairly strong assessment. The ISM numbers this week on the manufacturing side were not as strong as that, but they weren't terribly weak relative to expectations. They did give us a fifth consecutive month of contraction, but that was expected. It was a little bit faster of a contraction than anticipated, but not by much. More importantly, the internals of the report showed you a bounce in new orders that came parallel with a decline in the price component. So there seems to be something under the surface that's on the mend. Citigroup economic surprise data is surging. The Atlanta Fed GDP Now forecast is surging, well in excess of expectations.
3% right now.
Right, well in excess, and forget the reading. Never mind it. The tone of the data going into the model over the past several weeks has clearly been positive, as you can see in its slope. Never mind what the actual forecast is. It's a long, long time until we get third quarter GDP data that we can really hang our hat on.
But directionally, end of July, it's 2.1%, and now it's up to 3%.
Exactly.
Past 5 weeks have given us firmer data.
Exactly. It's the tone of the data. You get the same thing from the Citi Economic Surprise Index. Over the past 2-3 weeks, it's sailing. So perhaps the larger issue here isn't that this late and probably stale JOLTS data is a little soggy. The larger issue may be the markets are operating for months now on the premise that the Fed is going to have to go their way on rate cuts and be a lot more dovish next year. And then the Fed, in just 2 weeks' time, might well come out and say, here's your cut. You've known it's coming for ages. Good luck building a rally on that. In fact, here's your other cut still in the outlook. Good luck building a rally on that. You've known about that one for months. There's your 50 basis points. Next year, we'll give you a quarter of a percent cut. That's it. Good night. Because inflation expectations are still something, as we just saw from the latest Fed minutes, the primary concern. So we're not going to go your way on this expansive outlook for next year. What does that do for stock markets that have absolutely reveled in the building of that outlook, especially over the past month or two? That might be the bigger risk.
Ilya, I saw that the firm, or rather Dylan, because we only have you for about 25 more minutes. I saw that Challenger Gray and Christmas, which Challenger is one of these companies that produces a jobs cuts report. Right now, 10,000 jobs in the economy have been cut explicitly due to AI. We've seen that the college graduation rate for young men is now exceeding that for those with just high school diplomas. Can the stock market run forever if we're reaching a societal tipping point where we're going to have a natural push higher on the unemployment rate? It's a big productivity boom, but it leads to more people without work.
I mean, it's a bigger question than the stock market. Because my personal sense is that entry-level programming jobs, entry-level communications jobs, entry-level marketing jobs, entry-level finance jobs are all going to be in decline. I believe that they'll be in decline to the degree to which that it's going to be more than just a financial crisis. I think it represents a potential social and political crisis. Which I suppose could result in a decline in equity values. I mean, to answer your question directly, but I think that it's much more likely to manifest in other parts of our lives before it does in the stock market. The stock market is extremely efficient at capturing and generating profits. Reducing labor overhead is a move towards efficiency for a corporation. It's not a bad thing in terms of the mathematics of shareholder value, because the yield per employee goes up as the headcount goes down and as the revenue and profit go up. And so it's a balancing act between, large levels of young male unemployment or young human unemployment, although I do think that the finance programming jobs skew male.
Demographically, sure.
But I don't know does that cause I just don't think that the first place that shows up is in Fed rate cuts or the stock market. I feel like that shows up in other parts of our lives in a more physical way. That is, our friends' children, our cousins, our nephews. This is a very real thing.
Well, you mentioned the revenue per employee or something like the take per employee. NVIDIA is $3.6 million in revenue can be employee. If you think about their total revenues divided by number of employees. For Meta, it's 2.2 million. For Alphabet, 1.9 million. Apple's 4 million. Microsoft, 1.1 million. Like that's obviously what a lot of these companies are shooting for. I think Valve, the company that makes Steam, they're $19 million in revenue per employee, which is outrageous. I digress though, Dylan. Like that's ultimately where these companies want to go. If we can clear out the low-hanging fruit. I hate to use that term.
That's the promise of AI is that the profit of, that's why I think there's a world where the stock market continues to propel itself higher on the efficiency of revenue per employee at the same time that society, I think that the bigger issue is how long can we tolerate using the stock market as a measure of economic or national health at a time when it is actually benefiting from things that are negative for society, like widespread young male unemployment.
Well, I think so. There's a problem searching for a solution here, right? And the problem is a demographic shortage of workers, especially as we clamp down on immigration, because the baby boomers are retiring. They're a bigger generation than certainly the one that follows, and even bigger than the millennium generation or millennial generation, which at least in the US is sizable. Elsewhere in the world, it's very, very small, and thereafter it's even smaller because whereas U.S. millennials decided to have kids for the most part, you're welcome, U.S. labor force, doing my part. But in Europe, in Asia, that's very much not the case. And so you have a shortage even then of labor in the U.S. In fact, this is the reason why the Fed is constantly talking about maybe the neutral rate on interest rates is actually higher because we're entering a period of perhaps prolonged deglobalization. That's something that increases costs. As everybody now is learning with these tariffs, globalization keeps your prices low. Deglobalization brings your prices up. Go ahead and pick at that. But when you look at the demographic aspect, that's a kicker. That makes labor more scarce. That makes the price of labor higher. So if there's a cost saving here from AI, that's perhaps not such a bad thing if you can manage the windfall correctly. And so I think, speaking of globalization, the key here will be, have we gotten any smarter at managing windfalls from economic, sort of economy-wide good things? Have we learned that those things don't distribute evenly, and how we can redistribute those windfalls for the benefit of society at large? Would we be looking at such a controversy about globalization, an unmitigated good thing at the global level, at the economy-wide level, were it not to have costs that are very concentrated for a small part of the population that we decided not to take care of with the windfall from that globalization, to our great error? Would we perhaps, with the windfall of AI, which is a great solution if we can manage it for this labor shortage, will we be better at dispersing the windfall and keeping everybody happy that way?
Hell no.
I can only hope so. But our track record on it isn't great.
Hell no.
Well, you mentioned the demographic issues. I've been pulling up this population pyramid tool, populationpyramid.net, not an endorsement. If they want to endorse us, they're more than happy to send us a check. Central America, this is a healthy looking pyramid. Younger generations are bigger than the older ones. You go over to somewhere like Canada, you see it fattens out in the middle, but it's getting skinnier on the low end, not great. China is obviously problematic where the younger generations are smaller. The United States,
I don't believe in China's capacity to challenge us in the longer term because of that pyramid.
Maybe they don't need to challenge us in the longer term, Elliot. Maybe they just need to challenge us right now.
Well, I mean, they're certainly intent on it.
So it is a country like Mexico, for example, being a Central American country with a younger base, you could see how younger population, and it's one of those things that helps keep our labor market afloat, that we have a next door neighbor with a lot of young workers.
You'd think we are so much better positioned than Europe because we have Mexico with whom we have a trade agreement where the population isn't in a demographic crisis, that have more years of education per worker than does China, where the cost of labor is a fraction of what it is in China, which sits on our border. You'd think we'd be doing everything we can to leverage this advantage. Instead, we are cracking down on immigration across the southern border.
We do see a second highest close of the year here today for the Mexican ETF, for what it's worth. So it's not exactly like it's been a big overhang. Canada, on the other hand, not a problem, weaker currency. This is something that popped up on my screen today. I couldn't help but notice the volatility in the Canadian dollar shot through the roof here. IVRs of 100. Again, in the currency space, you're seeing relatively elevated IVRs compared to the rest of the market. Pound, Aussie, both in the 30s, Canadian dollar north of 100, euro over 30, yen over 20. Dylan, how do you look at something like a Canadian economy? If the US is muddling through and we're getting these faster growth rates and it's better than expected, right? Shouldn't Canada have a bit more upswing to it as well? Because it means that our demand engine isn't falling apart? Or is this just a new world? We can't think of the world in terms prior to April 2nd, 2025, and the US may be muddling forward, but the Canadian economy could be screwed. So forget prior relationships.
Yeah, I mean, few things. One, I tend to think of the Canadian economy as utterly irrelevant.
Fair enough.
I mean, I can't think of a less relevant. I mean, it's relevant to Canadians, to the world. Who cares? One. Two, if you do care, it's a petrostate. It's no different than Russia or Norway or Venezuela. And so as far as I'm concerned, the Canadian dollar trades much more as a derivative of oil as it does to any economic activity. And three, I can't think of a country that's more damaged by Trump's activity than Canada, because I don't think there's a country that, because the economy is relatively small and extremely dependent on trade with the United States. Which leaves me to have a fairly negative view of I think that Trump is against trade with Canada, which couldn't be more stupid in my opinion. But I do believe that the Trump administration is against trade. I believe the Trump administration is probably, to Ilya's point with Mexico, I actually think the Trump administration is more aligned with trade with it's more hostile to immigration with Mexico because of fundamental American racism, but it is more interested, America is more vested in trade with Mexico because of the auto manufacturing business, which is a core American industry that's entirely has a massive investment in Mexico. Now, I know there's a lot of auto manufacturing also across the bridge in Detroit, so that's not nothing.
Well, in Canada, it's now.
So that's what I'm saying. That's what I'm saying, that the Canadian piece is not nothing because of the across the bridge in Detroit. But none of that reveals any insight on the Canadian dollar. I have no idea why the volatility expanded in the Canadian dollar today.
To your point, we've seen the Canadian economy decouple from the U.S. economy last year in the wrong direction, largely because what's been powering the U.S. economy has been the service sector. The goods sector has been kind of dead. Really, there's been nothing stirring there until these tariffs. But overwhelmingly, the strength of the U.S. economy and the sort of standout strength, really, because Europe has been on standstill since mid-year last year. China has been at near standstill since mid-year last year and continues to be there. Ditto for Europe. The U.S. had a bit of a dip at the start of this year with this tariff rollout. It's now apparently re-accelerating. Chris, I know you'll like this. This is a seasonality thing, Brent Connolly of well-deserved fame pointed out this morning that the economic surprise index actually has a degree of seasonality, and that September is a good month for U.S. economic data, seasonally, going back the past 10 years, which is interesting. But if the U.S. economy is reaccelerating, it is reaccelerating in service demand, and services demand is primarily something that's met with domestic firms. The reason Canada is sort of historically so sensitive to what's going on in the U.S. is, of course, 80% of everything Canada exports, including those linkages in the auto industry, Dylan, comes mainly to the U.S. So if the U.S. is having an issue, Canada is going to see it because of a drop-off in demand, et cetera, et cetera. Well, the problem is U.S. hasn't demanded a lot of goods recently. It's been mainly services, and services are mainly sold at home by domestic firms. And so Canada has had a tough time in their economy despite a booming U.S. basically since the middle of last year. So I'm not sure how much of a window the Canadian dollar is here into what's going on into the U.S. The two economies have kind of gone their separate ways a little.
Do you have any insight into the expanded currency volatility period, not just in the dollar? I mean,
yeah, I think we're getting to a place where the dollar has started to sniff out something, because if we look at what's going on, again, since the beginning of July, the outlook on Fed policy has only become more dovish, but the dollar is holding. And I think what might be going on here is the market's getting ready for this September FOMC. The currency market is the spot FX market, the largest thing, the largest marketplace in the known universe. Much larger, for example.
Suggesting that this is a prelude to a dollar move higher?
Yes. I think that what the market is starting to sniff out here, perhaps, is that the dollar is done falling, and that perhaps the biggest rug pull of all here isn't going to be that the Fed does or doesn't cut rates in September. It's that they don't endorse this dovish expanse that the markets have baked in. And that gives you a dollar rally. It disappoints the stock market, where everything for this year has long since been baked in. And so you have a kind of maximum pain for everyone involved. Those betting on a downfall of the U.S. economy, wrong. Those betting on the U.S. getting eclipsed by a Russia-China-led challenger, wrong. Everybody is wrong. And the stock market is wrong, and the currency market is wrong, and everyone is wrong. The market loves things like this. We saw this with the September FOMC meeting last year, where the question wasn't, will the Fed be dovish enough, or will they be more hawkish than the markets want? What ended up happening was they were more dovish than anybody dared hope, and it threw everyone for a loop all at the same time. I think we're setting up for something like this, maybe, where the Fed isn't doing the thing. It's doing it, but it's doing it and forecasting it differently than the markets want it. And it's because the economy is stronger. And that's what takes markets down.
Well, it is usually a good month for the U.S. dollar.
How about this short S&P long dollar through the Fed?
I'm there.
No thanks.
I am there. I am so there.
Have fun. How about just long dollar and long stocks? Why can't we all just get along here? Yeah, well, the S&P 500.
I'm long some stocks.
Yeah, but
you're just not the U.S. indexes.
You're the Combs to my Hannity in this thing.
Yes.
Right?
Yes.
So 6461 here. Dylan, I saw that the White House released their preliminary list of 68 occupations that would qualify for the new deduction moving forward. I see under entertainment and events, there's digital content creators. How creative should our accountants be this next year? We're digital content creators.
Yes.
Yeah. Something to think about. I'd like to hear what the chat has to say. Maybe we can lobby to get all paid in tips now moving forward. That'd be fun. Okay, so we have our Nasdaq here as our leader. It's up 0.8% after hours. It's in the midpoint of basically a trading range it's been in for the past several weeks, going back to the start of July. Where does that leave us ahead of non-farm payrolls? It's really tough to be directional right here. You could make a case either way. If we keep to this 25 basis point rate cut landing come Friday, I think that's probably the best outcome for the market. You get to 50, you spook everyone that the Fed's cutting for the wrong reasons. We want the Fed to be able to convince themselves that they're cutting for maintenance reasons still. And maybe they are, right? If GDP is at 3% and there are signs of economic reacceleration, we saw PCE last week come in only at 0.3%, which is much lower than what would have been imputed from CPI and PPI. Maybe they can look through the inflation bump, Ilya, and they can focus on that labor market weakness that's starting to set in. There's a few charts that I've shared today on Twitter, and I put this up on Futures Power Hour earlier to such an effect, but it's worth doing again here now. But in Tursten Slack over at Apollo Global published this in terms of downside risk to non-farm payrolls over the coming months.
Mm-hmm.
You could see when the U of Michigan expected change in unemployment rate on the right-hand side versus the monthly change in non-farm payrolls. We're heading deeper into negative territory. And then looking at the NFIB surveys, single most important problem being poor sales. That's rising. We've seen it tend to be a bit of a leading indicator in years past going into other cycles. So the labor market looks like it's still going to be soft moving forward. And I think that's what the bond market sniffed out today, because today was a really, really, really good day for the bond market. No matter how you slice it, ZB, ZN.
Huge day.
ZB's up a full point right now. Is this the safer trade going into Friday, guys? Dylan, if you had to be long bonds or stocks into the jobs report on Friday, where do you feel more comfortable putting your incremental dollar right now?
Stocks.
Why is that?
Because I think that stocks are dominated by the AI supernova, and I think the bond is generally more sort of dominated by the granularity of the economic data. So I think that the tea leaf reading of the jobs number represents more risk for the bond and the dollar than it does for the stock market, which I believe the stock market is drunk as a skunk on AI juice. And I don't think it's going to wear off until that Fed meeting. And then I think the soonest that the stock market wears off is with the Fed meeting. They may sober up and realize that the Fed's cutting rates for the wrong reasons, as you would say. But I also just don't think, I think that Trump has done a reasonably, look, the jobs number has always been a little bit of a wild monkey.
Squirrely number.
And it's always been heavily revised, when you go back. And Trump has exploited that by sort of amplifying skepticism around the number. And so I think that also that the relevance of the jobs number is that if it's a bad jobs number, that Trump will write it off as fake news. If it's a good jobs number, it'll help the stock market, and it won't be such a good jobs number that the Fed's not going to cut rates because the labor market's too hot. But it could affect the expectations for future rate cuts, to my friend in San Francisco's point, which I think is more relevant to the bond. How's that for a wraparound answer?
Yeah, it's just so funny. It's like, okay, you want a rate cut? Here's the data that proves that you need a rate cut. And it's like, no, that data's fake.
Yeah.
It's like, what guy?
Yeah, what?
This is the guy that told you the tariffs brought in more money than the total aggregate trading value of every single good and service in the entire U.S. economy.
That is true. We've apparently made $8 trillion so far because of the tariffs. Good on us.
Aggregate trading is only 7 trillion. Sorry.
So Ilya,
just think what that means. We have hiked taxes on U.S. taxpayers to the tune of $8 trillion in a Republican administration. What?
Yeah, don't think too hard about it, Ilya. Stocks or bonds for
That's my
Friday's...
problem. See, it's the thinking. I got to stop doing that.
How long I've been saying this for weeks? The thinking is a huge issue. You really need to think about not
so
thinking.
Easy, Ilya. Don't think.
I just can't help myself. I think the audience needs to finance a lobotomy.
You just said, I think. You did it again. You just said it.
I can't help it. I can't help it.
2 words. Every time there's a problem, it starts with those 2 words.
Your audience, help us finance like a little shock collar for Ilya every time he says, I think. So we can actually pass it around. Someone in the audience can buzz it. right? Or they can send a word to the chat.
Now
It's like,
there's a
stop
good
thinking.
gimmick.
Yeah, it's like a dunk tank for Tasty. Oh God, this is a terrible idea. We have to bring this to Beth.
This is how we're gonna get the digital content creator tax credit.
Yeah. Yeah. People can bid up. Who wants to put a shot collar on Tony and buzz him in the chat? So, okay, ZN and ZB here both have really stupendous days. And ZN, if at least we go to the continuous contract, it's kind of pressing up at the top side of a range here. It feels like this is really squeezing in now. We're riding up that 1 month. It really just wants to hold the 1 month. So earlier today, my particular bit of rigmarole with my bond position, I'm still trying to get out of my iron condor at 23 days, roll out to 51. But with ZN, I did ultimately move out into a long call spread as opposed to being in a short iron condor here, because this thing looks like it wants to pop. And rate cuts are coming. And if the worst thing that happens is that the Fed tells us that they can't cut because the economy is too strong, not that inflation's too hot, the long end of the curve probably doesn't blow out. Right? This context is ever changing. I'm going to have a totally different feeling on this tomorrow, but then the long end doesn't blow out.
Right.
And like that to me is the most probabilistic outcome as of what we know today. So that's my pure adjustment there. Dylan, silver and gold have been really kind to folks the past few days. I know you're not much of a gold trader. You said that you don't seem to wrap your head around it, which is fine.
With the AI murder drones, I'm coming around.
Okay, you got some time. Tell me why is gold the preferred hedge with AI murder drones and not the not Bitcoin?
Because the great hacking, anything that is non-physical will become worthless in the great hacking. Once quantum and AI gets done with the great hacking, all the only physical assets will become the only store of value.
So people are going to walk around with their gold bars. They're going to shave off little bits at the grocery store.
That's not going to happen, but I believe that sentiment around it will continue to propel buying of gold in fear that one day it could happen. So I'm not here to say that, oh yes, people are going to be walking on the streets with gold bars fighting off murder drones. I'm saying as people become increasingly skeptical, anxious, and worked up, yippee, as some people have said, just about the overall digital risks, that it's all gold positive. And not to mention, the crypto, people don't know. I mean, people rightly, I think, should question crypto's value. I think as the Trump family makes it obvious that it's a giant scam, as they use the presidency to pull in $5 billion, crypto becomes a less credible alternative to fiat currency. At the same time, fiat currency has all sorts of issues. And so I think all of it sort of comes back to gold as a store of value that is transnational and post-digital apocalypse.
I'm actually with Dylan on this to the point where, Chris, we talked with Tom on first call about you can now short Bitcoin because IBIT lets you have options on it. And so you can actually structure an attractive risk reward position where you don't risk that much money. And you can have incredible risk reward. And I was actually able to structure a put vertical in IBIT going out 59 days. That's 4.5 times to 1 risk reward, risking about $200 for every $900 in profit potential. So I have that on now because if you look at it just ticker agnostic, Bitcoin looks like it's broken a range and is starting to come in. And obviously we talked yesterday, I've gotten myself into a long position in gold on this breakout as of yesterday. It continues to work in spades, obviously surging. So to Dylan's point, I'm effectively in a kind of pairs trade here, long gold, short Bitcoin.
Well, we see here gold's up at 36, now 21 after hours. Silver prices, they did top 42 earlier today to pull back in. They're up by 0.5% right now. I cut out my gold positions yesterday, guys, just because 3 DTE and to me, this is a little uncomfortable looking how far gold is from just its 1 month, it's 50. When we've seen this in the past, It hasn't lasted that long. Post-election, post-liberation day is a different story, but even so, you kind of get into this territory where at the highs, you're $300 north. Talking about like, and when you're in that 7 to 10% range above your 1 month moving average, gold has been overcooked despite whatever the backdrop has been. We're getting into that zone right now. Just thinking about playing this, call it responsibly. Maybe it's MGC for folks who are just riding the momentum wave, but I would watch this 1 week moving average here. We close above it on August 22nd. And since then it's been the rails that have guided gold prices higher. And really for the first time during this rally, we don't touch it today, kind of showing how this thing is really getting stretched. But at 35.50, being short put spreads against that level, 3,500, 35.50, it is a 2-to-1 risk to reward, a little bit better than that. It's a big contract, a big trade, so maybe people want to do it with GLD. As for me, I prefer leaning long silver still, just because there's still a bunch of time in that contract, 55. This is also getting long in the tooth. So fully anticipating that there may be a pullback, but as long as we hold the former highs around 40, 25, 40 and a half, no reason not to stay bullish, especially if Dylan's murder bots are coming.
It ain't mine.
You got to get out of here. Do you want to have a final thought?
Hopefully the murder bots don't hunt me down on the way to the airport.
Well, if they get you at the airport, that's okay, because at least you've made it to your destination. But before then would just be such an inconvenience.
At least I'd like to get a cheeseburger in before they take me out. I do like a good burger at the airport.
That's nice. Noted. Dylan's final meal before the murder bots come, a cheeseburger.
And
Dylan,
I'll be in Montreal. So
have a safe flight.
I'll see you tomorrow. All right, bye guys. Thank you.
Ilya, you and I can go wherever we want to go for the rest of this. As far as I'm concerned, the market today was not anything spectacular, interesting, noteworthy. It's just the second day back after vacation. Usually the first 2 or 3 days, the influx of trading volumes again. And it was a healthy volume day, 1.38 million in the S&P 500. What's the plan for the second half of this week? How do we approach this with volatility staying low in equities, VIX coming back in here the past few sessions? Do you just keep playing sideways chop until non-farm payrolls and then wait for the directional move then?
Well, I think you have sort of ways you can approach it depending on your time frame, and my time frame is almost never in something that I count in terms of days. For me, a trade that's good typically lasts a few weeks. A trade that's wrong typically is cut within a week or two. So there's about double the holding period. I'll hold a trade that works on average between 3 and 5 weeks, something like that. That's sort of in the realm of the normal. So for me, I think now in the second half of the week, you're into data that actually has consequence. So tomorrow, we're going to get the ISM service sector index. That's a really important set of numbers. If not for any other reason than the price component there, and you and I have talked about this extensively, tends to lead CPI and PCE by about 2 to 3 months, give or take. And what it's been signaling is that the PCE and the CPI numbers are going to blow out, because we're just coming up on that period here where the ISM price component has already told us with this 2-3 month lead that we're about to start seeing hot numbers, and either this thing pulls back or it doesn't. Now, the manufacturing side has been pulling back. This has resisted. Service sector is still hot. The expectation is that we're going to get a reacceleration. If the thing is hot, people are going to start looking at this, to our point about U.S. economic data seeming to start to surprise higher over the past 2-3 weeks or so, with some conviction that markets are not going to wait. They're going to look at this and go, oh man, we're not going to get this validation in the summary of economic projections, are we? And already next week is the Fed's blackout. There's nothing. Nobody's going to say anything next week. So it's the ISM number and it's the jobs number on Friday this week. If the ISM number is hot, the expectations for Friday's NFP and the level of speculative fervor around, wait a second, this isn't about September. September is a given. We know that. It's what's next. It's what's next year. And the markets are significantly out on a ledge relative to what the Fed is saying for these ISM numbers to come in hot and for the jobs number to come in hot. So if
So are you
that's
arguing
where
that
this
good
goes,
news is bad news this week?
yes. Yeah, I think so. I think so.
What kind of news is good news? Because I also could make the argument. I think that bad news is bad news still.
Sure.
Right? Like, isn't there a sweet spot? Maybe this is a little asymmetric, but
yes.
A hot jobs number, odds for September come in, December's lobbed or December cuts shift to December, October's eliminated. Basically,
Yeah, I mean,
we're at 51% for October. So you get a hot jobs number, September odds come in, but you're still going to get it unless it's a really hot inflation report. October goes away, market locks in December as the second cut. If it's a weak number, you get the October cut locked in, you get a third cut in December locked in. All of a sudden, the Fed's cutting for bad reasons.
Yeah.
I just think the bad NFP scenario seems to be the one that carries more risk for the market right now.
I think you've got to thread the needle really finely here.
It leans us away from maintenance cuts and more towards the recession cuts.
Yeah. No, I think you're right. I think the trouble with this NFP report, and for that matter, the ISM report, is you don't want anything that isn't with some very modest wiggle room bang on expectations. And really, this is what we've seen. I mean, consider what's been happening. We haven't gone anywhere in August. We get the CPI report, markets go, oh, this is good. Nothing is disturbed. That gets the markets one day. And then stasis. Then you get Jackson Hole. Oh, this is good. One day. Stasis. NVIDIA. Oh, this is good. This is fine. We can survive this. This is not the worst. This is better than it could have been. It's not great. It's the weakest upside surprise in 2 years, but this is okay. We can stomach this. One day.
It's interesting. I read
one day. This market cannot but survive event risk at this point. Never mind thrive on it.
How many rate cuts did we have last year? 50 in September, November, December,
100 basis points.
100 so far. Given where the Fed's going right now, we probably get at least 50 more cuts, which means during this cutting
the markets
cycle.
and the Fed agree on this.
Well, but that means we're going to have 150 basis points of cuts cumulatively since last September.
Yeah.
Historically speaking, when you have 150 basis points of cuts, once you pass that threshold, do small caps start to reliably outperform their mega cap counterparts. So the Russell has perked up here and is still holding up right now. And I've left it hanging here on the screen because while it doesn't get the attention of NQ or ES, rightfully so, it also has a pretty decent looking setup still.
Yeah.
Where we just bounced off of the most recent swing high yesterday and today with an inside bar. So it's decline, doji, signaling that this little correction may be over. The small caps have been unloved for such a long time, right? They haven't done anything for really years. We could go and look at the Russell continuous contract, and we really got to go to the weekly. Let's go back 10 years. I mean, we haven't even cleared out the levels that we were at in 2021. This has been a multi-year trading range down here.
Right.
So what if this is the window where we finally get that Russell outperformance?
It could be.
I think the timing of this really matters. If the economy, if we keep looking at Atlanta Fed GDP and 2 weeks from now, it's the Fed meeting, but 2 weeks from now, it's 3% and the Fed cuts. And then we go into the middle of October and that's still looking at 3% before we get the GDP report, right? And then GDP comes in at 3%. There's still going to be the tailwind effect of the inflation that's coming through the pipeline.
Sure.
But if the labor market's cooling and aggregate demand is dissipating and it's enough to offset the tariff increase economy-wide, then the Fed is cutting and helping reduce the labor market, and you can kind of keep the music going, which
I think that's what the market is hoping.
We managed to do that in 2022, didn't we? I know inflation surged, but the economy didn't go into recession.
No, because I think, and this was really key in the middle of 2021. In fact, the June, I mean, you can go and read the policy statement if you're not familiar. Go read what the Fed said in June 2021, because the Fed basically came out and said, okay, the inflation is not a transitory thing. We need to start gearing up to hike. And for the next 6 months, they talked the markets into a new paradigm. They gave a very telling speech at Jackson Hole. They started walking the markets through what this looks like. And then they gave them the forecast in December of that year that showed them where the Fed would go. And then come March, they started to hike. Heavy-handed. But they walked the markets through it for 6 months. So they had the benefit of at least saying, right, this is what to expect. And so the economy didn't fall off because expectations were well managed. Kudos to the Fed. We're not in that kind of an environment here, if only because the White House is a total wild card. And what this might look like as a consequence of how these court cases go at the Supreme Court could be a whole other ball of wax completely. If we consider the markets have spent from April to now coming to terms with what the tariff regime is and going, okay, it's not the worst it could be. Okay, it's not going to be the worst of all tariffs. The world is not fighting it. They're trying to cobble together deals because this is still the largest consumer market in the world, and even China can't front on that. They need this demand also. So, okay, we're going to figure this out. The administration is not immune to market discipline. They're not going to do something completely idiotic and destroy the U.S.-based bedrock of the global financial system, or at least not intentionally, as they appeared like they wanted to do. Imagine what happens if all of a sudden the entire consensus is tossed out the window. Because suddenly the tariffs don't stick, the Supreme Court doesn't bless them, and then the administration has to pay back something to the tune of $200 billion back to U.S. corporates.
$8 trillion.
Well, you know.
Whatever.
Yeah. I guess the administration can spin it as a tax cut.
I
don't want to give anybody any ideas. Forget I said that.
This New York State public education, private education in college at Lafayette, like CFA charter. Obviously, I don't know math that well.
Yeah, you know.
So my bad,
billion,
Ilya.
8 trillion. Close enough.
Just
rounding error.
Dr. Evil math. With that, we're out of time here on Overtime. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak and a departed Dylan Radigan, I've been Chris Vecchio.
Kind of departed.
We'll see everyone tomorrow, same time. Until then, though, take a brief break, get some water, some coffee, and then Ilya's back with you. Tasty at night. Macro Money up next.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What's a macro risk right now that people aren't talking about enough?
Complacency is one. There's a lot of bullishness around. The street is very complacent. There's very little cash on the sidelines. And I think there's just, in general, the regulatory environment is too good, so people become overconfident.
I still think the geopolitical thing is very, very interesting. Frankly, I've had a tough time kind of parsing out the headlines in the news lately. I guess I would say like this ongoing discussion of just different conflicts that are going on and how it's pushing and pulling different asset classes. That's a super diplomatic answer. I'm not unaware of that. I think it's really important to kind of be mindful of your positions when there is so much talk and uncertainty going on and making sure that you're always controlling your size.
I mean, the dollar's depreciated over 10% against the euro and some other major currencies. I don't see how that doesn't start to play into some companies' earnings and their fiscal reports.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with why a position did what it did. You know, sometimes the market wins, and sometimes you have a 90% winner, and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
It stands still for the stock market. But we do have some spicy economic data in the offing, just 24 hours away, even less even. And perhaps we can finally get some motion this week. That's what we're going to talk about here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is first take a look at what these markets have done today, how that fits within what they might be looking to do over the course of the rest of the week, and really how it fits with where they've gone already. And the operative question here is, do the markets actually want a strong U.S. economy? Because we are going to get some economic data here that is going to give us a view on the economy. And of course, we're looking for rate cuts this month. So ostensibly, the hope is that we are going to get an economy that's soft, but not too weak. And the evidence, were it to present itself to the contrary, either this way or that, could very well upend market consensus and force a repricing in a way that wouldn't be so great, perhaps. And we're going to talk here about why that is and what this could mean across a range of assets, from stocks to bonds to currencies, and of course to high-flying gold. So let's take a look here first and foremost at how the markets did today. This is not perhaps the most exhaustive sort of readout, because I took the screenshot while futures were still adjusting for the daily close, but this gives you a sense of where we went today. A little bit of an increase for the S&P 500, 0.53%, a slightly larger one for the NASDAQ, 0.75% there. Yields down again. This time it's the long end that sees the biggest decline, almost a percent off there. The front end off by about half a percent. Crude oil smashed back down toward its range bottom. Nothing really doing there, but we did have an attempt at something of a breakout earlier, and that has been summarily aborted. Crude oil down 2.5% here. Gold continues to march higher, still pushing to new record highs, up 0.8%. Euro and the yen managed to claw back some lost ground against the dollar, albeit very, very modestly so, up about 0.2% apiece. And Bitcoin manages a slight bounce, up 1.2%. Let's put this in the context of how the markets have behaved this week, and suddenly these moves look like an afterthought at best. The S&P 500 is net down a little bit this week. NASDAQ is flat. Rates haven't really gone anywhere, neither has crude. The dollar is a bit stronger on the week, despite this move over the past 24 hours that's seen those gains pared back a little bit. On the whole, the dollar is up almost 0.4% against the euro, almost 0.8% against the yen. The standouts are, of course, gold and Bitcoin. And when we compare this to where the markets left us last week, we can see that for gold, indeed, there is momentum. Last week, it was up 2.9%. So far this week, it's up another 3%. But Bitcoin being up 3.8% is hardly encouraging, considering last week it slumped almost 7%. So it's recovered a bit of lost ground, but it is still very much in the doldrums here last week into this week. So that's where we stand. The markets are basically idling in place here after last week. And so the real question seems to be, number one, what is gold all about here? And number two, what is going to get these markets out of bed? And the second question first here, as it were, the next several days finally give us some macro event risk to work with. And the next inflection point here comes at us by way of the service sector PMI from the Institute of Supply Management. Now, we already had the manufacturing number earlier this week. It came in at 48.7, a little bit worse than the 49 expected. As ever, for PMIs, this is a diffusion index. So 50 is neutral, above 50 is positive growth, below 50 is negative contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So you can see here that we expected for the manufacturing sector to be in contraction territory at 49. We got it at 48.7, so it's contracted a little bit faster than anticipated. But for the most part, not a big difference. As we can see, as a matter of fact, for July, both the service sector and the manufacturing index hugging 50 here. Of course, manufacturing on the low side, the service sector almost exactly at the line, gave us an economy that was at best approaching standstill. Well, the expectation for this number in August's report is that we're going to get a spirited recovery back up to 51. That's certainly nothing to sneeze at in context here. That would actually be quite the significant recovery. In historical terms, up to 51 would be the strongest since April. So a spirited rebound in the forecast, and of course, services is a much larger component of the overall U.S. economy. So, were we to get this bounce, you might perhaps conclude, well, maybe the U.S. economy is reaccelerating a little bit here. Now, as it happens, we already got some numbers out of S&P Global that suggest that indeed the U.S. economy has been reaccelerating for quite some time. We can see the composite index here that takes in both services and manufacturing has been powering higher for a few months here in this version of the data. Moreover, we can see that the situation has been mainly powered by services. In August, as it happens, we didn't get a strong lead from services. It kind of idled, but we did get a potent increase on the manufacturing side. Strong rebound here. And we already don't have that in this ISM number. So perhaps we are looking at something more constrained. Nevertheless, if we look at the way that U.S. economic data has performed relative to expectations recently, we increasingly look at this very strong improvement in this City Economic Surprise Index, showing us that indeed U.S. economic data has increasingly, especially over the past 2.5 weeks, outperformed relative to baseline forecasts. Now, this is, of course, especially interesting because this doesn't speak to the data being good or bad. It speaks to, in absolute terms, it speaks to the data being better or worse than expected. And when you're above zero here, as we've been really since the beginning of July, we've seen U.S. economic data tending to register better than expected and increasingly vertical in that direction over the past 2 weeks. This basically means that economists' models of the U.S. economy, from whence expectations come, have been entirely too pessimistic relative to realized outcomes, and that actually the economy looks stronger looking at this data than anticipated. Now, if we look at the Atlanta Fed's GDP Now model, importantly, this is a nowcast, not a forecast. So when people bang their table and go, this number was wrong, well, the question is when. It's a running tally, not a single forecast. And what we can see from this running tally is that the data going into the model since late July and until about the middle of August was basically steady, a little bit better than consensus forecast. We have a range here from 0 to 2% for the annualized growth rate in the third quarter, and it'll be a long time yet before we actually get to the third quarter numbers. But what we see is that while this was relatively steady here, again, echoing what we've just seen in the Economic Surprise Index, the tone of the data over the past 2-3 weeks has been aggressively more positive, and that's pushed this model higher. And so now, whereas the top end of expectations in the markets are for growth in the third quarter of just under 2%, This model says it's closer to 3. So although we don't have a perfect matchup here with the mix services versus manufacturing, S&P Global, which is what this is, back to ISM, we certainly get the sense that the economy is improving, and the general tone of economic data seems to echo as much. Today's soggy JOLTS data notwithstanding. That data, of course, as stale as July. So perhaps it doesn't really matter much anymore. In fact, even within that soggy ISM report for the manufacturing sector, we can see here the 5th consecutive month of contraction here. We can see the pace of contraction has in fact eased from July into August. Moreover, this decline in the pricing component, this decline in basically inflation input costs, of course, very much linked to the tariff conversation, that has bid up new orders. And this does, in fact, suggest that we have some positive cues here emerging under the surface, despite the weakness of the headline number. And of course, this would be consistent with the PPI, the Producer Price Index data that we saw most recently, suggesting that wholesalers are, after a period of some months where they were eating the tariff costs and trying to insulate consumers, hoping the tariffs would somehow go away and maybe they didn't need to destroy demand by passing on these higher costs. Well, they've started to pass them on because apparently they've concluded that the tariffs aren't in fact going away. In the second quarter, as a matter of fact, inventories were spent down. Those inventories that were accumulated in the front running of the tariffs in the first quarter. Imports basically stopped because companies did not want to go out and buy things at higher costs if they were going to eat those costs. But now, in the third quarter, it looks like the pass-through from inflation is occurring. Companies have stopped attempting to shield consumers. Now they're expanding their margins back out to pass on those tariff costs downwind and to the end of the supply chain, the retail end of the supply chain. And perhaps on that basis, they're starting to buy inventory again, because they're no longer in a place where they're saying, well, we're not going to buy expensive inventory if we can't charge expensive prices from consumers. Now they're saying, well, if we are going to pass on these costs, let's restock. And so there seems to be a kind of parallel situation here where, of course, price growth is still very elevated, but not quite so much as it was. New orders are picking up in perfect sync here. You can see here's the top in prices, here's the bottoming in new orders. And so perhaps we are in fact seeing a U.S. economy reaccelerate. And this is where things start to get a little bit hairy for the markets. Now, you'd think a positive surprise on U.S. growth, a reacceleration of the U.S. economy, should be something that the stock market celebrates. Well, maybe so, but that would be as misguided of an assumption as saying every rate cut takes down a currency. And those of you that are familiar with what happens with an earnings report or a well-telegraphed policy announcement would surely have had the experience of saying, wait a minute, why is the stock falling when earnings beat on the upside? Just take a look at NVIDIA last week. Why is a given currency going up or down? Let's say it's going down, but the central bank raised rates. Well, how does that make sense? Well, it's because the markets are forward-looking, and they don't so much care about what is once it's been discounted in the price. They care about what will be. September's rate cut, for what it's worth, has only become more of a certainty. Fed funds futures now have it at 95.4% chance. And there's not a fuzzy conversation about maybe it'll be a 50 basis point cut or some such thing. No. Speculation is very clearly aligned on one 25 basis point cut when the Fed convenes on the 17th. The likelihood that rates stay unchanged has dropped to less than 5%. The markets are convinced. Where things get hairier is when we look at the overall outlook. We can see the markets are very well anchored for this year. They've been stuck at 50 basis points, basically going back to May. We've seen a little bit of a wiggle higher. We've seen a little bit of a wiggle lower. But the baseline consensus here, the baseline range, still calls for 50 basis points. And the Fed is really running out of calendar to deliver them. There are but so many ways that the central bank can give you 50 basis points over the course of 3 meetings. We are very clearly priced for one cut in September. That leaves October and December. On one of those meetings, the Fed's going to give us a second cut, the markets would say, and the Fed would concur. Take a look at what we have here in June's summary of economic projections, and we can see the baseline rate is 4.4. That's the midpoint between the current edges of the range. We can see here's the current range, 4.25 to 4.5. The midpoint is 4.38, so 4.4. From 4.4 down to 3.9, that's 50 basis points in cuts. In fact, the Fed has called for this going all the way back to December of last year. So the markets and the Fed are generally in alignment on what is happening in 2025. The disparity is here. The markets have baked in 78 basis points. That's at minimum 3 rate cuts and a slight chance for a fourth, albeit a very small chance. Nevertheless, the markets are tilting in that direction. In fact, they're a hair from where they were at the dovish extreme back when everything collectively freaked out in early April around Liberation Day. The Fed is nowhere near there. Last time they gave us this update in June, they had 25 basis points in the outlook for next year. Now, let's say we get a hotter ISM number. Let's say that this gets the markets thinking, wait a minute, if the U.S. economy is reaccelerating, are we wrong to have been betting that the Fed is going to do all this easing? Sure, we're going to get the 50 basis points this year. We know that. We've been knowing that. That's not controversial. It's in the price. There's not much of a rally to be had in that conclusion. But what happens if all of the easing that was priced in for next year actually starts to look wrong, and the Fed starts looking right in its loud prognosticating of worries about inflation surpassing worries about the labor market, which they've acknowledged seems to be showing some signs of wear and tear, but which they have not elevated to be more important than inflation expectations. And so you look at the way the S&P 500 has performed here, and you can see that, okay, here was the beginning of the year. This is where the tariffs start to roll out and the markets go, oh my God, this is hitting business confidence. It's hitting consumer confidence. This is going to be a growth scare. And so stocks go down and the expectations for policy get more dovish. In April, you get the sense, oh, okay, so the administration is not firmly committed to cut off our nose to spite our face. They are, in fact, open to some degree of market discipline. When stocks and bonds and the dollar fall in tandem, the administration backs off and says, okay, 90-day pause on tariffs. Let's not go crazy. And so there is obviously a level of relief here in the markets. And in fact, that relief even lasts for a bit on policy expectations. But then it is clearly aborted. So once you get to about here, where the markets have basically shaved off all of the spook around the tariffs, you've also exhausted the level of improvement on policy expectations. And from basically here onward, stocks continue to sail higher as the outlook for policy gets more and more dovish. This certainly starts to explain why we are seeing as violent of a rally as we've seen when in fact the situation on tariffs, certainly beyond this point, hasn't much improved. The situation on growth hasn't much improved until very recently, and again, only in the survey data. We'll see how it goes from here. But certainly, the expansive stock of easing that's built up here, note, this is where the standstill begins for this year. This is where the markets go, okay, the economy is anchored around the Fed outlook this year. It's going to be 50 basis points. That's it. All of the action has been here since May. But if this is wrong, well, then perhaps this is wrong also. And so a positive ISM number that gets the markets thinking the Fed is going to leave them hanging on these rate cuts for next year when they update their outlook in 2 weeks' time, that may very well get stock markets heading in the wrong direction, and for an economy that's stronger, not weaker than expected. The dollar may, in fact, be starting to sniff this out. We can see here, for all the dovish progression that we've seen really over the past 2 months, July and August, the dollar has not fallen. It was very clearly falling as the outlook got more dovish in the first half of the year, and even extended as much into this last leg of baking out for next year. But from the beginning of July, the dollar has bottomed and has not set lower lows, even as the outlook has become more dovish than it was here. And so perhaps the dollar is already sniffing out the idea that if the U.S. is not going to purposely destroy the dollar-based financial order, we learned that here, and if it's not going to see the Fed deliver as many rate cuts as the markets want, then perhaps the dollar is oversold at this point. And this bottoming already hints that the Fed isn't going to meet the markets where they are, but that instead the markets are going to get pulled to meet the Fed where it is, to the detriment of stock markets. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Ragin and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the News and Insights portion of tastylive.com. I'm commenting on the platform formerly known as Twitter and on Blue Sky at Ilya Spivak. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. In the meantime, happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The beauty of thinkorswim was that we were different.
From the name to the front end technology
was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, Just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What's a macro risk right now that people aren't talking about enough?
Complacency is one. There's a lot of bullishness around. The street is very complacent. There's very little cash on the sidelines. And I think there's just, in general, the regulatory environment is too good. So people become overconfident.
I still think the geopolitical thing is very, very interesting. Frankly, I've had a tough time kind of parsing out the headlines in the news lately. I guess I would say like this ongoing discussion of just different conflicts that are going on and how it's pushing and pulling different asset classes. That's a super diplomatic answer. I'm not unaware of that. I think it's really important to kind of be mindful of your positions when there is so much talk and uncertainty going on and making sure that you're always controlling your size.
I mean, the dollar's depreciated over 10% against the euro and some other major currencies. I don't see how that doesn't start to play into some companies' earnings and their fiscal reports.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
All right, we're back. Tasty Crypto Show. I'm Dan Cecilia, and with me today is a very special guest, friend of the show, Brendan Teven, better known as Tevo, co-host and producer of the Crypto 101 podcast and crypto market commenter. Tevo, welcome to the show. Thanks for being here.
Dude, appreciate you having me. I know you came on the Crypto 101 podcast on YouTube. We had a great time. You gave the Crypt Nation listeners, as we call them, an excellent pick. It was, I believe, Zora. It was the coin around kind of content making. You gave it, and like 10 days later, that thing was rocketing, and our team was talking about it. And I was just like, hey, we had a special guest on the rundown who's giving out alpha for free over at the Crypto 101 podcast. So it's an honor for me to be here with you after a call like that.
I mean, listen, that's what I'm here for. I'm just here to give out alpha, and hopefully the people kind of take it or leave it. But that's kind of hopefully hopefully I can continue getting things right. But yeah, no, it was really I really enjoyed doing the podcast. We've we've had kind of done this Tasty Crypto One collab a couple times, and I said, hey, we got to get you on the show. So here we are. I guess getting into it, the last time we spoke, I think it was beginning of July or end of July, and we just had a big run up in ETH. Bitcoin hit an all-time high. I think a couple of things that I mentioned on that interview was that I would expect somewhat of a pullback or somewhat of a cautious optimism going into August, and here we are in September. Looks like we're trending sideways. So I guess I want to ask you, where are we in this cycle? We've seen this Bitcoin rotation to ETH and Sol. Do you think we still got legs here?
Yeah, I totally do. So basically, just to set the listeners straight, I am a commenter. I'm definitely one of the oddballs of crypto, if you will. Again, like you've heard, or for those who don't know, I kind of came from Barstool, so I have a lot more content experience. But also, my first job ever was at IBM. So I was introduced to Bitcoin back in 2016, 17 when I worked at IBM. Ended up at Barstool, kind of went the content route, but always had kind of my hands on crypto, degenning into things, making a little money, losing a little money, making some more money, and all. Everybody knows the ups and downs of your intro to crypto. And then ending up at Crypto 101 and producing the show, I basically get full exposure to our team. So I'm sorry to give a broader picture, Dan, but I wanted to set the stage of anything that I say, first of all, like yourself, not personal financial advice. I'm not a financial advisor by any means, but I kind of take in from all the awesome guests that we have, whether it's Matt Hogan from Bitwise or Jesse, Paul from Coinbase and Base. We've had on Canary Capital recently, Franklin Templeton recently. So I'm taking in all the experts of the space every week along with our own team. So it's Bryce, Paul, Brendan Veeman, who's our technical analysis guy. Bryce runs the hedge fund. He's our big picture. He's our leader. We've got Rohit. We've got an analyst. He was from the Wharton School of Business. We've got meme coin guys. So I'm always interacting with so many awesome people that literally live in the trenches day by day. And I kind of get all this information plus the interviews parsed through. And then, I co-host and I spit out my own opinion. So with that said, what I'm really buying right now, Dan, what I'm really feeling is I am buying into this 4-year cycle is kind of gone, right? Everybody's kind of waiting for this big bust. The 4-year cycle's over. We had the run of Bitcoin, altcoins. Some have run, some haven't, depending on who you are and where you've been. And then eventually it's all gonna go kaput, and we're gonna go into this crypto winter that FTX threw us into so many years ago now. I'm not buying that. I'm buying into this kind of. I think it was Matt Hogan was the first one. Matt Hogan at Bitwise was the first one to kind of say this on the pod that the 4-year cycle is done. Not that we can't have a bear market, not that we can't have drawdowns, but this whole 40 to 60, 70% correction in Bitcoin, I don't think that's going to happen anymore just because of all these ETFs, all this liquidity that's being unlocked. Ethereum's taking the narrative, which I know we're going to talk about, and moving everything on chain. So I'm super, call me a permable. But if I'm up there with Tom Lee at the end of my run as a permable, I'll be more than happy because that guy's been right for a decade now. So again, down for pullbacks, not believing in the 4-year cycle. I think we go up and to the right continuously over the next 5 to 10 years, and I'm excited to be along for the ride.
Yeah, for sure. No, I think it's a great perspective, and I've noticed the market structure change a lot too since my time in the space. And you mentioned Tom Lee, you mentioned Matt Hogan, great company to kind of be with and to follow. But to your point, last cycle or the last 2-3 cycles since this asset class has become a major asset class, we didn't have the ETFs, we didn't have the market structure support, we didn't have the institutions kind of giving access to retail to be able to buy this through vehicles like ETFs. So, I do think that 4-year cycle narrative probably it's going to be tested. And right now with the way the market's reacting, I think Bitcoin, it trades sideways. It might see some pullbacks, but we track it here at Tasty, the volatility of Bitcoin has consistently gone down over the last couple of years. So going from this massive, crazy, volatile, super thin liquid, nascent asset class to one that's now supported by, MicroStrategy, the ETFs, some of these other crypto treasury companies, along with access to major markets like, major exchanges and retail having access. I think it does support the asset long term. So to your point, maybe this 4-year cycle narrative is kind of dead. So we'll see. I do think that, given everything that's been happening over the last couple months and the support from, some of the regulatory bodies, probably is bullish long term for this. So, I do want to shift a little bit because I'm interested in your thoughts on this rotation to ETH and potentially SOL, right? Like we saw this rotation inflows into ETH in July. Obviously, you've covered Tom Lee a lot on your show. We've been seeing him in the media. I just want to hear your thoughts, like, because typically this is how the cycle works, right? Everybody gets rich in Bitcoin. Then they take that profit, they rotate it to ETH. Then they take that profit and they rotate it out to altcoins or NFTs or whatever the flavor is of this cycle. But we definitely are seeing that rotation in ETH. I think we saw 9.4 billion of flows into ETH ETFs since July 1st. That's massively outpaced what we saw into Bitcoin. So just want to hear your thoughts there. Is ETH really going to 60,000 like Tom Lee's saying, or just what do you think there?
Yeah, I'm not sure if I'm able to share my screen real quick. I actually have a great take. Can you see that? Can you see that tweet? I know it's a little small. Are you seeing that, Dan, or no?
Let's see if the guys can get it on the screen. If not, you can.
All right, we'll do verbal meme, verbal tweet. This is a verbal tweet on X. So it's actually my fearless leader, Bryce Paul. So Bryce tweeted out this on April 22nd. He said, "I stand by my statement that the Ethereum revenge hike will be glorious." So that's what we were talking about over at the Crypto 101 pod in late April. We all know late April, we had the tariffs in April and the market fell out of bed, crypto fell out of bed, and this Ethereum was dead was happening all over the timeline. I got to be honest, Dan, I started to have weak hands. My hands started to tremble. I went to my team and I'm like, listen, I've been a huge ETH holder since 2018-19, staked, haven't touched it. I watched Solana rip on all the meme coin stuff, right? There's that meme coin narrative in January. Solana's ripping, Ethereum's not following along. And then April, everything falls out. I'm like, hey, do I need to transition this? And my team, specifically Bryce, just said, hey, man, this revenge arc is going to be glorious. Don't, not financial advice by any means, but don't sell. LOL. And just, kind of where we are today. And again, I wouldn't say I did a full double down because that would have been a little much, but I bought the dip. And then Donna Sky, friend in the comments. I'm in on the YouTube, guys. I'm seeing the comments there. Appreciate you guys welcoming me to Tasty Live. Donna Sky said, could you comment on BMNR, Bitmine? And so we have covered Tom Lee. I'm a huge fan of his over the years over at Fundstrat. And as soon as they announced Bitmine, honestly, I missed it. That thing rocketed up. I think it was, don't quote me on it, but I think it was like a 10x in like a day or two. And then from that point on, I was like, I'm waiting for this thing to come back down. I'm waiting for this thing to dip. And then sure enough, I got in on some Bitmine on that. Okay, I see you guys are showing it on the screen. What a production crew. Amazing. Shout out to the crew there. Yeah, you can see kind of that dip from after that thing. I started building my position and, looking to add because I'm a believer kind of in Tom Lee, but also the kind of that Ethereum treasury play is taking the narrative from the Bitcoin treasury play, right? Michael Saylor's the king of it. Now everybody has one. Right now it feels like SharpLink and Bitmine are the two kind of front runners and more are coming. So you're getting that narrative. Now the narrative's back. Now ETH is the belle of the ball. It's the girl you want to take to prom. Just in April, it was dead and you wanted to get rid of it. And Solana was the belle of the ball. So there's always these narratives in crypto where, okay, you can have good fundamentals, you can have good technicals, and then once you get both of those with some narrative, that's when things rocket. And so again, I'm a believer in Bitcoin, I'm a believer in ETH, and I'm a believer in Solana. And that's kind of where I'm going to finish off this take, Dan, is eventually what's going to happen is, and I don't think we're quite there yet, but I think Ethereum still has some more legs into the end of the year, especially when you have people like Tom on national TV literally every day pumping the bags. But eventually what's going to happen is these Solana ETFs are going to get approved. The Solana treasury companies are going to start coming out of the woodwork, and we're going to get some, Solana's faster. Goldman Sachs is going to use Solana. JP Morgan's going to use Ethereum. Eventually all this stuff, these narratives are going to dance and do tangos with each other. And again, I think a tide lifts all boats, but eventually at some point the wind's going to change sails a little bit. And I think that's an interesting kind of narrative that you want to look out for. And that's why you listen to Tasty Crypto, Tasty Live. That's why you tune into the Crypto 101 podcast, because normally what I find, and credit to us, credit to you for picking winners, credit to us at Crypto 101. We've been talking about this Ethereum narrative for months, kind of leading up to it. And then to finally see it happen is awesome conviction wise.
Yeah, it definitely tests your conviction, but you've been a participant in the space. You're surrounded by super smart people over at Crypto 101. People see it. Like when you have that experience, it's kind of, your conviction gets tested, but it's what you do. You hold that conviction and you just know that rotation's coming, right? That narrative's going to hit. And, I felt the same way, right? Like I was there, last year listening to people say ETH is dead, all the commenters that, it's too expensive, it's slow, blah, blah, blah. But, if you actually are deep in the space and you're using it and you're listening to smart people and you're following great content like you guys produce over at Crypto 101, like what we do here, you know that that's not true, right? You know that to ignore some of that. So it's kind of that asymmetric reflexive bet, right? And, you mentioned it too. It's where that narrative meets the price action. You get that huge spike, those huge reflexive moves. That's what makes this asset class so fun to trade. And then you're looking for the next thing. So, you mentioned Solana, you touched on it a bit. But are there any symbols that stick out to you? I think one I follow is UPXI. Upexi is one that's a treasury company that's just announced they bought 200 million shares. I know that those ETFs are going to be approved soon. Another one was Sharps, STRS, I think. Sharps Technology, STSS. Are you is there anything you're following there on the Solana front, or anything that you're taking a look at?
Not quite yet. Nothing's on my personal radar. We did have Soul Strategies on the podcast. They're a really awesome, interesting group that again are all about Solana. Right now, just because you can get great APYs on Sol, I'm just kind of a holder and staking, but definitely looking out for that ticker symbol that you might want to jump on again to get that alpha, like a Bitmine, right? I'm sure there's some out there that you can get some early alpha on, but I think it's more, and again, in my opinion, you're kind of waiting to see if you can get some early alpha on who's going to partner with one of those tickers to really take it to the next level, right? Because Bitmine was just a Bitcoin mining company, 2 months ago, and now with a low market cap, and now this thing's trading. Did you see that stat, Dan? It was like it's a top 10 stock in volume, in the entire stock market right now. It's insane.
Yeah, that is crazy. And like you said, when you got Tom Lee on every single major financial media network just pumping it, it's like, I don't know, man, this is kind of what I live for though with crypto. It's fun.
I had it.
Yeah.
I was gonna say I had it when you had on. I had to apologize because I was like on this Tom Lee kick. We just have an official Tom Lee segment, like literally on the rundown. We literally just every day. It's like every episode. It's just a segment now.
Tom Lee Watch.
Yeah, it's Tom Lee Watch. You got to pull one quote. I mean, that guy's putting out so much content. It's unbelievable.
Yeah,
it's unbelievable.
Yeah. Well, I want to shift a bit to just hit on some major news because I think it does sort of play into what we've been talking about with some of this rotation. World Liberty Financial launched on Labor Day, Monday, ticker WLFI. Ton of attention. Mainstream media obviously picked up on this. It launched and went down, so it kind of pulled back a little bit. Let me bring up the chart here. But I guess
it's not a good looking chart.
Not
man.
a good looking chart. No, not at all. I was looking at, I was trying to do some research before this into kind of what it was, because I wasn't deeply following it. I just know it was something people were talking about. But apparently this token gives you governance over US dollar one, which is the stable coin that's launched by the, Trump family. I was reading some news here that this WLFI, World Liberty launch, netted the family $5 billion in paper profits. But just want to hear your take on this, just briefly, if you have any thoughts on this or if you guys covered this at all.
Yeah, I like that term, paper profits.
Yeah,
I've heard profits on paper. I don't think I've ever said that. Paper profits. I like that. That's smooth. No individual take on World Liberty Financial, to be quite honest. Obviously, high risk, could have been high reward, maybe the other way if you bought in. My theories on this, and it's kind of, I think on the next segment you have teed up with kind of the more legislation side of things, where things are going right now. My take on the World Liberty Fi is, if we're playing hockey, you don't want to skate to where the puck is. You want to skate to where the puck's going. And just legislation wise, and World Liberty Fi goes into this conversation again, because take your politic hat off. I'm not a politics guy. I'm a crypto guy. And so, we can kind of see where the puck's going. Again, the president of the United States, the most powerful country in the world, his family owns a crypto company. His family's involved in stable coins. His family's now involved in Polymarket. So where's the legislation going to go? It's going to go in favor of these assets to keep moving them forward. So, is World Liberty Fi coin a buy? Well, you got to dive into the tokenomics. You got to do your own research, and you got to, figure out what the upside to that specific project is. But as a whole in this space, I mean, I don't want to speak for you, Dan. I just think we couldn't be in a better area to keep making content, to keep educating, to keep investing, to keep doing our research, because kind of like I opened up with Bitcoin is I think it's up and to the right, because the runway is clear with legislation for the next 3 years.
Yeah, for sure. And you touched on it too. Like, I think, obviously the president and his family launching a token and a stable coin is supports the industry, but also you had the CFTC and SEC announce a statement to support U.S. exchanges to offer spot crypto products, including margin and leverage products, and futures, perps, and the like, derivatives. I think like this goes hand in hand with the fact that this administration's supportive. We have regulatory bodies on board. All of this, I think, bodes well for the industry. What we're doing, it supports kind of this narrative. So, I mean, I just generally think a lot of this coming out right now is, to your point, like maybe the 4-year cycle is over, right? Like we haven't seen this before in past cycles. So, I don't know if you saw that statement from the CFTC and SEC, but that was pretty big, I think.
Yeah, it's all about clearing the runways, whether it's kind of crypto IPOs, which I know you wanted to talk about in this segment as well. But the legislation's coming. I think there's going to be clear winners. You got to try to find them. I mean, in my opinion, and I'd love to hear yours. This is kind of something we've been looking into, is like, is this legislation, is there going to be a world where Binance might be the biggest winner if they get, obviously everybody kind of knows Binance is the largest and the biggest in the world, and then Binance US not as good. Is this going to open up the floodgates for somebody like Binance? Is World Liberty Fi going to get kind of the red carpet to be a huge winner? And then obviously with the crypto IPOs, the Krakens, the Geminis, the Weebles, like it's an absolute parade, whether it's TradFi or crypto, for legislation and just coming to the markets.
Yeah, exactly. And, I do want to touch on some of the IPOs that went live, these crypto IPOs. But, I think one of the things that's interesting to me about this legislation, this regulation coming for the industry is, does it boost stuff, companies like Binance, companies like OKX, Coinbase, Robinhood, or does it boost legacy companies like CME, SIBO, NYSE? Does it carve out, something for the incumbents? That's where I wonder, where that tension will hold is, does these regulatory bodies, especially in the States, is it giving a boost to incumbents, or is it allowing for more competition to come in from some of the major players like Binance? So that'll be something we'll have to pay attention to and look at. But I think specifically to this CFTC and SEC statement, it allows the new U.S. exchanges to offer these products, which is something that I don't think they really have done before, at least spot products. So, we'll take a look at that. It's definitely something I'm paying attention to, given, that's what we do every day. So, real quick, I did want to touch Gemini. So another exchange, Gemini, Winklevoss Brothers, they announced their IPO, the plans to IPO for the company. Galaxy, which is another crypto investment company, went live bullish earlier this month, earlier in August. Do you think some of these IPOs is this late cycle activity, you think, or is it just, hey, let's take advantage of it, it's open season?
So glad you asked, Dan. And this has been a take that I've had over at the Crypto 101 podcast for a while now, about 3 months, since Circle, to be quite honest. And with Circle and Rob, I think you got to throw Robinhood in there, not because it's an IPO, but because the absolute rocket of a move that it's had the last year to 2 years. I've been touting that everybody's been, and there have been altcoins there's been winners for sure. But this whole when's altcoin season? Altcoin season's not coming. Altcoins are dead. I'm like, guys, altcoin season's happening. It's just happening in the traditional finance market with these IPOs and with Robinhood and with Coinbase. It's like, again, there comes back to that regulatory kind of holdback for a lot of these massive funds where they can't necessarily go play with client money on a DEX and on Coinbase even, until this stuff gets regulated and there's time where these assets kind of get evaluated before they can really dive in. That's why you're seeing tons of flows into Bitcoin ETFs, ETH ETFs, because that's, what's approved, not necessarily, when these altcoin ETFs get approved, which they will, in my opinion, in the next year, but it's still going to take time for them to get evaluated so these giants can start piling money into them. They can't log on to Coinbase. They can't log on to Uniswap, and PancakeSwap and just dive in and start buying stuff. So you're waiting for altcoin season, and it's happening right before you in the IPO markets and with Robinhood. Again, in this industry, you always want to give a credit to me. I know I sent you that video. One of my best calls ever on air was Robinhood. We interviewed Johan Kurbot years ago when he was named the GM of crypto. And now he's giving, the speeches on the Robinhood Lives about what they're announcing. He came on our pod and pitched us this vision of Robinhood crypto. And I went on our podcast after, and I was just like, guys, is anybody counting crypto into Robinhood's price at $8.50 a share? And the answer was no. I put a call out there. I was like, hey, if crypto and Bitcoin take off, Robinhood's going sky high. And that was at, again, $8.50. And we rode it all the way to 100. So that was an absolute W. Took some wins, and as I told you before the show, I was running late because I'm closing on a house. So that's what you can do if you listen to Tasty Live and Crypto 101.
Yeah.
You can ride the fun. You can ride the fun wave with us. Not personal financial advice.
Yeah, you're gonna
join us and educate. You can educate.
You're gonna have to give credit to Vlad for that house you're closing on, huh? That's all Robinhood 100%.
My whole team makes fun of me because I'm the Robinhood guy, and I love crypto and I love decentralized finance. I'm all in. Trust me, I'm all in. But I do have a soft spot for Robinhood. When you make some calls, some call options, some leaps on Robinhood at $10 a share, and you ride that wave, it's one hell of a ride.
Yeah, no, that's an amazing feeling, amazing call as well. I mean, I think that's so interesting too, because I don't know if I mentioned this when you had me on the podcast, but one of my best calls was a similar sort of setup where I was Coinbase. Coinbase was at $30 in 2023 after the FTX blow up, and people were calling for the end of the industry, right? Crypto was going to be outlawed, and you just get those overreactions. And I'm sitting here looking at Coinbase, Brian Armstrong, the CEO, just all the investors, right? I'm like, no, this is like the next JP Morgan, I thought to myself. So I put a call out in the Tasty Crypto Discord server. I don't know if anyone in the chat was in there, but I was buying Coinbase $30, $40, $50 back in 2023. And, lo and behold, it goes up to 300. So those opportunities are out there. And I think you just got to be paying attention. But yeah, amazing call.
And you got to educate. Like,
Yeah.
again, this channel, Crypto 101, I keep saying it, but like, I only did that because we had them on the podcast, and I listened to him get interviewed by Bryce and Brendan. It was a great interview. And I was like, I don't think I've ever heard anybody talk about Robinhood like this. Like, this is wild. This is the future. This is what we believe in. So you really got to consume content. You got to educate. And if you're listening to this, you're in the right place.
Yeah, for sure. So we got a few minutes left. Any guests we have on, I do want to kind of get your price prediction. But before that, do you think we're getting an altcoin season? I just want to hear your take. Like, what would be the indication that altcoin season's coming?
I think kind of building off what the rant I went on with, IPOs and stuff. I think it's coming for the altcoin market. I know our team truly believes that. I also think there's opportunities kind of there where, like, you don't want to look past, not being in the moment, where there's really a ton of opportunities, or there has been. I think we're kind of in that cool off period now, and we're going to ramp up into Q4. So we had that, there's been tons of opportunities coming into the new year. Clearly with the tariff despair and the April bottom, there was tons of opportunities. I remember we had Syrup on for an interview on the podcast around April, and I heard their pitch for Syrup, and I was like, you know what, I like this. And went in on that, and that really rocketed up. So I like Syrup. I do think there will be a day where there's going to be those face ripping altcoins. I think it'll come. I don't know how to really tell you when and where that's going to be, because I think kind of to that narrative that Bitcoin led us for kind of the first half of the bull market and into the second half, where everybody, when's Ethereum coming? When are altcoins coming? I think you could have really big rallies in these blue chips, kind of to what we talked about at the beginning of the program with like Ethereum and Solana and Bitcoin, is like, because these ETFs are coming. So you're getting the ETFs, more liquidity. You're going to get these treasury companies for now Ethereum. I think there's going to be a ton for Solana, more liquidity. Of all of them for Bitcoin, more liquidity. And then once these ETFs are approved and there's time spent for these bigger, hedge funds and money managers to evaluate, again, their rules don't allow them to really jump into these things until there's 3-6 months, maybe sometimes 8 to 12 months of price action. So, you gotta take into effect that there's a wave of liquidity coming for these blue chips first, which again is altcoins. And then that will obviously funnel down into the rest of the ecosystem.
Yeah, for sure. I know we touched on it. I just, specific tickers or anything. We'll have to revisit this.
Okay, I got two. I came with two. Okay, I'm a Pengu believer.
Okay.
Pudgy Penguin. Shout out to Joe and Brian. They're our meme coin. We call them Momentum Moneymakers. They're our meme coin guys. They've been on Pudgy Penguins forever, the NFC, literally. And then when Pengu came out, they said, hey, this is something we're really interested in. And then again, you'll see like late March and then into April, you see it under 10 cents. And they put out alerts to their community that, this is again, not personal financial advice, just educational and fun. This is an absolute hammer of a buy. So yeah, I was collecting Pengu under 10 cents. Super happy about that. I love Luca Nets. I think that guy is a visionary for just content creation, community building. He's taken what a meme coin is just like a gambling casino, and he's turned it into a brand.
Right.
And he takes that stuff very, very personal. And I'm a huge fan. He's on my GOAT list to get an interview. So if anybody can get us a contact Luca Nets, we'd love to have him. So I'm a Pengu guy, and I do like Arrow. I think Aerodrome Finance, you're sticking around in the base, the base category, which is connected to Coinbase. That's kind of, the theory on that, right? You're sticking to the whales of the industry. And so, Aerodrome Finance has a tight connection to Base. Base is connected to Coinbase. Again, not a super deep analysis there, but I think you want to swim where the money is. And Coinbase clearly is a huge legendary whale in the space.
Yeah, no, those are both great calls, great tickers. I wrote about Aerodrome for any of our listeners that follow or subscribe to the Tasty Crypto newsletter. I wrote about Aerodrome as one of my picks back in April. It was at 40 cents. And, you know, I actually had some jokes with some of the guys on the research desk at the office, and they're just like, I don't even know where to buy this thing. You know, they're not crypto people, but I was trying to get them into it. And I was like, listen, man, this is, you know, anointed Coinbase stock. Or Coinbase ticker. So just kind of, you know, pay attention to it. And yeah, here it is at $1.17. So yeah, 2 tokens that I definitely,
great call. I think, dude, around that same time in, April, March, we had Aerodrome on the podcast, like same time you put that out. So again, I could go through, I gave the 2 examples. I like Sarah too. So like, you know, you just get the alpha from the educational process, reading Dan's write-ups, listening to the Crypto 101 podcast. Like, we're bringing on people that we're interested in. So again, it's not everybody we come on is probably something that's right for, you know, your capital, depending on how you do your, you know, investment research and want to make your own decisions. But, it's all about education. Like, all the stuff that I do is based around consuming content, meeting people, interviewing people, and talking to my team over at Crypto 101, which we have a hell of a team. And you know, you can't, I think we talked about this when me and you were on, you can't do this alone. Like, there's a lot of people in the trenches and they're, oh, I just do this alone. I don't talk to anybody. I don't believe that. Everybody has a community. Everybody needs a group. And again, you are, you know, as a trader, you are out there on your own, but like having that community and bouncing ideas off each other and consuming content together and sharing tweets, sharing podcasts, it's like, that's what makes this truly such a unique, fun space. And I think the more you do together and the more you have an awesome community, the more successful you're going to be.
Yeah, for sure. I couldn't agree more. And, you know, that's kind of how everybody learns, right? You just can't do this alone. You can't do this in a vacuum. You got to get out there. You got to talk with people in the space, listen to, you know, consume content, take your lumps, you know, take your licks, and just, you know, keep participating in the space, keep paying attention, keep trading. So, you know, I love that. One last thing, I got to do it because we do it with every guest. Can you give me your price predictions for Bitcoin, ETH, and Sol?
Yeah. So we do this at the end of the year.
Yep.
Each year. And so mine literally was 169. So last 2024 December was 169 for Bitcoin. So I'm still in the running. I'm going to stick with it. That would be pretty cool to be able to pull that clip and be like, yeah, I said this exactly a year ago. So I'm going for, 169 for Bitcoin. Can you pull up the Sol chart for me? I haven't looked at the Sol chart in a couple of days. For Ethereum, I think we make that run, right? We're going to make that pop. I think we're going to break that 5K number. I'm going to go with, we'll go 6,900 for ETH. You can tell there's a theme here.
We're
169. Nice for Bitcoin. 6,900 for ETH. And then, for Solana, let's see here. We're definitely going to, you think we're going to break that support?
I mean, I do. I just think Solana's the next narrative. I think that's the next narrative. I know we had that meme coin. Yeah.
No, sorry. Go ahead.
No,
ahead.
I just
coin phrase. Do you think that's going to come back? Do you think the meme coins come back by the end of the year and like kind of take the forefront, or you think this is a blue chip lead off?
You know, I think that meme coins kind of are the NFTs of this cycle. So I think that there's going to be a lot more with that creator, that like content coin, creator coin, that narrative I talked about with you last time with like Zora. I think Solana with all their launch pads, you'll get a couple, you know, really high attention influencers that'll launch a token, and that's kind of what'll take off. Right now, we've kind of, you know, with these meme coin launch pads, we've kind of had this like, I don't know, just anons or just funny memes or whatever, but we haven't had like the Kai Kinets or the Mr. Beast launch yet, and I think we'll see that next. So
I'm gonna go. All right, my Sol price we're gonna lock in. It's 333. Lock me in at 333.
Okay.
169 for Bitcoin, 6,900 for ETH, 333 for Solana.
Awesome. Okay. Well, hey, before I let you go, Tivo, can you let the audience know where can we follow you at? Where can we find you?
Yeah, if I haven't pronounced it enough, we're over at the Crypto 101 podcast. If you're on X, it's at Crypto 101 Pod. and then YouTube, Crypto 101 Podcast. Obviously Apple, Spotify, everything. We've had Dan on before. He was awesome. We'll have him back for sure. But check us out. We have a lot of variety, like I talked about with Bryce and Brendan with interviews. We do technical analysis with Brendan. We've got meme coin specific updates. We really have a buffet of content over there, from interviews to kind of rundowns like this, and tutorials. So check out the Crypto 101 Podcast, YouTube, Spotify, and X. Appreciate it.
Yeah, appreciate you. And, that's all we have for today. We'll see you guys back here on Monday. With that said, I'm Dan. Peace.